Okay, hey, thanks everyone. Thanks for joining us today. My name is Greg Lewis. I'm the marketing manager for Metastock, and today is day 4 of our Traders Conference mega event, Thriving in Uncertain Markets. I will be here today in the background, just sort of checking in on things, and the host today will be our very own Jeff Gibby. Hi, Jeff.
Hey,
How you doing?
I'm good. How are you doing?
Good. And this, with a few exceptions, will be the last time you'll see me today. Jeff,
Oh no,
take
no.
it away.
Thank you, Greg. And also, I'm going to help you need. I'm going to need you in the Google number generator all day long.
Oh, and also I forgot to mention things like, hey, if you're watching this on YouTube, like and subscribe. We encourage comments and discussion. Just please play nice. And oh, I forgot. That's why I don't start these usually, because I forget.
We should also say good morning, Kelly. He said hi.
Oh,
Good morning, Neil.
oh,
Neil,
I'm terrible at this.
You're doing great. Good morning, Marina.
I hate myself. I'm out of here.
As
Break a
you
leg,
come
Jeff.
in, say hi. Also, if you are watching on YouTube, like Greg said, like Greg said, make sure to hit like and subscribe. It helps a great deal. We appreciate it, and it just helps us kind of continue these conferences. We work hard to bring really all these good speakers in, and the more we can get the word out, the more we can keep doing it. And so we'll do our best to kind of make sure you get good speakers, good content. And the only thing we ask is like, subscribe, ask questions, tell us how you're doing. All that kind of good stuff.
You did that really well, Jeff. Almost like you've done it 860 times.
A few times, yeah. If you are watching on YouTube and you join us, there's going to be a pinned comment. If it's not pinned now, it will be soon. But there's a pinned comment at the top that'll allow you to register. Between every speaker, we're going to give away prizes like books and services and alert services and that kind of stuff. So if you'll register, you'll be on the list to join. And I'd recommend you register right away because I haven't pulled the list yet. And if you register right now, you can make sure you're on that list. Let's go ahead and kick everything off. Today's demonstration is designed to instruct you on using Metastock and the company's software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators of features within the software. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse this purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation should be construed as an investment advice or the solicitation to buy a security. So, very, very important. I hope my big goal here. I hope you learn stuff. I hope this is helpful for you, and I've learned a lot of things. I've been taking notes. I think it's been great. Before we get started, I want to say thank you to CMT Association. CMT Association is a nonprofit. They've been doing their nonprofit stuff for a number of years now. If you're interested in managing money, if you're interested in getting accredited, if you're interested in working for a bank or getting more assets under management under a bank, a CMT designation could be very, very helpful for that. In fact, it is. I'm going to talk about that on Saturday. You can find out more about the CMT Association at cmtassociation.org. I want to thank Stocks and Commodities Magazine, probably the defining magazine for technical analysis. They've been publishing magazines since 1982, and you can find out more about them at traders.com. And I appreciate their sponsorship, their support of the event over the years. Traders Forum, if you haven't yet, you should join the community. It's a free community. You can live chat with other traders. There's lots of technical analysis resources to learn about indicators and candlestick patterns, and you can talk with other traders. It's really a pretty cool community. We've been working on it, and I've been growing it for a little while now. We're up to about 1,000 members, and I really want to get to 1,000 because I think that'd be kind of cool. So join us. Everything I just mentioned is free on the Traders Forum. You can go to www.thetradersforum.com to join. Of course, we are Metastock. We're going to talk about Metastock all day. We've been talking about it all week. If you're interested in getting the extended trial, starting to do some of the scans that we show, the systems, all that kind of stuff, we have a very, very special offer. If you pay for a month, we'll give you the second and third month for free. It has been rated the #1 software program in its price category, and it's had that rating for 32 years. metastock.com/conf promo. If you have any questions about Metastock at all and you want to talk to us, we'll be happy to talk to you. 800-882-3040 or metastock.com/sales chat. Our first guest today is Dan Passarelli. Dan is a good friend of mine. I remember meeting Dan initially at a Traders Expo in Vegas, and he always has come in. He talks a little bit. What he's going to talk about today is a kind of a momentum resumption system, a way to kind of identify stocks that have a bit of a momentum run, a pause, and then a resumption of that run. I think it's super, super cool. I like the way he kind of describes it and talks about it, and he always does a good job. And we're going to go ahead and get him started right now. So Dan, let's go ahead and get you started. How are you doing today?
Hey, I'm doing great. How are you, Jeff? Good to see you.
I'm good. Yeah, I'm good. Let me go ahead and make you the presenter right now.
I'm glad you didn't mention us getting into all that trouble in Vegas.
Yeah, no, that needs to stay there.
Yeah.
Okay, I can see the right screen.
All right.
I can hear you. I'm just gonna get out of the way. I can see you too now. Well, almost. Yeah, there it is. Yeah, I can see you. I can see your screen. I can hear you. My job here is done. Your turn.
All right, here we go. So I'm good till the end of the hour here, yeah?
Yes, sir.
Oakley dokley. Hey friends, how are you feeling today? I hope you're feeling great. I'm Dan Passarelli, and I'm glad to be here with you. I'm going to talk about this key way that I've simplified my trading. It's the easiest, most straightforward system that I've ever created. And yeah, I'm super excited to share it. Now, by the way, before we get started, options are not for everyone. Read characteristics and risks of standardized options before trading. Get a copy of that by emailing investorservices@theocc.com. This is my promise to you, friends. I'm going to share with you how to easily spot high profit momentum trade opportunities using stocks, ETFs, options, futures, or Forex, so that your trading is completely simplified using this tested trading system that we've created for our traders that hundreds of our students have used to go from, that demoralized feeling that we've all felt at some time or another to that feeling of satisfaction and self-assurance that we all know is possible. And at the end of this presentation, I'm going to share how you can take the next step so that you can start getting immediate results. What do you say? Is that a fair deal? Hit that questions box for me and give me a yes. That'll let me know that you can hear me also. I would appreciate that. Hit that questions box and give me a big old yes. I think I get to see the questions box responses here. Yes, 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 yes. All right. David says yes. Sam says yes. Tom says yes. Nathan says yes. Ashley says yes. Good. Okay. And in order for you to get the most out of this, I ask that throughout this training and afterwards, do this. Hey, make this about you. Consider turning off your cell phone, close Facebook, all that business, and just get immersed in what I'm about to share. Let this become part of you. And definitely stay till the end. The most important things I'll talk about come later. And I'm going to hold all the questions until the end as well. So let's have some fun. This gives you an idea of who I am, what I do, some of the organizations I've worked with. I wrote 2 of the most popular books on option trading, worked with every major options broker and exchange literally in the world, as well as some of the great providers of option and trading in general tools like Metastock here, for example. I got my start down on the trading floor of the Chicago Board Options Exchange. I traded there for many, many years. These pictures actually span literally 30 years of being involved with the trading floor. I traded some huge stocks like Ford Motor Company, AT&T, Carnival Cruise Lines, and I traded some of the little ones that nobody's ever heard of. And I bring that up because the big secret here is that the little stocks that nobody's ever heard of, that's where you can make the really big money, when you know opportunities that no one else does. Okay, now I want to jump into this discovery I made. Does anyone know what this formula is right here? No? Good, because we're not going to talk about it again during this presentation. We don't need to, and here's why. I have an extensive background in trading, but the fact is I'm no mathematical genius. When I was a kid, you know, I got in trouble sometimes. I really did. I mean, I got good grades. I didn't really have to study, honestly, usually, but this is a story about a time that maybe I should have studied a little bit. In my senior year of high school, in my advanced math class, instead of paying attention to the lecture, I and a few kids in class, well, we would play poker all hour long. But the problem is with math, it builds. If you miss something this week, you're kind of lost next week and you're hopeless the week after that. So needless to say, I didn't learn a lot of advanced algebra concepts that year. I crammed, I passed, but I didn't learn that much. So fast forward to freshman year of college, and I had to take an algebra refresher. Oh my God, it was so embarrassing. You know, I always prided myself on being, somewhat smart, you know. Algebra is not that tough, so I had to take this refresher. Now, one thing you may not know about me is that I was the first Passarelli to graduate college, and I almost wasn't. Here's where the story gets a little interesting. So I'm kind of a competitive sort of guy, right? So sophomore year of college, my cousin, Michael Passarelli, who is a year younger than me, he was in my calculus class. Calculus, oh my gosh. I was very intimidated by calculus. I was afraid that I would struggle. And more importantly, I knew that if I failed that class and had to retake it, my cousin would be a credit ahead of me. And maybe, just maybe, he would end up graduating before me. There was absolutely no freaking chance that I was going to let that happen. So I put on my A game. I was ready to work as hard as I could to win, which I'm guessing there's some of you here who have that same mindset, right? But there was one other factor that came into play that was sort of a saving grace. I had a great teacher that year, one that I could relate to. He made it easy for me to learn, and I did. I ended up acing calculus and had the honor of being the first in my extended family to graduate college. So there. Now, like I said, I'm no mathematical genius by nature, but, you know, I put in the time. I spent a lot of time in option trading, 30 years, do whatever it takes to create great trading systems for myself and for you. So I studied the math on things like the relative strength index to see how they tick. And I realized there's some hidden keys within these equations that can predict when momentum will continue. So I want to share this hack with you. The red knockout is what I created. It is a momentum trading strategy that can lead to outsized profits. And it's a very simple 4-part chart pattern, easy to identify, and it even comes along with the profit targets that are easily set. Now, this works with options, stocks, ETFs, indexes, futures, even Forex. So let me start by listing the steps of the red knockout system, and then we'll zoom in and go through some examples. So this stuff here, like, now it's time to really focus. Write this down. Step 1 is the setup candles. That is 3 or more green update candles that make up what we call the green run. Step 2 is the red knockout candle itself, RKO. That is a red candle with a smaller body than the preceding 3 green candles. Step 3 is the trigger candle. That is a green candle that takes out the high of the red candle, ideally on higher volume. And step 4 is the confirmation candle, which opens above the high of the RKO. That is the one that signals trade entry. So now let's go over this in detail. We'll break down step by step, go through how it works. So step one, the setup candles, which we also call the green run. That is 3 or more consecutive green up day candles. Do you see that here anywhere? Yes, you do. I circled it for you. We got 1, 2, 3. These can have hollow bodies or solid bodies, depends on how you set it up. I think I even have an example later where I fill them in so that you can see how that looks. But this is the first setup. Now, this doesn't mean, hey, we're ready to go trade this. That 3 green candles in a row doesn't mean anything. We have to see if the rest of the pattern transpires. So if those 3 green run candles are followed by a red candle with a very small body, specifically, it's got to be smaller than the 3 candles before it. That is the red knockout. Now that indicates that, okay, this might be transpiring. Still, we don't have the pattern yet. We still need a couple more things. We need to see step 3, the trigger candle that takes out the high of the RKO. What do I mean by that? That means that at some point during the day, it trades above the high of the red candle. So like above the high of its wick right here. It could open lower, which it actually did here, but it went up higher during the day, which is why it's a green candle. A green candle just means it's up from its own open, not necessarily relative to yesterday, but up relative to its own open. And then finally, if we get the confirmation candle after that, which all it has to do is open above the high of the RKO, that confirms that we've got a real signal and that it makes sense to jump on this trade. Okay, so now you've seen what it looks like. Let's go through some examples. This is American Express AXP. If we have a red knockout setup, what is the first step that we look for? Who remembers? Setup candles, right? 3 or more green up day candles in a row. Do you see that on the chart anywhere? Right there is the first one, and right there is the second one. I'm on the left-hand side of the screen here. So we see they each closed higher than the previous day's close. That's because they're up days. And they're each green, which means they're up from their own open. So it's kind of 2 different things. This establishes that the trade is setting up. Okay, are you getting this? Good. Now, what is step 2? Do you remember what that is? Yes, indeed. That is the red knockout or the RKO candle. If a red knockout candle shows up on the chart, it's easy to identify, and it means the setup might be materializing. And again, the RKO is a small-bodied candle, never mind the wicks, but a small-bodied candle, smaller than the body of these 3 candles, that could open higher or lower. It doesn't matter, but the key is that it's down from the open, thus it's red, okay? Now, step 3 is the trigger candle. That is this little puppy right here. And it's shown by a yellow arrow. We call this the trigger candle, and it's sort of like when a marksman is all set to fire upon the target, gets his finger on the trigger ready to take the shot, right? But he doesn't take the shot yet until it's go time, right? Finally, step 4 is the confirmation candle right there. And that means that the trade setup is indeed confirmed. It's got a green arrow. Green means go, so fire away. Now, let's slow this down a little bit here for a second, okay? Let's go over the roles of each of the 4 components of this setup. So so we've got the screen run here. Why is this important? This is what sets up like a mini trend, okay? Again, like I said, 3 green update candles in a row doesn't mean necessarily anything. This is a mini trend that is kind of setting up, okay? But with all trends, if it's just like nothing but green candles for like a month, that doesn't, I mean, it's just going to burn itself out, right? I mean, we just had, for those of you who are watching this live, we just had, I think it was last Friday, the longest up run in the S&P 500 in like 10 years or something like that. Maybe it might have been 20 years. And all it was 9 up days. So like, if there's just nothing but green up day candles, it's just going to burn itself out. It can't sustain itself. So it needs a pullback. Okay. It needs a breather. It needs to give people who missed this run a chance to get in, right? But if it's sustainable, we need to see that trigger candle. We need to see, okay, game on, right? We need to see, okay, we had this mini run, we had a pullback to give people the chance to get in, and here they're getting in. There's follow through happening. So now we've got something kind of special, but we want some confidence in that. We want a confirmation. So that is this confirmation candle. It opens above the high of this one. I mean, 1, 2, 3, go. It is game on. So let's look at another example. We'll run through several on how they might play out in real life. This is Erie Indemnity. Never heard of that stock? I never did until I saw this trade. I mean, everybody probably missed this unless you were notified of it, right? So where's the RKO on this? We see it. There's the first in the green run. Update, update, update. And there is the 1, 2, 3, 4, 5, the 5th candle. Okay. Now, what's next? Well, obviously it's right there. It is the red knockout. Nice small little body. Gives just a little breather. People to get their bearings. Hey, I missed this pretty good run. What are the fundamentals here? Hey, you know what? I think I might jump on this. And they do. That's why we have updates, because people are jumping back on it. We're getting that revived momentum. And then, yeah, it's keeping going. We've got the confirmation that the setup is here. So boom. And if we follow our profit target rules, which I'm going to go over in a second, we would take it off up here, right here. Okay. So, you know, we just see a nice little run. We get in, we get some follow through, and, you know, we can't get in on the first candle because, like, you know, we'd have to have a crystal ball. We need to see the setup actually transpiring so that we can trade with confidence, right? Okay, how about here in Caterpillar? Is there an RKO? Look closely, look closely. Oh, there's the first one, and 1, 2, 3. There is the third one. Next comes our red knockout. Why is it called the red knockout? Because it's red down from the open. There's always a pullback, just a mini pullback, right? So we get the red candle here, and it gets knocked out of the pattern, right? And then we look for continuation, which is just what we get. We get this trigger candle, okay? And then we get the confirmation. And notice, like, it's a small bodied candle. Like, it looks just like a doji right here, no big deal, but it's opened above the high of the red. That's very, very important information. And boom, we get in. We prefer to get in on the entry because just anecdotally, I've seen those and they tend to work out a lot better when we do. And then, you know, that just takes us up to our profit target, which if we set it conservatively here, and I'll tell you more about how we set that in just a second. But if we were less conservative or maybe just sold half here. We could have done even better with this one. So, okay, this is APEI stock. If we look here, boom, we see the first one, we see the third one, and then we've got this mini pullback, and then we've got the trigger candle with the yellow arrow underneath it, then the confirmation candle, 1, 2, 3, go, and then, whoops, and then we got the profit target set right here. Okay, so you get it. This is super easy, right? Now, what I like about this example, though, is that this is only like an $11 stock. Folks who don't trade options, you can just buy the shares, right? And if it's an $11 stock, I mean, depending on the size of your account, if you have a very small account, I mean, that's easy to do, right? If you have a big account, you know, you might be doing, you know, 1,000, 2,000, 5,000 of these, whatever it is. So though the options might be liquid enough, if you want to use the leverage of options, go for it and buy a whole bunch of them. But I bring this up because you don't necessarily need to be an option trader for this. You trade stocks, options, whatever. The RKO indicator works on all time frames. It's very versatile. I mean, day traders can use it, swing traders, short-term traders, even long-term investors. Now, when I worked on improving the criteria for this, it reminded me of my old boss, Steve Fawcett. So you see two people here. One, of course, is who? Who's this guy? Sir Richard Branson. And the other is Steve Fawcett. And for those of you who don't know the late Steve Fawcett, he was not only a famous trader, but also a famous adventurer. He held a lot of world records. Here he's with Richard Branson because he was trying to fly around the world in a hot air balloon to be the first one. I forget if he did or not. I think he did. Now, I remember one day, Steve took all of his traders out to dinner, and there were about 45 of us, or 50 of us or so. And after dinner, you know, he did the ding, 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 and stood up to make a little talk, you know. And he asked us, he said, why do you trade? And it's not about the money or whatever. Like, he was talking about the real reason. Why do you trade? And as floor traders at the time, you know, standing all day long, your feet hurt, your back hurt, there are people yelling in your ear, they're getting a spit on you when they yell. Why do you trade? Why do you go through all that? What is your real reason? Is it to have more freedom to go out and play golf or frisbee golf or whatever it is you do? Or is it to secure your retirement? Or to put your kids or grandkids through college? And that stuck with me. So what is your reason? Think about it. What really is your reason for trading? So Steve was a great mentor. Anyway, without having him in my life coaching me, I could not have become the trader that I am today. But there's one thing Steve was known for saying: I'm still learning. When I first met Steve, he was a gazillionaire, super successful trader, but he was always tweaking his process, always learning, always moving forward, always making his trading better for himself and for his traders. And I'm thankful for that because I was one of his traders. He kept improving for himself and for us. And I took that lesson to heart. Now that's what I do for myself and for my traders. So I started the process of improving the exit points. Now here's how that works. What we're looking for our price target is, and this is very, very easy, is a repeat of the green run. So, you know, we get this move, and then we get the red knockout, and we get that move again. So we take the low of the first green setup candle and subtract that from the high of the last green setup candle. We get that range. So then, and here's where we can decide how conservative or aggressive we want to be. We multiply that range value by what we call a haircut. And the haircut is just a simple percentage. Maybe we take 80% of that green run. So then, we get out a little bit earlier, a little bit before it goes that whole length. Or we could be more aggressive, 100% of that, or maybe even 105% of that. Personally, I like to be a little bit more conservative, take profits earlier so that I lock in more winners. And we add that haircutted amount to the high of the RKO, and that sets our price target. It's very, very easy to do, simply calculated, little arithmetic, but I don't even like to do the arithmetic. I just let the computer do it for me. Now, this is very, very simple risk management. Immediately after buying the stock, here's what we do. We set a profit-taking order at that exit point that is calculated for us, really. It's just very easy, but that's how it works. And we use a stop loss if we're buying shares of the stock, or if we're buying calls, or, this actually even works for down markets. We just call it the green knockout, and it's the opposite. It's, red candle, red candle, red candle, small body green, red candle, red candle. So if we're buying stock or buying calls, or the opposite if it's bearish, we're going to use a stop. If we're using spreads, which with some higher price stocks that it's hard for some people to afford, buying a $30 option or something like that, $3,000 a pop. We might do a spread with some of these, and there instead we set an alert, and we set it OCO with profit-taking order if it's a stop. And it's just really super mechanical. Like, there's one of the best parts of this is there's not really decisions to be made. Because, like, how many times have you put on a trade and you're like, oh, geez, this is going against me. I don't know what to do. Geez, I wish it wasn't. I hope it goes up. I'm not sure what to do. Right? Some people, especially if you're newer to trader, you think that way. In the beginning, everybody did, right? If you're experienced, you appreciate the value of just simply a system. Everything is all planned out from the very beginning. You don't have to think later, geez, I got a profit. Should I take my profit here? I don't know what to do. You can't do that with trading, right? Anybody who's very experienced knows that. There must be a system. So I want you to leave here today with all the tools that you need to be massively successful with this, right? And I bet you do too. So would you like me to share what I've discovered that makes RKO trades even better? Yeah? Well, it's a couple things here. First of all, let me summarize. Here's what we got so far. A couple important takeaways. These can yield outside profits, right? It is a time-tested system. We've back-tested this. I've traded it myself, road tested it. It works. We got the setup candles. You already know how to do that. We've got the red knockout candle. You already know how to do that. The trigger candle, you know how that works. Confirmation candle, the profit target. I showed you the math for that. This works even better when any part of the pattern is going through one of the three major moving averages, which is the 200-day, the 50-day, or the 21-day, if we're looking at days. Very super simple. It also works better as long as RSI is not above the overbought range in the bullish ones. This is super easy. Everyone here now knows how to use this system. But there's a problem. There are 6,366 stocks to trade. If you're looking for this pattern, if it takes you, say, just 45 seconds to look at a stock and say, okay, where's the green? Is there a green run here? No, there is. Wait, is there? No, there's not. It takes you 45 seconds to spot one of these on the chart. For 6,366 stocks, it would take you 80 hours a day to go through all the opportunities out there. And that is only looking at one time frame. If you trade multiple time frames, you'd have to have more than 80. You'd have to have multiples of 80 hours in a day. It's not possible to find all of the opportunities that there are out there. You don't like missing opportunities, do you? In fact, I used to do this just on my own. And I would find some of these maybe once a month. I hate missing opportunities. I hate it. There's got to be a better way than spending 80 hours a day, because there's not 80 hours in a day. And I know you know that. You wouldn't be here if there wasn't a better way, though, would you? So are you ready for it? Look, the RKO system is here. I've created an easy way to do this. Over the past 5 years, I created both a scanner that would just easily identify RKO trades, as well as an indicator that displays the pattern right on the chart, along with the price target. I wanted to make this super simple that it's impossible to mess up. So you have a new opportunity right now to easily identify and scan for top momentum trades that you wouldn't be able to find without this screener. And with 6,399 stocks out there, it's almost impossible to just happen to come across one of these, right? But with this easy to use 3-step scanner, it makes it possible, because I've made the investment for you already. Because I know what it's like to struggle in the market. I've had the pleasure of working with and training thousands of traders. And I wanted to develop a scanner that made it really easy to find profitable trades that had great potential. And like I said, even for myself, before creating this system, I'd come across one of these setups like literally once every 6 months. I would miss so many opportunities. But finally, I've invested both the time, it took me months to develop this, and the money to now have this simple, easy to use scanner that you can harness in a snap. Imagine what your trading account would look like if you could just sit in front of your charting software, in front of your Metastack, and have a powerful trading tool that identified both the trade entry and exit points in just seconds. Imagine if you could just block out all the noise in the market and only focus on trades that have been identified for you. What would that mean to your trading business? Well, that's exactly what the RKO scanner does for you. I want you to start getting the results that you deserve. These are some examples of trades, both entries and exits, identified by the RKO scanner and displayed by the indicator. On the left are stock trades, on the right are option trades. So here in BBU, a stock trader could have bought the stock at $21.89 and 7 days later sold it for $23.93. That's a 9.3% profit in just 7 days trading the stock. On this one in GLD, trader could have bought it at $247.15 and sold it at up to $253.06. That's a 2.4% profit, but I mean, even on 100 shares, you know, that's about $6 a profit. I mean, $600 on 100 shares right there in just 4 days. In options, in MGM, a trader could have bought the October 37 calls at $1.59, sold them 7 days later at $3.30, locking in 105 or 107.5% profit. So to make that a little bit more tangible, if a trader bought, say, 5 of those calls, he or she would have made $855 profit on just that one trade. And that's just hitting the haircut profit target that was set. If the trader was more aggressive or held on to it longer, or even took half the profits of the initial profit target and left the rest to run until September 27th, in this case, a few days later, the profit could have been over 170.4%, or up to $1,355 on that same 5 lot. Look, even if you make, say, 3 of these trades a week, you cherry pick just the best ones. Even not the best ones, even if your results are just half as good as what I show here. How much impact could this have on your and your family's financial future? This is Nick, our head coach, John, who's a brilliant guy. He's an ex-Goldman Sachs guy. John and I shared this with Nick. When we were developing, we shared what we were thinking. Nick was actually the first human to ever see RKO, and he was actually very instrumental in helping us. He said, using scanners, in particular the RKO daily, helps me find trades when I'm busy or might not be fully locked in the market. I run the scanner, do the checks, decide to take the trade or move on. It only takes a few minutes, and it helps me find the best trades consistently. So I want to invite you to join us and start using the RKO system right away. So first thing, you're going to get the red knockout scanner so that every day you'll be able to have a list of all the RKO trades available in the market. This simple scanner searches the universe of 6,300 whatever stocks for this setup on any time frame, and it makes it possible to find the trades that you would never have access to without it. And for you to profit with the RKO system, I really need you to understand how it works. I mean, I showed you, it's really simple, but just to give you some even better tips, I created a video training course that shows you step by step exactly, how to install it on the platform, where, all that, how and why the RKO system works, how to set up the trades, the filters and cross scans to optimize the strategy, and, the targets and trade management. So what this means is today you're going to get the red knockout system. It's going to scan the market for it. It's going to show up on your charts, make it extremely easy, and you'll know exactly how to use it with the RKO Accelerator video course. Now I can put the tools in your hands. I can tell you how to use them. But for me, I know that I learn faster when someone shows me exactly how to do it. So the best thing that I can do for you is give you hands-on training. Every Friday for the next year, for 1 full year, you are going to attend our online live group coaching class and watch John Kamisic, the Goldman guy, set up RKO and other trades right there while you watch. So yeah, John's formerly with not only Goldman Sachs, but First Options Chicago, Lind Waldock. He traded for a hedge fund. He is the expert on the red knockout. In fact, he helped me develop it. He's just the kind of person that you want to listen to. But I wanted to make sure that you hit the ground running and get hands-on training so that you can start getting immediate results. How would it feel if you had top picks selected by John Kamisic every day? I mean, this is what Dennis Mikesel from East Peoria, Illinois said. He said, thanks, this is a great class, exactly what I was looking for. The class gave me a lot of insight into options and the Greeks, but I'm a fairly new trader, but I have been putting in the work to move my skills forward. So this means you're going to get the red knockout system right there on your Metastock or whatever. You're going to get the accelerator videos to get up and running right away, and you're going to get hands-on training every single Friday. That's a $5,247 valued package. Do you mind if I over deliver? What I really want for you is for you to make as much money trading RKO as possible, which I imagine you do too. So every day, we're going to rank the day's RKO trades and list them out and give you our top RKO picks so that you can see what we think are the best of the best. This is the RKO watch list, and it's a $1,297 value. Now, plus, John is going to add a bonus trade every day from his daily group coaching, Monday through Thursday classes, and he just puts them down here so that you can diversify your trading and get all the top trades of the day by simply just clicking one link to access this curated watch list. So you're going to get the red knockout system. You're going to get the accelerator videos. You're going to get the hands-on training every week. And you're going to get it all just on one single web page with the RKO watch list. Now, finally, this completes everything you need to make RKO simple to trade. With the RKO indicator, we just put the arrows right there on your chart, right? It shows you the trigger candle, the confirmation candle, the whole shebang. It even calculates the exit target, and you can adjust the haircut. This could not be easier to do. So you get the red knockout, the accelerator videos, you get that weekly group coaching, you get it all right there on the watch list. We tell you which ones are the best, and you're going to get the indicator right there on your Metastock charts. Plus, you're going to get updates every time we optimize the strategy to make it better. And you're going to get that for one full year. So this is a $7,541 value. RKO works on the following platforms: Metastock, Thinkorswim, NinjaTrader, TradeStation, TradingView, works on everything you need. And like I said before, you may have noticed the red knockout works when stocks are rising, right? Which the stock market doesn't always go up, right? Not all stocks always go up. In fact, some of them have some pretty good bearish moves. So that's why I created the green knockout to double your chances of success. So today you're going to get both the red knockout and the green knockout. So you have all the tools to trade in any market, up or down. So you get the red knockout, the accelerator videos, the group coaching, the watch list, the RKO indicator right on the chart, and all this stuff also for the green knockout. By now, you can see why this is a steal even at $10,041. If all this did for you was identify trades that had profit potentials, like I pointed out before, of 182.1% or 83.7%, I mean, it was 25.1%, right? The question you need to ask yourself is, would it be worth it for results like that? I think the answer is yes. But today, this is not $10,041 because you're here today in this summit. You made the investment of being here. You could have done a million other things, but you invested in yourself. And I want you to have the results that you deserve. So get started today for a one-time, small, easy investment of only $997 by going to metastock.com/RGKO. 1, 2, 3, go. That's Metastock, right? METASTOCK, metastock.com/RGKO, red, green, knockout, right? So that's two, yeah. So now this discount with all of those bonuses that I gave you. This is valid for the first 25 new members only. And we have to limit it because it's not fair to everybody else if we don't. So just to recap one more time, when you open your browser and go to metastock.com/RGKO and sign up today, you're going to get access to the red knockout scanner that's going to identify trades with the entry and exit points. On top of that, when you're one of the first 25, you're going to get all these bonuses and the discount. You're going to get instant access to the RKO Accelerator video course to get up and running right away. You're also going to get access to the weekly group coaching, where we will go live into the market together, and you can see exactly how me and my team use the scanner to generate profits in the market. You will also get access to the RKO watch list with our top picks of the best trades that John and I are looking to trade with the scanner. This way you have the best opportunity to generate profits from the scanner by following the exact trades that I'm looking to place. And further, when you open up your browser and go to metastock.com/RGKO, and when you lock in the RKO Traders package, you will also get access to my top watch list, which you will have access to this powerful indicator 24/7 across multiple markets to take full advantage of this really great and easy trading indicator. And also, like I mentioned before, as we run more tests, do more tweaks, as the RKO continues to evolve and we learn more and get even better, you get it to perform even better, you're going to get automatic updates for a full year to both the scanner and the RKO indicator. So lastly, when you join right now, you also get the green knockout. You'll have the confidence of knowing that you can trade this in any market, up or down. But you have to take action today and be one of the first 25 members right now. Now, I'm going to open this up to questions. I've got about 5 minutes. If you have a question about anything we've covered today, or if you have a question about the traders package, this really great discount that I'm giving just for Metastock members, in the questions box, and I think maybe I can have Jeff or somebody read them to me. Also, you can also call 800-882-3040. That's 800-882-3040. That is the Metastock hotline. You can talk to somebody there who can explain this to you even better. 800-882-3040. So I'm going to open this up to questions. While questions are coming in, let me just answer some frequently asked ones, if that's all right. Or do you have a bunch now, Jeff?
I got a couple right now.
Okay.
So,
let's do that first then.
Yeah, Reg wants to know, maybe the better question is, what is the win-loss ratio on the watch list? He also says he's got rain coming in his forecast.
He's got rain coming in his forecast.
Yeah.
If he's got rain coming, on the watch, email me, dan@markettaker.com. I'd have to go back. I don't have that information in front of me right now.
No worries.
Yeah.
Let's see. Does it work on just optionable stocks? Have you had experience using it with ETFs? We get a lot of customers that use Indian stocks, Australian stocks. Can you talk a little bit about what markets you recommend?
Yeah, that is the magic of this. It's a charting pattern. So anything that you can chart, you can trade this on. We have a lot of people who don't even use this for options at all. They just trade the stock or the ETF itself. If you're in the Indian market, that's fine. Chinese market, that's fine. It works on Forex, futures, say you're trading oil or corn, it works fine. It works on anything that you can get a chart on.
And another question that we get a lot of is can you use it on any time frame? And with this one, we primarily use it on daily for the purpose of the demo, but you can apply it to any time frame.
Yes, you can apply this to any time frame at all. We've had day traders use this. We've had long-term investors use this, just looking at weekly or monthly candles. So any time frame at all, yes.
We're caught up with questions over here. I'll let you know if more come in. Okay.
So just for the next couple of minutes here, some other questions that I get a lot is, well, what if I can't install it properly? Oh, geez, I'm technologically challenged. No problem. We send step-by-step instructions on how to use it. You can call the good folks at Metastock. They're so darn helpful. They answer my questions all the time, as Jeff knows. Is this time-consuming? No. I know you're busy. A lot of traders have a busy schedule. I've designed RKO so you can literally trade the system in like 60 seconds per trade, not finding one in 60 seconds. You find one by clicking a button, and within 1 second, you find all the ones of the day. You can trade in 60 seconds. It's so easy. You get your time back. What if I can't figure it out? You get a video tutorial plus hands-on training live every Friday morning. And that is the weekly group coaching. It's live every Friday from 9 to 10 Central, which is 10 to 11, excuse me, Eastern, or 7 to 8 Pacific time. And the class is recorded. If that's not convenient, or if you just want to review, no problem. Just go check out the recordings. Further, can you use PayPal? Or actually, here's a question that I get all the time. Sometimes people say, Dan, look, this is exactly what I was looking for. I have a small account and I'm sick of having a small account. I want to grow it into a bigger account. Is there a way I can finance this? That answer is yes. We have a deal with PayPal to offer you both PayPal as a payment option and PayPal credit. So you can lock in the red knockout today when you check out. Just use PayPal, choose PayPal credit. Just go to metastock.com/RGKO and click the PayPal button. Or like I said, call 800-882-3040. You can even chat with one of the Metastock people. Just go to metastock.com/sales chat. And, if you don't like to talk on the phone, you can, you can just type with one of these folks.
All right, Obed. Oh, we do have one question.
Okay.
Morning. Obed wants to know, do you use volume confirmation or are you primarily looking at price?
Volume confirmation is one of the things that I go over in the accelerator videos that you can further optimize what shows up on the chart. So like the accelerator videos alone are worth the price of entry right here on this, because it just shows you, just how to make this work even better than the ways that I've described it. So yeah, adding volume to it, especially on the one candle, really helps a lot.
Cool. I'd also add, like, if there are instruments or charts you want to see, our sales guys are happy to answer any questions. They can email you charts. They can kind of email you the idea of what things are. They're very good over there. They do a good job.
Yes, I agree.
That's all the questions that we have. So it's metastock.com/RGKO. You can call 800-882-3040 or metastock.com/sales chat. If you don't mind, Dan, there's a few things that I just want to highlight in Metastock. I've got some screenshots. It'll take me a minute or two, but I just wanted to kind of go in and talk about how cool this looks in Metastock. Is that all right with you?
Oh yeah, that's great. Yeah.
Okay. Before I kind of take over, though, I do want to say thank you for being here and kicking us off this morning. It's always great to have you. This thing is great. People have really liked it. So let me go ahead and make me the presenter. I'm going to show my screen. And Dan, thank you very much.
Thanks, Jeff. See you, folks.
All right. Obed says, thanks for the presentation. Valuable. So you just got a thumbs up from Obed and a thumbs up from me.
Woohoo.
Thanks, Dan. All right. So as you can see here, we do have the expert advisor commentary, and what it's going to do is it's going to give you kind of the information right here. It's automatically going to identify the triggers. You can see when you're starting to have the run because it's going to kind of identify those candles. This is a screenshot I took of the, hello, Marina, I can see you. All right. Of the expert advisor at that particular time, you can see there's a setup. You can see where your profit target should be, where your stop loss is. All of that kind of stuff is actually outlined and available for you. It includes the expert advisor. It includes the commentary, the templates, all that stuff that you need to get ready. It also includes the scans. So as we were talking about, if you want to use this in any market, really, there's over 300 exchanges that are included. You can use it. You can scan it. I've talked about how I love scanning and just finding the opportunities, ignoring the rest of them. So all of that stuff's available. He went through the offer really well. Metastock.com/RGKO, metastock.com/sales chat, or 800-882-3040. Before we move on to Marina, I want to say thank you to CMT Association. CMTassociation.org has been a sponsor of the Metastock and the conferences that we do for several years now. I want to say 5, but that might be a little high. CMT Association, well, also might be a little low. CMTassociation.org. If you're looking to get accreditation, if you want the CMT designation, it's a great way to do it. You can also call them at 646-652-3300. Marina, since I can already see you, I wonder if you'll give me a hand.
Sure. Hi.
All right. I have in my hot little hands right here a book. It's by Dr. Adrian Manz. This is my last copy that I'm willing to give away. After this is the last one. So what we have, just if you're watching on YouTube, in order to qualify for the prize, what you want to do is you want to go to metastock.com, and Greg is going to put the link in there. It might also be pinned to the top of the thing. You go to metastock.com, you can click on the banner at the top and register for today's conference. If you do that, you'll be registered to win prizes. Unfortunately, this is the last book of this, but I've got more books. We got prizes. We've got all kinds of services we're giving away for the rest of the week. So get on the list, and that way maybe you can win. Marina, what I need from you, I've got my handy registration list here. And what I need from you is a number between 1 and 6,095. And I need it to be random.
Between 6,095 and 1.
Actually 2, because there's a header row. So
Okay.
between 2 and 6,000.
All right. Do you want me to say it?
Yeah.
Okay. 5997. 5,997.
Okay. Let's see, where did that go? Okay. This is Ampico Z with a Gmail account, a rather funny address in the USA. So next week, just if you win a prize, next week I'm going to send you an email that says, hey, you won a prize and I need your address. If you get that email, respond or I'll get this book next time. So, but yeah, it is legitimate. If you get an email from me next week saying, hey, you won a prize, I'll need to confirm your address before I mail out the book. So from that perspective, our next guest, Marina. Marina, how are you doing this morning?
I'm doing great. Well, for me, it's afternoon. It's 5.
Yeah, you're in Spain, right?
Yeah.
That sounds nice. Marina started as a fitness instructor. Did you do spin?
I did. I was one of the very first spin instructors.
Yeah, you said that.
My age.
She started trading. She travels the world. She lives a life of the most interesting women in the world. So.
Oh, thank you. Like to hear that.
Kick it over to you now. Let me go ahead and send you the presentation here. Okay. And it should have just popped up with a note saying, do you want to share your screen?
Oh, yeah. Hang on just a sec.
Other things that Marina does, well, I can see your screen already. She writes a travel blog.
I do as well.
So she's diversified. Marina, I can see your screen. You look great. It looks like you're on a balcony. I can hear you well. I'm going to get out of the way. Your turn.
Well, thank you. It was really fun to see you again. I love being here. Thank you. Hi, everybody. I'm on my balcony. It's in Spain. I live in Barcelona, and the weather is so phenomenal here. I don't know if anybody else is in Spain. I would actually love to know who else is in Spain here. Look, I'm going to show you what my view is. That is my home. I get to look at that every day. That's my office. I don't know if you guys saw that, the Mediterranean Sea. It's absolutely phenomenal. And yes, so one quick question, Jeff. I don't see a way for me to see questions. Is there a possibility?
Yeah, let me rank you an organizer and you'll be able to see them all.
Okay, cool. And I love questions, guys. So the whole point on you learning something and teaching you, but my goal really is to answer your questions, because the reality is we are all here to learn something, right? Obviously you wouldn't be here otherwise. So I want to make sure that whatever I am teaching you, and in general, that I could be as much help to you as possible. So please ask me any questions that you guys have. Now, are you guys seeing the question box? Because I would love for you to be putting stuff inside the question box. The more interactive you are, the more engaged you are, the more you will able to learn and take away from today as well. So please definitely go in here and write whatever questions you guys have. So I'm going to take off my video for now because I know that it could be a little bit distracting watching me and then watching the slides. So let me just figure out, I think, there you go. Okay, now you guys should be able to see my slides. And I want to say hello, I am Marina, the trader chick. And this is me. You've already seen me as well. And today I have a really interesting presentation for you. It might feel a little bit unorthodox, and that is the cool thing about learning. We want to be able to look at stuff from a different point of view. We want to shift the perception, right? The perspective, so that we could start to do things better. And one thing that I noticed was something that flipped inside of me when I went to see Cirque du Soleil. I don't know how many guys whoever is in the presentation live right now and on YouTube, if you guys have been to Cirque du Soleil and if you like to Cirque du Soleil. Me and my son absolutely love Cirque du Soleil. It's been a tradition that me and my youngest son have been doing for years. We first lived in Guatemala. We've been only living in Spain for a little bit over 2 years, but in Guatemala we saw several, and then we moved here and also Cirque du Soleil. I don't know if any of you guys have ever seen a Cirque du Soleil show. Let me know in the question box. Because it is not just the fact that you're going to see a show, but it is literally an experience, right? I see that, Jeff, you've been to one. Yeah, they're pretty amazing. They've been around since, I don't know, like several decades. And they just keep on getting better and better. So I am a huge Cirque du Soleil fan. And the last time I've been to Cirque du Soleil is last year. And again, I was just as much enthused because Cirque du Soleil is unique. In what way is it unique? For instance, one thing we look at the performers, right? And we are thinking to ourselves, wow, these people are extraordinary. They are completely like outrageous. Like there's no way that I could ever do anything like that, right? Whenever I look at Cirque du Soleil performers, that's what I think. And then one time, I don't even know how it happened, but I realized that they're actually just ordinary people that are doing extraordinary things, right? That's literally what it comes down to, is that they're quite ordinary, but they have chosen to do extraordinary things. And what's quite amazing about this is that they're not born with any of this talent. They might have a calling to do something that looks different than what we're doing, but they're literally ordinary people, right? And it's funny because a lot of times we look at successful day traders and we think to ourselves, oh my God, I could never do this. This is so not me. But in reality, it's the same thing for Cirque du Soleil performers. Successful traders and Cirque du Soleil performers have quite a lot in common. And this is what I want to cover today, because we tend to look at stuff that we aren't able to do as if though it's extraordinary. So what does an extraordinary person actually need to have to get to where they are? And it's quite simple to break it down. So one thing that I started to study about these Cirque du Soleil performers is what it takes to become a Cirque du Soleil performer. First and foremost, it's the commitment, right? We know just going to one of their shows right off the bat, how much mastery and training is put into what we are seeing. They are committed to what they are doing, right? It's just a known thing. Like, if you can't wake up and be like, yeah, I'm going to go and walk a high wire and do some flips and then take a bicycle and do a bike act on a high wire 60 feet off the air, right? 60 feet off the ground, right? No, so we know that they are committed, that they have put in years and years of training and years to perfect that mastery, that it looks easy when we watch them. Their intense focus They are completely in the moment. If they take out their cell phone while they're on a hot wire and check out their Facebook, you think they're going to be able to stay on that hot wire? No, they're going to crash, right? So they have this absolute intense focus in that moment of what they are doing. Correct? Discipline. They show up day in and day out. They show up, they train, they practice. Even though they have setbacks, they keep on showing up. That's what discipline is. Discipline is not something we're born with. It is something that you intentionally want to put in. Then they have total trust, especially the ones that are working with partners or equipment. Could you imagine if they don't know who their partner is and then they're partnered up to do this high wire act that they have to jump up in the air and be caught, and they've never met their partner before? They're not going to have that kind of trust, right? They need to build that trust. The same thing with their equipment, right? They need to know that their bike is going to be there and fully work for them when they're doing their routine, right? So it takes time. They have to adjust. They have to understand. They have to work with what it is that they are working with before they could actually do this, correct? Confidence. They have total confidence. There is no doubt in their mind, because if there is an inkling of doubt, they lose, right? They completely could fall. They could, I mean, anything. And that's what they don't, that's why they work so hard, is to avoid any doubt. There is just full understanding and confidence in what they are doing. Okay. They, right here, this image, these three people have been working together. They trust each other. They understand what is going on. This is the training. So why am I showing this to you? And how does this have anything to do with day trading? Because to me, with day trading, people wake up and say, you know what, I want to day trade. I'm going to be a day trader. And unfortunately, there is zero barrier to entry when it comes to day trading, right? There's zero entry, a zero barrier to entry. So anybody with a little bit or a lot of money could simply start throwing, or I say donating, their money to the markets, right? But you would understand that if you want to be a Cirque du Soleil performer, that you would have to put in all of the elements that I just did. So the same thing goes for day traders. You need to have the discipline. You need to have the commitment. You need to have the trust. You need to understand what is going on. Without that, there is no strategy. There is literally a gamble. And that's why 95%, I would think at this point, 98% of the people who want to be traders are failing. Not because that it's a thing that people fail at, it's because they have not put in any of those elements, any of that discipline, any of that time that it takes to become the day trader that they want to be. It's just easy to show you this through a Cirque du Soleil performers, because then we actually understand and conceptualize that. But when it comes to day trading, we think that we could all become millionaires, right? And maybe buy the latest alerts or the latest newsletter that's going to tell you which is the best thing to buy and trade in, or to buy, you know, I get so many people, oh, I just want, you know, a bot, or I need like an AI program. None of that works, because none of that has been put in the time to even understand. The other thing that amazes me is, to become a day trader, you need to invest in good software. Metastock platform, it's a brilliant software, but you still need to put in the time to learn it and understand how to use it, right? You can't just put your money in and think that you understand how to use it without ever actually practicing it, right? Chances are you're going to stumble, and that's okay, but you can't do it in the live market. That's the beauty of it. You can practice everything in paper money, but you need to practice. You need to trust that equipment, right? One thing about Metastock, I have to admit, is that they have this white glove service that they can walk you through absolutely everything and make sure that you really, really understand it. I have now utilized this several times, but it amazes me the amount of people that don't even want to put in that time to just understand and trust the equipment that is going to be able to help them make that money. So again, this is something that you need to do. And once you do that, the hurdle is passed, and you could then truly start to understand the market. Okay. So this is literally why only 5% of the traders are successful, is because they are willing to put in that work that you need to become as successful as a Cirque du Soleil people. That is what makes it all the same, right? So what can we do differently other than just trusting the equipment, discipline, putting in the time, the training? What it really takes is, and to take you to that next level, is also truly having a strategy, right? So today, that's what I want to talk to you guys about. I'm going to be focusing on trends. Trends are like tight ropes, right? You need to understand where it is. You need to fully grasp it to be able to manage it. And that is what we're going to be working on today. Trends. I want to talk to you about how to spot the good trends, understanding how you are able to utilize it for high probability trade setups. So before we move forward, I have this entire presentation for you guys 100% for free, so that you could work along with it. Plus, Jeff is going to be posting the replay on YouTube. So if this goes too fast, because I understand we only have about an hour together, but you could use this presentation that I am giving you right here. So I want you guys to go to makingofaDaytrader.com. Go to makingofaDaytrader.com. You'll be able to get it right away for free, and then we can follow along. All right, so before we jump into the real juicy stuff, I want to give you a really quick, fun intro, because a lot of times we forget who we are when we are sitting in front of our charts. And I like to do that all the time to remind people that we are people. We bring ourselves to our charts, and what we're really bringing is our filter. So, right, of how we are seeing the charts, how we are processing what is happening in the live market. So, as I mentioned before, I am Marina, the Trader Chick, and I am an expat living right now in Barcelona, Spain. I've actually been an expat now for over 22 years. Before moving to Barcelona 2 years ago, my family and I lived first in Costa Rica, and then we lived in Antigua, Guatemala for 14 years in total. Oops, hang on a second here. And also, as Jeff mentioned before I became a day trader, I was a fitness instructor. And I still do run a travel site, because travel for me and my family is not a luxury. It's a necessity. We literally travel about 3 to 4 months out of the year. And actually, July, we're going to be spending in France, and all of August, me and my youngest son are going to Japan. And as much as we travel, and as much as I would love to be that kind of traveler that doesn't have to work, I still do need to work. And how do I do that? With trading. That's the beauty of day trading, is that you are able to do it from anywhere in the world. There is zero excuse anymore. So like I said, for us, travel is it's a necessity. And the coolest thing about trading is that you could have your laptop and open it up and just put in even an hour a day and be able to do this. The other thing about me is that I am trilingual. Now, the reason I'm bringing up trilingual, actually, I'm learning Japanese right now. Not that I'll be, quadrilingual, but I'm actually going through the process of learning a new language right now as well. So the thing is about learning new languages is it's a process. Again, you have to commit, you have to practice, you have to train. It's that discipline. And one thing I realized, I've been now trading for almost 13 years. One thing I did realize, and I struggled for the first 2-3 years, really struggled with understanding the charts and what the market was doing. So when I flipped it and looked at listening to the market like I was learning a new language, everything changed for me. So I'm originally from the Soviet Union. I moved to the United States as a refugee, but I was very small. Russian is my first language, but English is my main language. However, when I learned English, it wasn't learning a new language. It was just learning how to speak, because I was 6 years old. So I didn't technically learn English. However, I did learn Spanish in my later years. I was in my late 20s when I learned Spanish. And now I'm in my 50s learning Japanese. And it's really important to commit in that way. And once I applied the same thing that I did for learning Spanish to learning how to read the markets, everything changed for me. And I used to do a lot of in-person presentations for trading, and I used to talk about this, and I've had so many people come to me and they're like, you know what? I am going to apply this and use it. And then they used to write me several months later and be like, now that I'm looking at it as learning a new language, everything has changed for me, and I'm actually becoming a professional trader. I'm actually doing well. So that is what I want to give you guys today. I'm going to be teaching you the language of the market. Very basic and enough for you to get really started. And like I mentioned before, day trading, the coolest thing of all, you can do it from anywhere in the world. All right, guys, remember, go to makingofadaytrader.com, download the presentation, and follow along. So every performer in Cirque du Soleil begins with the basics. That is how we grow our trust, our confidence, and that is how you master what you're doing. You start by mastering the basics, and that is exactly what we are going to do today with trading. The basics. You can't learn a new language without the basics. The same thing comes to the market. A lot of times we overlook the basics and want to hop in and end up losing all this money because we just did not begin with the basics. So I don't know if you guys have ever seen this aerial ribbon shows. They're phenomenal, but let me tell you, they start with the basics. They start with their feet on the ground, learning how to wrap the ribbons around their shoulders. Now we are going to be talking about the basics of day trading, and that is going to be like learning the trends. 4 basic strategies that I can guarantee once you fully understand this will completely elevate your trading. I know this for a fact. So let's jump in like a tight rope walker. We're going to start with one small step at a time so that we could end up as well. Ready to jump on? And let's dominate the market. So the very first things that we need to learn, market movement and the breakdown of the trend. So we technically and logistically understand that there are 3 types of trends, correct? We know that there is an upward trend, we know there is a downward trend, but the most important type of trend is the sideways trend. And why is it the most important trend? Because I can guarantee you, if you go and look at your trading backlogs, your journaling, wherever you are back testing and keeping track of your trades, the majority of your money that you end up losing are going to be in the sideways market. I can guarantee this. Why? Because there is zero momentum, and we start to think that we could beat the market or predict what the market is doing during those moments, when in reality we can't. Why? Because the market is simply flat, and the market isn't telling us where we are going to go. So I am going to show you guys how you're able to recognize these areas to avoid them, so that you can actually get in where it is confirmed that it is either breaking out of that trend or starting a new trend. Okay, so before we jump into that, let's just begin with the most basic stuff, understanding the regular trends. So what is an upward trend? It is literally where each pivot is higher than the one before it, correct? So that's an upward trend. This is where we are entering a long position. This is where we are buying. Okay, so what does that mean, entering a long position or buying? It means literally you are entering at a low price point, exiting at a higher price point. Pretty simple, guys, right? But that is what you do with an upward trend. Downward trend is the exact opposite. Every time the market heads down further and further, each pivot, that's a downward trend. This is when we are entering a short, we are shorting the market, or we are selling. You probably hear either one, but that's what it means. So what exactly does it mean? It literally means where you are entering at a higher price point, exiting at a lower price point. Okay, super simple, guys. Enter high, exit low, boom. You're in and out, and you're taking the profit in between. So now let's dive into the sideways market. I personally call it the trader's worst enemy. And we want to learn how to spot these areas and how to avoid them. What are they called? What is the sideways market called? It has so many different names. It's the consolidation area. It's the transition area. It's the chop. It's the exhaustion pattern. It's the slowdown. It's the indecision. I don't care what you call it, but the channeling market, what it is, it's a flat, no momentum market. It is a place where the market does not know what it's about to do. And we, as the individual retail trader, we cannot predict it. Okay, it's really important for you guys to understand that, because it is absolutely astounding to me the amount of people that think that they could beat the market or predict what the market is going to do in these moments, and we can't. We have absolutely no idea what the market is going to do. But the most important thing that we can do during that moment is be able to understand that it is happening and then sit out entirely. It is absolutely crucial. And yes, Reg, it is literally the danger zone. It is the danger zone. So why is this an area, one of the biggest places for the losses? So here's the reality of it. First and foremost, day trading is an emotional activity, right? It's a very emotional activity. So what does that mean? It means that we create stories and apply these stories to the market, when in reality, we have to be very disconnected from those emotional stories. So for instance, somebody's looking at it, a trader is looking at this particular market that is happening, and they're starting to recognize that there is just a flat area. They start to tell themselves two things. One, they say to themselves, oh, the market is flat. It's been going up all day. It's going to continue. I am going to buy. I'm going to go long. The other kind of trader, who is a contrarian trader, might be looking at this market and being like, you know what? The market's been going up all day. It's got to correct. I'm going to short the market. And they're going to try and short the market. Basically, they're lying to themselves, right? They're trying to predict what the market is going to do. But the reality is the market isn't doing anything. So you know what you have to do in this particular moment? Nothing. You need to sit out, sit on your hands, however you want to call it, but you need to do nothing. And that, believe it or not, is a very powerful activity to do, because we always tend to want to do something. Right? We think that we have to be in the market, we have to be out of the market. I mean, it's just never ending, right? So that is exactly what we need to understand. When we see this type of a market, we need to stop with the emotional stories and just recognize that there's nothing we can do right now, and just simply sit out entirely. All right. And these happen all the time. It could be on a smaller scale. It could be on a larger scale. It could be relatively often. You never know, but it doesn't matter. We don't care why it's doing that, because it's still going to do it regardless of what story we apply to it, right? But what we do need to understand is that it's happening, and that we have to sit out and wait until it truly shows us when it's going to either break out or transition into a new trend. Now, how do we recognize these areas, and how do we respect these areas? Because the thing is, the market respects these areas, and we as individual traders, retail traders, need to respect them just the same. How do we do that? Through support and resistance areas. Okay, so what exactly is a support area? Support area is the floor of the market. The market is going down, and all of a sudden starts to hit the floor 3 or 4 more times. That shows us that there is a support being built there. It is literally the floor. And when that happens, when it's a strong area where the market's constantly hitting over and over again, guess what we have to do? We have to sit out. We have to wait until it either breaks out or it bounces off and starts a new one all together. All right, so we have to recognize where these support areas are. And they could truly start to frame the channeling market. What is a resistance area? Resistance area is the ceiling. So if the market is going up, and it could sometimes be a very strong market in the upward trend, but all of a sudden, boom, it hits it once, it hits it twice, it hits it 3 times. Guess what? It is now telling us this is a strong area. It's a resistance area, and we need to understand, respect, and get out. Get out, because we don't know where it's going. And sometimes the market could go really strong into that resistance area, thinking you're going to think that it's going to break through, but boom, it's like, you know, those cars, those crash test dummy cars that we see them testing how safe it is, and they go super fast at like 100 miles an hour and boom, into a brick wall. That's how strong these areas can be. So we don't want to be in the side of that crash test dummy, right? We want to have the strength by not being in it at all. Now, a lot of times people say to me, oh, okay, well, I'm glad that, you know, this happens, this and that, but how do I even know when it's actually happening? Because a lot of times we can lose money in the beginning of this area, and that's okay, right? Because we understand that you're going to lose money in the beginning, but we also are able to spot those areas before they become very defined, and we only at most lose once, and the goal is to even avoid that loss altogether. So how do we avoid these areas? Through reversal areas, reversal patterns, and divergence. Divergence to me is my holy grail. And reversal areas, I call them the trader's map to shift in directions and trend. What are reversal areas? They are the double tops, triple tops, double bottoms, triple bottoms, head and shoulders. When you understand these areas, everything can change. So here is a perfect example of a double bottom, right? The market's going down, and all of a sudden it's this perfect double bottom. But if you look down at my red dots, so those red dots are my MACDs. I personally only use 2 indicators. I use the MACDs, which to me are my absolute favorite, and I use 3 EMA lines. So the EMAs are the exponential moving averages, and I use those mainly for entries more than anything else. I love to watch the naked price action. So as you can see here, it's a perfect double bottom, but it's coupled with a divergence in the MACDs, right? So that gives me a double confirmation that the market is, I don't know if it's gonna completely reverse. That is not what I do know. What I do know is that it's lost completely its strength. And the last thing I want to do is being in a market where it has no more strength in it, right? And that is literally what this is showing me, that there is no more strength in the market. And I want to stay out of it altogether. All right, so again, you can see the divergence here as well. And what's interesting, you can see as the market is heading down, you can see my price action is going down. But then if you look at my red dots, it's becoming flat, right? What is that? That's showing me that there is massive divergence and that the market is slowing down. So when the market is really slowing down, again, I don't know if it's going to reverse. That's not what I'm looking for. But what I am seeing is that the market is losing its steam. It's losing its energy. And I don't want to be in that market when it's doing that. And what's even more interesting, then it comes off with a double bottom and has a massive divergence. So I need to stay out entirely. This is how you could avoid entering the market when it's losing steam. And you know what's the greatest part about this? Is that it's free. It could be done on any market, on any type of chart that you are using for that market. And the best part about it is just following the the naked price chart. And you could use divergence with quite a lot of different indicators. And the coolest thing, Metastock has hundreds of amazing indicators, guys. There is zero excuse not to follow and use universal indicators. So when people tell me that they want to spend money on more indicators, I'm like, did you first try the universal ones? You'll be surprised how beautifully they work. And here you can see again, triple top. And look at the divergence. It's already telling me that something is going to happen. And it is a very high chance that it will reverse. Okay, so now let's talk about the breaking out of the areas, because I keep on mentioning to you, once we have that sideways consolidating channeling market, we want to stay out of it. But what we really are focusing on is, where is it the best place for entry? And it's usually in two types of ways. One, when it breaks out. Two, when it transitions into a new trend. Okay, so here is a perfect example of a resistance area of a channeling market, and then boom, look at that breakout. We want to be sitting and waiting and ready for that breakout to happen. So let's put all of this information together. Again, you can get my entire free presentation at makingofadaytrader.com, makingofadaytrader.com. Go here, you'll be able to get it, makingofadaytrader.com. All right, guys, let's figure out, how do we spot these areas? So the best thing about breakouts is that they are truly one of the highest probability trades that you can have. Literally, it's one of the top probability trades. But if you are missing where the breakout happens, you're going to miss out on these amazing opportunities. So let's understand how they work. First and foremost, what is a breakout? Okay, so here is a perfect example of a breakout area. So imagine the chart, you're going in an upward trend, and all of a sudden, boom, it's flat, it's dead, it's flatlining, you don't know what's going on, and all of a sudden, boom, the price action breaks through. First and foremost, you need to draw your areas. You cannot be guessing these areas, right? You cannot have mental drawings of your resistance and support areas. Why? Because when you are in the live market, we always joke around that everything happens to the left. What does that mean? It means when you are in the live market, your money is in the live market, your adrenaline is pumping. I mean, it is pumping. It's almost like bungee jumping, right? Like, that's how powerful our adrenaline is pumping. And we're going to look to the left, and we're not thinking coherently, right? Because we are adrenaline fueled. So we want to make sure that we just put our hard-earned money into the right location by looking to the left and seeing, okay, I have done the due diligence. Yes, this is an area. Yes, it just broke out. Okay, there's a really high probability of this. I'm understanding, so that you are able to convince yourself already that you have made the right decision. All right, that is the most important thing of all. So I'm going to tell you guys a little secret about trading and financial markets. It's never about the money. If anybody's telling you that you can make all this money, it's never about the money. What it is about is making the right decisions so that you could be earning the right amount of money. When you are going to be making the right decisions, there is no limit to the amount of money you'll make. But if you are not making the right decisions because you don't know where your decision-making process begins, how is it possible to keep on making the money? Okay, so when we understand why we are doing what we are doing, even if we are using bots or using something else, we still need to understand why it is happening, to understand why you are putting, and you don't want to donate your money into the market, you want to earn from the money you're putting into the market. You want to make your money work for you. Okay, so this is how I personally enter the breakout trades. As you can see, I have a very defined area, right? I have a resistance area. My MACDs are flat. If you're looking at my MACDs, you'll notice that there is a dash black line. That black line is flat. It's the zero area. And as you can tell, the majority of the red dots are around there. But then boom, all of a sudden it breaks through and it flies through it. That's when I am putting in my order waiting to enter that trade. That is how I understand. And I've already done so much back testing that I know that this is a 90% chance that it is going to continue in my direction. So this is how I understand the breakout trade, and I am sitting and waiting to enter correctly. All right. So one really important thing that I want to give you on top of what we are just learning, and this is a bonus tip that you could take from the Cirque du Soleil performers, is that they dominate one area. One area. This woman is not going to get off stage and then hop on a motorcycle and go and do motorcycle tricks, right? Because she has dominated this acrobatical performance, correct? It amazes me the amount of new traders that want to trade 4 or 5 different markets because they believe that the more markets they're in, the more money they're going to make. On the contrary, you're actually going to be losing more, because when you day trade, you do not want to diversify. You really want to focus on what is in front of you, because Apple does not move like Tesla. Crude does not move like the E-minis. Forex does not move like crypto. You cannot have all of that. You need to focus on one thing at a time. All right. Again, you cannot be doing a motorcycle act and then getting on a hot wire. It just does not work that way. The same works for traders. You need to dominate one market. All right, guys, here's the reality. We have absolutely everything we need to take action, right? We have these amazing summits. We have gurus. We have YouTubers. We have podcasts. We have so much at our fingertips. But the reality is, how do we know that we're doing it right? Who's telling you that you're doing it right? How? How do you know that you are doing it right? Because all of this is great. But the real question is, and you're probably asking this yourself a lot, is how do I truly get started? And I get it. Like, I don't get this question from beginners, interestingly enough. I actually usually get this from seasoned traders who have been doing this for quite some time and are still not consistent. And they ask me, like, what can I do to turn this around? I want to become profitable and consistently profitable. And usually, I would say 99.9% of the time, is that they're simply lacking understanding of the basics. It's exactly like driving a car. I know that today when we hop in the car, we just go. It's an automatic, right? We put on our seatbelt, we turn on the ignition, we know where the steering wheel is, we could put the gear into neutral, put our brake and our, put everything into gear. We're ready. The clutch is in its right location. It's just automatic. But go back in time, and when you first sat down, you didn't have this automatic. You learned this. You learned the basics of driving, correct? You need to learn the basics of understanding of the markets. I want you to become really creative in your mind for a second and imagine somebody getting into your car who's never, ever been in a car, and you say to them, hey, all right, buckle up. This is going to save your life. And they're like, buckle up. What am I buckling up? I don't even know what I'm buckling up. If nobody ever told you what a seatbelt is, how are you going to know? We're not born with this information, correct? But once you teach it to us, boom, it's there. We now have a life-saving mechanism, and all we had to be doing was shown what this mechanism is. And this was literally my own sad truth. I spent over $20,000 on my trainings. I was in day trading academies. I went to these conferences, events. I was paying all these money for live chat rooms and alerts. And it didn't matter, because whenever I was asking basic questions, hey, can you please explain to me what's a divergence? Can you please explain to me what is a resistance area? How do I spot it? I was either treated as if though I was born with that information or fully ignored. All right, because we need to get back to the basics. And I struggled for years, losing money, until I ended up literally losing $4,000 within 5 minutes. And at this point, it wasn't my first loss. And you know what I did? I quit. I was done. I was so done. At this point, I was trying to trade for like 2-3 years and I was losing. I quit. I just felt so defeated. It was terrible. And I quit for about 4 or 5 months. But here's the reality. And I think this applies to everybody that is sitting right now, live in this room right now, that we are all bit by the trading bug, and it never stops itching. And do you know why? You know the real reason why it never stops itching is because deep down inside, we know that we could do this. I quit for about 4 months, but it was this nagging itch, I guess you could say, telling me, you know what? If others can do this, so can I. And I got back to the basics. I decided, first of all, at that point, I had 3 charts. 3 charts, I'm not exaggerating. 3 charts and 10 indicators. I took 2 of my charts, they were high definition monitors, and I donated them to my garbage men. Hopefully they put them to good use because they're almost new. Then I removed all my indicators, because this is another massive misbelief or misconception, is that when we watch other people trading, the gurus, that they talk about the most popular indicators. You know, I was listening to all these people and I was using the Kettler bands, the Bollinger bands, Fibonacci's, and when I removed them, I felt like there was this massive weight lifted off my shoulders, because I never aligned with them. I never understood what those indicators really were doing, and it felt magnificent. And what happened was I removed all those indicators and was using just the price, like the naked charts. And then I slowly started to put in one at a time. And I needed to see which indicator really worked with me, right? Which one did I understand? And that's when I started to apply the basics. And interestingly enough, one of my students several years ago said to me, you know, Marina, your teaching philosophy and the way you do this is really, really resembling Coach John Wooden. And I was like, who's Coach John Wooden? I never even heard of the guy. And I started to do, I Google him. And this guy was a legendary coach for basketball, but also a legendary business coach. And his entire training philosophy, whatever you want to call it, was when in doubt, get back to the basics. And I mean, this guy has 10 or 11 NCAAs. He won 88 national championships with his team. I mean, this man's accolades outnumber even, anybody. He trained with A-star players, but regardless of all that they accomplished, regardless of everything that they did, he got back to the basics. They would begin every season with, all right, how do you tie your shoe? How do you roll your socks? How do you dribble your ball? Because it doesn't matter how many NCAAs or national championships you win. If you're on that court and you didn't tie your shoe properly, you're going to trip and you might sprain your ankle and you might end up sitting out the entire season. So you got to get back to the basics. And today, that is exactly what I'm offering all of you guys that are here with me today. I have a very special offer. My introductory course, Bootcamp for Day Trading. You could do it on any apparatus, on phones, on tablets, desktops, laptops, you name it. All of this for $97. Not recurring, is one time, $97. So I want you guys to go with me right here. Go to bootcampfordaytrading.com. Google has some firewalls, so you might have to remove the S from the HTTPS, remove it, and go to bootcampfordaytrading.com. All right, so what do you guys get for the $97 on your investment? Do you guys like to play golf? So when me and my husband, when we were living in Guatemala, we really enjoyed playing golf. Me and my husband used to go, and before that, it was like $29 when we first arrived. Before we moved 2 years ago, it was $119 per person, and that's in Guatemala. I was told that some of the courts, the golf courses in the States alone are like $600 per person. Okay. Do you guys like to go out to lunch or take your family and friends out? Today, going out for 2 people is around $100, right? With a glass of wine. So let me break this down for you, what you will be getting in this course. First of all, simplified day trading package and a tutorial, a quick tutorial of how to set up your chart, because I know that that could be such a bottleneck for a lot of people to keeping you from moving forward. So we're going to just get past that because it's really fun to just hop in and start to trade. So we want to avoid all of that, and it's all part of this bootcamp. Then we're going to talk about dissecting the trends. We're going to understand how those sideways trends really work, recognizing the upward trend, the downward trend, and really utilizing the reversals and divergences, because once you understand those, you will have so many aha moments. It's going to be beautiful. Then divergences, support and resistance areas. I said before, divergences are literally my holy grail. And once you guys could understand them, and they're so simple to understand, it's so awesome. All right, using the power of the breakout. Mastering that power of the breakout is going to change everything for you. But the most important thing is we're also going to avoid the fake out breakouts, because they're real. But once you understand, you could avoid the fake out breakout. Once you can figure that out, this is one of the highest probability trades, and you will have unlimited access to the curriculum. All this is valued at $1,600. You will have the full prequel. Everything is included in all of this. So here's what some of my students from all around the world have said. Best money I have spent. I just finished the boot camp. Best money spent. You are the only mentor that truly checks the work. I am enjoying the boot camp and learning every day. So I want to share something really, really important with you guys. Remember, I asked you, how do you know you are doing it right? How do you know you're doing it right? So for me, it was a mentorship. I finally found a really powerful mentor, and I am offering you guys in that $97 for 1 month mentorship. We're talking unlimited questions, feedback, one-on-one. You name it, we could do Zooms, whatever is best for you, but you will have me as your mentor, and that could usually be that missing ingredient to take you to the top. Okay, all this is included in that $97. So go here right now, and I see that Jeff also gave the direct link for you guys to be able to check it out. $97. So what are you guys getting? Everything in this course. 30 days one-on-one mentorship. And I also have a live trade chat room where we will be sitting together. All right. And the reality is this is all worth less than the price of one trade. I don't know what your trades are, but usually mine are between $200 to $400. This is less than one. Okay. You will 10x your return on the investment to be able to go to 100 of these dinners. But here's the really important thing. Because of the mentorship that I offer, I really want to be able to give you guys that time, that one-on-one time. So I'm only opening up to 25 spots. There is a full room right now, and they usually sell out pretty fast. So I recommend just hopping on. So go here. This is the order form. Okay. Here is what the order form looks like. You could go directly from the link that Greg and Jeff just shared with you guys, and here it is. You can see right here, one-time payment. If you do need to do it in a payment plan, I have it for 2 times $59, but you get instant access to it all. So right here, you could go, and actually you could just put in bootcamp for daytrading.com. Right here, you can see that bootcamp for daytrading.com. It will take you to this order form. Boom. And here we are. So let's go here together, guys. Bootcamp for daytrading.com. This is the order form right here. Bootcamp for daytrading.com. And let me know if you guys have any questions. I'm really, really grateful for your time and for you listening. And hopefully you can get at least one thing that you can implement right now, right away. And if you have any questions, please feel free to write me. I'm always available, and I'm so eager to help. And I don't know if there's any questions from any people from YouTube or anywhere else. And just thank you, everybody, so much. And I'm looking forward to working with you.
Hey, Marina, one of the questions we have is like, what markets is this best for?
Oh, you could easily do it for any market because it's with your chart, right? So what I'm teaching you in the boot camp is the chart, how to read your charts, how to understand the chart. And when we work together, we will talk about which market works for you. So then we'll be able to apply it for that particular market as well. That's the beauty of the mentorship as well.
Right on. Do you know how many countries you've had students in?
Oh my God, at this point, I think we are at 35. I've had from everywhere. Oh my gosh, so many countries. Yeah, it's great. I love it.
Nice. Do you find most of your international people are looking to trade the U.S. markets or other markets? That's always something that's kind of interesting to me.
A lot of people like to trade the E-minis, which is obviously the S&P on the futures market, but because it's an international market, that I don't know why the E-mini is without a doubt one of the most popular ones. So technically it is the US market, but you could do it from anywhere in the world.
Awesome. Okay, that's it for the questions. Bootcamp4daytrading.com, or you can click on, the reason we do the expanded link is YouTube requires that we have the whole thing spelled out. So
oh, perfect.
You can also just, I'm going to fix my collar real quick. You can also click the link in the chat box or in the chat box in YouTube. Thank you, Marina.
Thank you so much, everybody. I really appreciate, and it's always so much fun. Thanks, Jeff and Greg. Thank you.
I'll talk to you soon. Thank you.
Bye.
I'm going to do this. I'm going to go ahead and do that. We'll go ahead and kind of move over here. I think I need to make me the presenter real quick. I need to show my screen. You know, we've only done a few of these. I kind of got the process down. In any case, I hope everybody is enjoying the sessions. As we kind of migrate to the next speaker, I want to talk a little bit about one of our sponsors, thetradersforum.com. If you haven't become a member of thetradersforum.com, you should join right now, actually. In there, we've got an active market chat. We talk about the markets. We do all kinds of events in there. We've pulled we pull in and we do like a little bit of an interview style session. We talk about markets. We do lessons. Very, very cool place. We're up to almost 1,000 members. We'd like you to help us get to 1,000. So if you haven't joined yet, go to www.thetradersforum.com and you can sign up. Won't cost you anything to get signed up. So many really cool free resources up there as well. So we are, of course, Metastock. We've talked a lot about Metastock and scanning and testing and forecasters and just, you know, all of the tools that are in Metastock. It's a very well established, well reputed product. It's won the Reader's Choice Award by Stocks and Commodities magazine now 32 years in a row. Any of the specials that are related to Metastock, including if you buy a month, we'll give you 3 months. That's going to bring your cost for Metastock down to about $25 a month. You'll get all the data you need. It'll get you that special installation call where you can you'll get a one-on-one person with who's going to walk you through the software, help you understand it, You'll get the training, all of that kind of stuff. You can start today. If you start today, you're going to get 3 months for the price of one. That means you'll be running it all the way through August, which I can't believe that's only 3 months away. It seems like we're way earlier in the year to me. So metastock.com/conf promo. If you have any questions about Metastock or any of the products that are related to Metastock, you can give us a call. We've got people that are here to help you, 800-882-3040 or metastock.com/sales-chat. Mr. Lewis, I hope you're ready because it's prize time.
I'm always ready to give things away.
Nice. Now, I think it is important.
Which is what no one wants their marketing manager to say ever, but I am.
I think it's important to tell people how, if you're watching on YouTube and you haven't registered yet, you do need to register to be on the prize list. To do that, go ahead, Greg. It sounds like you want to say.
Oh, no, I'm sorry. I assumed you were going to ask me to say that, but I'll go ahead and say that. Yeah, just go to metastock.com. Click on go to metastock.com. Click on the banner at the top and register there. If you're watching this on GoToWebinar, that is not necessary because you are probably already registered. You wouldn't be on GoToWebinar. It's that simple.
Greg Lewis and I talking over each other for at least 15 years.
At least. Okay. We don't finish each other's sentences. We interrupt each other's sentences.
Exactly. All right. So right now, okay. First, we'll do the prize. Steve Bigelow, big big friend of Metastock, passed away a couple of years ago, but probably one of the mentors that had the most impact on kind of the trading that I do. Hugely well respected. One of our most popular videos that we've ever done on YouTube was Steve Bigelow talking about his candle patterns. Super huge person, super huge impact on my life. We're going to give away one of his books right now, The High Profit Candlestick Patterns by Steve Bigelow. And what I need from you, Greg, is I need a number between 2 and 6,095.
Okay, according to Google Random Number Generator, that would be, oh, this is weird, 999.
Oops, I didn't only put in 99. Let's go 999.
999.
Another US. We're saving the company shipping charges right now.
That's important.
We're just getting US addresses. This one is Mike P. Mike has a tvboards.com email address, but it's and he lives in the USA. So if you have a TV Boards with a Z email address and your name is Mike, you just won. And while you're not required to say that you're here, and you're not required to be here to win, if you are here and you just won a prize, I always love to hear it. So say something in the audience. Congratulations, Mike. Greg, thank you for the assist.
You are welcome, sir.
All right. Our next speaker is Melissa Armo. Melissa is actually somebody that we've brought on and done a lot of classes with over the years. We did a interview style session with her in the Traders Forum. I think it was in March. I don't know, but Melissa's great. I love her take on the way she likes to look at gaps. She does a great job. She's really going to talk about gaps and how to trade them and how to look at them and the formula that she's used over the years. So Melissa, let's go ahead and get you started.
Testing. Can you hear me?
I can hear you loud and clear, Houston.
Great.
Make you the presenter real quick. I'll make sure we can see your screen.
Let me know.
Short stocks for fast profits.
Perfect. Wonderful. Welcome, everyone. Very interesting day. Exciting day to trade. Exciting day and exciting week and exciting year to trade the market. And again, for those of you that don't know me, my name is Melissa Armo. I own my own company. I'm going to talk today about gaps. I'm going to talk about shorting, even though actually we're long right now in Boeing because it had a big lift up right after Trump's press conference. I do go long and I do short, but I prefer to short, I will tell you. So if you're interested in more information, you can email me at melissathestockswoosh.com. You can call me at 929-3200-GAP. You can also follow me on Twitter, Facebook, YouTube, or Skype. Well, Skype's gone now, actually. I just realized that Skype is gone as of 2 days ago, I think. And you can watch me on TV. I appear on TV talking about the stock market, talking about the economy. Again, it's been a very, very interesting time to trade. And what I do is not specific necessarily to market direction, although sometimes I do trade the market. I'm looking each and every day for a stock that's gapping to determine the direction that I want to trade it. And we're getting into summer. And actually summer is a good time to trade gaps, specifically what I do, because I'm usually in and out of trades very, very quick, early in the morning, fast. And the morning I have found is the easiest time to trade, where you get the biggest moves, where you get the swiftest moves, where you can get in, get out, and then you can spend the rest of the day to yourself. But when you trade, you really have one goal, and that is to make money. So again, everybody wants to do this. Everyone is interested in trading, but in order to make money, you have to apply a set strategy daily. That strategy has to be consistent. It has to have more wins than losses, because that's the only way that you're going to get ahead. And in this type of market, again, we've been in a very volatile market for 2025. You really have to hone it down to find the best pick, specifically something that you're going to do. And again, I do day trades and options, which I'll talk about today, but you really have to narrow down one thing a day. It will help you have less losses if you're more focused, and then also you will have larger winners. So whether you want to trade full-time, part-time, whatever the reason is you want to do this, you really want to have a strategy that you can apply every day. Because if you're listening to the news, if you have the TV on, even though I appear on television, and like the Fed talked yesterday, everyone has a different opinion about interest rates, where the market's going to go, if the market's going to make new highs, if we set the low for the year, are we higher, are we lower? Everyone has a different opinion of what's going to happen with tariffs. No one really knows, is the truth. What I do is fast trades, quick trades, where I'm in and out on the day, or if I'm doing options, I'm doing the weekly options, which is still to me a fast trade. Now, I did put the stats in here for last year. We are more than 4 months into 2025, which is shocking to me actually, but I did put the stats for the trading room for last year in here. 901,138 for last year. These were all day trades I took on margin. We had a 69% win ratio. So for every 10 trades you take with me, figure 7 are going to work, 3 are going to lose. That's what I'm usually looking at. And again, for the options newsletter, I take more risk. I am holding options overnight. And again, we did BA calls actually before today. We were in BA calls before this move up happened here today. I did like that chart, but I'm sometimes get out of my options trades in the same day, but I'm usually doing the weeklies. We had a good year last year, over 3.8 million, but I risk more because I want to take bigger size in my overnights. We had a 70% win ratio last year for the options newsletter. And then I put the stats in here for 2025 as well, but I just wanted to show you, again, if you took an advanced trader risk, what you could make trading options and day trades, same strategy, same exact strategy, over 4.7 million. And again, I have the stats in here for 2025. I have to update this through the last 2 weeks for May, or a week and a half or whatever it is. This is through the 29th, 469,857 in the room. Again, 69% win ratio for the room, and over 2.1 million. We had a good start to the year for options. Again, we had a lot of volatility this year with options, and so we've had a lot of success with options this year, 76% win ratio. And just to let you know, Jeff, I don't know if anyone's going to ask questions. I can't see any questions, so I don't know if you have it open for me to ask to see people's questions right now. I see no questions, just to let you know.
You will be able to see them in 20 seconds. Okay, banning you now. I just say you as an organizer.
There you go. Okay. Very good. Something about a danger zone. I don't know if that was the last presenter. Anyways, here we are. Okay, I see the questions. If you have questions, we're going long, you can let me know too. So again, start to the year, don't have the last week and a half in here, over 2.5 million, which we're on a better path forward for 2025 than 2024 because we've had so much opportunity. When volatility happens, and today we're rallying right now after Trump's talk this morning at 10:30, whatever time he started talking, rallies can happen up and selling can happen down, and you could call either one volatility because either way, volatility means what? Something that happens is unexpected. It's unexpected, and if you understand how to play that volatility, you can make money. But getting back to what I was saying, so far this year, it's been a good start to the year. There's nothing like making money to help you have a positive attitude. And for the most part, I've found since I've been teaching people now for about 14 years, it really has to do with the way people think when they're going into their week about being green, even if the amount of the green is small to medium, even if it's not a big, huge win that they have. People want to see the consistency in the green, Monday, Tuesday, Wednesday, Thursday, Friday. Trading requires a positive attitude. Where people are losing, they get negative. When people are winning, they get positive. And again, in order to become successful, you have to have a system. So I started trading gaps a long, long time ago. 2008, I started trading. I made a lot of money in a gap one day. It was Netflix. I remember it. I made a lot of money shorting. I said, this is what I want to do. I didn't understand what I was doing. I had no idea. I went back and forth for about 3 years till I developed my system and figured it out. I didn't know what I was doing off the gate, but I knew that I had something here with shorting. I knew I had something here with gaps, and we're going to talk about what gaps are in a minute. But, you know, my point is that a lot of people lose money. They don't have a system. They want to blame themselves. Sometimes it is people that have a negative attitude and they never make the right choice. But a lot of times people are trading, they don't have a good system. You have to remember that for every winner, there's a loser in the market. It's a zero-sum game. It's like that from the movie Wall Street. You're not really making socks or knitting sweaters. You're not creating a product when the money comes into your trading account. If I make $1,000 in the next 5 minutes, I didn't like sell something to get that money. Like I said, like a pair of socks. I just took a good trade. So it's the smarter people win. The people that know what's going to happen ahead of time before something happens. So you need a good system to succeed. You have to follow it daily and you can't veer off of it. Even if things are changing, even if you're in a weird time, like we're in right now, back and forth, the market's been in a tight range, you have to follow the system, okay? So for me, it's one, focus on gaps. Again, I do bullish gaps. Like I said, we're in BA. BA was a bullish pick, but I typically prefer to short, which I'm going to talk about today. Apple was a nice short we did. I was in puts in that, got out of that yesterday. I actually still think Apple's lower, despite the fact we're rallying today. But if you ever decide to come and learn with me, if you ever decide you want to learn my method, you will be very, very focused, very, very focused. So I'm looking for fast moves, big moves. Again, volatility, which could be up or down. Here was the Apple one here. Again, I don't have in here the last 2 days, but we continued falling here. This was the 6th and the 7th was down in here. We came all the way down to like 193 and change yesterday. So again, let's go over what is a gap. A gap is adjacent to the close and the open, simple. So almost everything gaps every day. We'll say, well, how do you know what to do? How do you know it's playable or predictable? I developed a method to rate the gap to determine if I want to trade it, and if so, in what direction. Now, again, I was talking about Apple. So going back, this is Thursday, Friday last week. Apple had earnings Thursday night. Stock closed here, gap down, open, dropped. Okay, so we did puts actually last Thursday, which you could have got out of here, but they continued yesterday. And it had a nice little sell-off, snug as a bug, came down in here, broke 195. So again, this, picture the movement down, is selling. And again, momentum to the downside. Now I'm gonna go all the way back here because these were trades we did at the time. It seems like a long time ago now, but this was not that long ago. Actually, it was only a month ago. Back at the end of March, beginning of April, again, Apple closed here, gap down. So what's a gap? A gap is adjacent to the close and the open. Every day the stock market it closes at 4, every single day. And every day it opens at 9:30, Monday through Friday. So this was a bearish gap. Open, dropped, close here, gap down again, rallied, fell. So again, this was a lot of volatility. If everybody remembers that, this was the tariffs, boom. And then we had the pause, and then we had the lift. So again, this day was April 9th. Actually, that's a month. Tomorrow's May 9th. So again, this may seem like a long time ago and a long placement ago for where the market is now and Apple and a lot of other stocks. But the fact is that it really wasn't that long ago. It really was, like I said, it was less than a month. Tomorrow is exactly a month when this happened. So you're going to have this kind of volatility going on. You could say the reason is tariffs. You could say the reason is Russia, Ukraine. You could say the reason is the Fed interest rates. It's neither here nor there. I'm making my decisions, again, this is a daily chart, based on the daily chart, okay, to help me decide, do I want to go long Apple here or do I want to short it? And again, in the case of Apple, we shorted it and we did a put, okay? So anyways, right now is a very, very, very interesting time to trade. And you have to look, like, are you prepared for the future? What if we go into recession? What if we have higher inflation? What if the unemployment rate rises? Again, you've got to put yourself in a position to know what to do. A lot of day traders prefer to go long. I will go long. Like I said, we're long BA, but I prefer to short just because of the fact that I think shorting gives me a niche. But either way, you should know how to go long and short, because if you don't know how to short, again, you're going to get caught in a situation, which happened a month ago, where you don't know what to do when we have selling come in. And in 2025, I mean, you see it in the stats for us here, it's really some of the best trading I've ever seen in my career. And I've been trading for 17 years. So it's like these types of opportunities, they just don't come around all the time, where you're seeing these big, big swings and big moves and big gaps. Again, you've got to be in the right stuff. You can't be in everything. You can't be in the market every single second. We don't play the market every day. But if you're getting it in the right placement, at the right point, in the right direction, you can really grow your account. And obviously that's what everyone wants to do. So I developed a system called the Golden Gap. It's a rating system. It looks at 26 points in the daily chart. So I get up in the morning and I rate it. So how did I know Apple was going to fall? Last Thursday into Friday, I rated it. And this is what, if you wanted to come and take my class and learn from me, you'd learn. And so it's not something that's beyond comprehension. It's something I teach. Again, it's based on advanced technical analysis and the gap, and you would learn it and rate it. Now, you don't have to have a perfect score. We're looking for 20 points or more in the rating. So my rule is 20. If I get 20 points or more, I take it in the direction of the gap. If it's 17, 18, 19, it's 50-50 chance of working or failing, then I probably will pass. Okay. Now this was another Apple one that we did here. This was a nice trade, May 5th. Again, this feels like a while ago too. Stock close here, gap down. Again, this was Apple, rallied, dropped. We shorted it, 203.30. Again, this was a day trade on margin. Again, typically in a day trade, I'm looking for $1 or more, trying to pull $1 out of it, 202.20. And again, you could have bought a put here. Again, we were inputs in this, but this was a margin trade that I did. Shorted it, got the drop, got out. It kept going though. I just want to show you. I got out of this at 202.20. It kept going all the way down here, broke 200, went all the way down to 198 and change. Very nice trade, fast trade. Again, right out of the gate of the morning. Here's the morning. So I found that the morning again is the tightest placement to trade for stops, okay, to get the biggest position I could possibly get and the best entry. So again, what is a gap? A gap is the difference between the close and the open. Simple, like I said, but you can't always predict every gap that occurs. Stocks gap most every single day. Not every gap though is a good gap or what I call a golden gap. So I'm looking for gaps that are predictable. And again, how do I do that? I use my rating system. So again, this was the market. I'm just going to go back and show you here again to reiterate what happened a month ago. The market closed here one night, gap down. Again, this was April 3rd, April 4th, April 7th, fell and flipped. And then this was the tariff pause day where we had this big move here, but this really wasn't, this was what I would call a neutral gap here. We didn't actually have this whole bar, actually kind of strange as it looks right now. If you weren't watching it, you didn't know. This happened like at 1:15 in the afternoon. So this really was, there was no way to predict Trump was going to do that at 1:15 to do anything there. But this was predictable. This was predictable. This is just whatever, okay? So again, but you can use this information and analysis to make decisions after the fact. Again, what is technical analysis? Looking at past price data to predict future price movements. That is what technical analysis is, okay? And again, charts have memories, just like human beings have memories. And every time I'm looking for a trade, I'm looking for momentum in the gap to make money. Again, Apple was a nice example because we were in that since last Thursday and had a beautiful drop into yesterday. So think about it. Again, momentum, like if you short a stock and you have 1,000 shares and it drops $1, what are you gonna make? $1,000. If you short a stock and you have 1,000 shares and it moves 10 cents, which I consider a scalp, you're gonna make $100. So think about it. Which would you rather make? I'd rather make 1,000. So again, if you're scalping, you get a little move here, a little move there. Again, you have to do too many trades to make serious money or take too much size. And then even if you have one stop, then you have to take like 5 scalps to just break even on the one loser. Do you know what I'm saying? So you've got to get big moves. You've got to get momentum moves in order to profit. Because I mean, again, you could see back in my stats, I have some trades that lose. But like I was saying, the key to day trading stocks successfully is really using a system. So you want to trade a system that sets up daily with a high level of predictability in the directional move. There's no 100%. Nobody is 100%. It's like, again, people saying, what's the Fed going to do? What's going to happen with China? The China meeting in the next couple of days about the tariffs. Nobody knows. But you can look at the chart. You can make decisions based on the price reading of the chart with what I feel is again, around 70% win ratio predictability. And that's actually really high, but there is no 100%. If there was 100%, I could risk my whole account every day. And I don't do that, okay? So that's why I have to pick a size amount I want to risk in my trades. And again, I use stops. So trade a system that works independently of the market and does not need the market to work. And again, you know, we shorted Apple. That's something I still like lower, even though that's lifting today. It's best to do things where you don't have to worry about the market, particularly right now, because you can have the market gap up and fall, gap down and rally, or it could fall. I mean, the market's been like, you could look at a news alert every hour on the hour. Even today, you could be like, oh, is this going to keep going to 4? Nobody knows. So sometimes it's actually easier to trade stocks. Success or failure is everything to do with the quality of your system. And if you don't have a system, that's number 1. You got to get a system. Number 2, then you got to get a high win ratio system. And number 3, you have to implement the system, learn it, and do it. Okay. And then number 4, don't veer off of it, even if it's choppy, which I actually think the market's been choppy the last week. In my opinion, I think it's been choppy, but we've been in a very tight range. But again, getting back to what I'm saying, my niche is shorting for fast moves, get in, get out. So if you can find a niche, something that you really, really get good at, then you can be profitable. And you can not only be profitable, you can have outstanding results. So I'm looking for reading institutional money in the market. But to be honest with you, it's not as easy as just shorting every bearish gap or shorting every bullish gap. Not all gaps are made with institutional money. It's one reason why people are very often confused when they're reading gap direction. It's not confusing if you review it daily and you have a process to rate it. But a lot of times people want to trade gaps for gap fills, and that doesn't work consistently either, where you would short a bullish gap or go long a bearish gap. So I'm not doing that either, okay? So in other words, I'm looking for the technical analysis of what's happening in the chart, but I'm not doing the reverse of the gap. So when I rate it, I'm either looking to play the gap in the direction of the gap. So, and again, I'm looking for bearish gaps to short. If it rates 20 or more, I'm going to short it. If it doesn't, I'm not doing it. So Apple was one, like I was saying, that rated good enough to short. And so you could have shorted it as a day trade on margin or done a put. Either one worked, okay? And again, this is a chart of the market. Again, today we're up here. I don't know where we're trading at right now, but you can see here how we've had the lift. This is, again, the sell-off back in here from the beginning of March. We started out the year, it's not over here, but January, beginning of the year, we actually started out at brand new all-time highs. Started to sell off in February, boom, boom, boom. So again, is everything clear, you know, clear to the sky now? Is the market going to go back? Is it going to make brand new all-time highs? I'm on the fence here about it right now, to be honest with you. I wouldn't be surprised either way. I'm a wait and see kind of person here now with this market. So I'm not full on long the market. I'm in specific stocks that I like that are higher long. Dizzy's another one we did, had the lift up today. That was an earnings gap from a couple days ago. But really, if you're not focused on what's happening in the chart and you're too much playing the news, it's going to come back to bite you in the butt. And again, that can frustrate you. It definitely can frustrate anybody that's trading. I mean, again, you could have the news on the TV on all day long and hear good news or negative news, and you cannot trade on that. You have to see what's happening in the price. But like I was saying, my niche is gaps. And it's also shorting, okay? So how can I make money shorting? You make money when the stock price drops, okay? So who can short? Actually, anyone can short. You can open up a cash account with $2,000 and open up an options account, and you can buy puts. You have it set up as a cash account. You can open up a day trade account, a margin account at a prop place or at a retail place where you need $25,000, and you can short stocks with 4-to-1 margin. Or again, you can open it up prop, or you can open up an account with $5,000, and then you'll get 10-to-1 margin. But anyone can short. Professional traders short, lots of people short. And again, it depends how you want to take the trades. If you have a retirement account and you want to trade that in options, you cannot short it in a retirement account, but you should be able to buy a put. So I have some people with me that are trading retirement accounts and they're buying puts, okay? Any questions here so far? How are we doing? I don't want to go too fast here. You doing okay? Okay, very good. So selling happens fast, all right? And typically it's done early in the morning. Well, here's another Apple play. We've been doing this a lot. I've been very interested in shorting this actually. So this was 4-3 we did Apple. Here, stock close here, gap down, open, dropped, fell, entry 203.70, exit 202.60, dropped 27.50 was a profit, 2,500 shares, risk was 4,000. Again, this was this little tiny day here, okay? So again, stock closed here, gap down, open, rallied, we shorted it, got in, got out, done, boom. You could have also done it here in the 4th. Could have done it there too. We did this again on the 17th. Again, closed here, gap down, fell, closed here, gap down, fell off a cliff. I've really been liking this. I didn't realize how many trades I've done in this. And again, NVIDIA is rallying today. This had news out, the market's rallying, but we did a bunch of shorts in NVIDIA. 103.60, we shorted it, exited 102.90, made $2,800. Again, if you don't have a margin account, you can buy a put. But again, just want to review, this is a gap. Stock closed here, gap down. Stock closed here, gap down. Stock closed here, gap down, boom. So again, you could have done this a bunch of different times here in the last month. It was the middle of April. Any questions here so far? So here we are. We were talking about day trades. We're talking about options. So like when I do an option, this is one of the Apple puts we did. I called 328. This is when I sent the trade out. It was 11:45 in the morning. Typically my trades are sent in the pre-market, but on 328, I called the Apple 215 puts that expired 4/4. So let's go back to the Apple chart, 328 here. So I just want you to see this. So the stock closed here, gap down. We did puts. They backed up. So I was down in the trade. And then they fell, fell, fell. So again, in order to drop, in order to make money shorting, a stock has to drop. How does a stock drop? Selling or shorting, but it's mostly selling. So the best shorts we get are actually mostly selling action. This was one of the biggest trades we've had this year. So I was in the app. It's funny that I'm still interested in this now that I think about it, because this was like a month ago. It cost $1.80. I did 50 contracts, risk was 9,000, sold at 22, which is absolutely insane. And it was $101,000 profit or over $1,000 return investment. Now, it is not always that I will hold a trade into the last day of expiration, but I will show you how far this was in the money here that I felt like this was like there was no way I could lose in it. You could have got out of this here, it was a huge trade though. You could have got out of it here, it was a huge trade. But I actually felt like there was no way this wasn't gonna go against me here. So when this closed here on the 3rd and it gapped down here, I didn't know exactly where it would go, but I felt a very high level of conviction to stay with the trade, and it paid off. Okay. So again, what if you did, $1.80 and you took just a small risk and you just took, or even a medium risk, say it risked $1,800. Say you took 10 contracts, okay, and you risked $1,800, you could have made over 20 grand. So these are the types of trades. Again, here was the trade that really can make someone's whole account for the entire month. And you get a couple of these in here and you're raring to go. So again, it's not just about having a 70% win ratio. It also is extremely important to have some really big trades. So back when this was all happening here, I was starting to feel like the market was going to fall off February, March-ish. I didn't know exactly where or what would be the precursor for us selling off. Like nobody could have predicted what happened with tariffs, but we got that drop and we were already in trades when that gap down there happened overnight. And a lot of people say, well, how do you know it's going to happen? How do you know you don't know. You pick the right stuff and you rate the gap and you follow it through. And I don't kill options in the middle of the trade, and they're just going to normally happen. So again, that's what you have to do. Like we've been in BA for a couple of days. I didn't know that Trump was going to announce anything today about BA, but it was a good pick. And then it ran up today. And that's actually a trade that expires tomorrow. So again, when you're looking to do something, the chart really tells you everything you need to know. You don't need to know the news. Lots of times the news either you don't even know it, and then something comes out, you say, oh my God, that's why that happened. That's why that did that. And then you find out after the fact, and you see it in the chart first. It's always in the chart first, okay, is my point. And that's why you have to follow the chart. And again, short moves happen very, very quickly, very, very fast, which is why I prefer to short. I also prefer to short, like I said, because a lot of people do not understand shorts, don't do shorts. They have absolutely no idea what to short, where to get in, where to get out. People are scared of shorting. I don't know why. I love shorting, but again, panic comes in very, very quickly in a stock. Panic will come in fast, and it's the fear factor. It's not like you can't get panic buying. That can happen. It's rare, but it can happen. But usually you have panic selling. Okay, so panic selling is something that happens on a more frequent basis than you ever have panic buying. Like think about it. If you're thinking about buying a stock right now, you're like, well, it's been down for a month or so. Maybe I should get in here. We might make new highs. What if we drop again? You know, we don't know what's going to happen with tariffs yet. We could go into recession. Maybe I'll wait. Like there's no emergency to go long. There's no panic about going long. Like if you don't get in now, you're going to miss it kind of thing. I don't think a lot of people feel that way about anything right now that's bullish. But you do have panic to the downside. You do have panic to the downside, and that happens all the time. Again, it happens most every single day. So how do I find the best shorts daily? And again, how do I make the best picks? The Golden Gap rating system, which is the system I developed. So I'm looking for large institutional money, which again is kind of been on the sidelines here since we had that pause. We've been back and forth in a tight range. Gaps are created with large institutional money. That is what makes the gap. The professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and then confirm that the large money will flow with it. So again, it's just you're looking, let me just go back here to this Apple chart. What occurred here, even this week, you know, even the last couple of days or whatever since the earnings, it got dumped. It was dumped. And again, I don't have these last 2 days in here, but this kept going. So institutional money dumped it, boom, like that. Again, how do you make money shorting? Something has to go down. You're not going to make money shorting if it goes up, okay? So you have to get selling, okay? And again, you have shorts in here too, because again, we've been short. But again, getting back to the whole thing, what I'm saying about panic and selling and institutional money is just so important in it. So again, how do I figure this out? I do it all in the morning in the pre-market before I even take a trade, before market even opens. I'm looking at what to do. It could be 6 o'clock, could be 7 o'clock. 8 o'clock is late for me to sit and get organized, but I'll do it early, way before 9:30. The Golden Gap 26-point checklist is a trading system. It's based on common sense. Because again, when you think about it, you're like, oh yeah, that totally makes sense that panic happens and people dump stocks. That's what happened, like I said, a month ago. Or it could be again because of news, could be again because of earnings, okay? But I have found in 17 years of trading that shorting gives me a niche because people get scared. And again, a lot of traders don't know how to short. They just don't even have a clue, or they're just prefer to go long. Again, the idea of buying dips is not something that I've ever done, because it's like if I was standing on top of my building and you were standing on the street, if you're on Fifth Avenue, I live in New York City, and I stood on top of the Empire State Building. I said, here, catch this. and I would throw a knife down, would you want to catch it? No, you would not want to catch it. So, I mean, that's dangerous, okay? If you get cut, hurt. So again, I'm not buying stocks when they're selling off. And again, I'm not buying anything when panic's coming into it. Any questions here so far? How are we doing? Hello, is anyone there?
We don't have a lot of questions coming in, but yeah, I'll let you know if we do.
Okay, good. So anyways, what if you have a small account? Can you still short? Again, you can buy puts with a cash account, which you can open up an options account with $2,000. You do need a margin account to short stocks on margin, and you would need that to go long stocks on margin too. Again, in your retirement account, you have to check where you have it, if you can trade options at all, and if you can, you should be allowed to buy puts. But specifically, if you have a small account, that's one of the reasons why you need a good system. Because again, if you have a small account, and by small, I mean, I'd say under $10,000, you can't have a lot of losers. You don't have a lot of wiggle room. You need a system that has more winners than losers, okay? So getting back to what I was saying though, you can use a system to trade options. And again, a put option is a short. And it's a way to, I say it's like the insurance where you can hold a trade overnight and you have a fixed risk. So if I buy a put, say it costs $5, you do one contract, it costs $500. That's all you're going to lose if the trade loses. Whereas if you're shorting stocks outright and holding overnight in swing trades and you're on cash or even 2-to-1 margin, you still have unlimited risks. In options, you have a fixed risk. So one of the biggest benefits of doing options, I think, is not that you can trade them on a cash account, it's that you can hold them overnight. That's one of the biggest advantages, I think, not that you can trade them with a small account or anything, it's that you can hold them overnight, because this time of move here, like we had in the market where we were already in puts, this is like just, I mean, these are just beautiful moves. This is, again, volatility. It worked in our favor. And again, this is not a margin trade. This was a put, okay? So this is the advantage of doing options, where if the trade would have gone up here, which it didn't, and we were in puts, if we would have lost in it, we would have had a fixed loss. So again, you evaluate it and see if it's worth the risk. And again, we did these trades on here on the 28th. So here was another one we did. This was 328. We did the 475 QQQs that expired the 4th. I'll go back and look at the chart in a minute. Some of these trades in the market have been pricey. There are daily options expirations. I do not do this, but this was another, the 28th, we put a lot of puts on, which was a great timing. Right before that sell-off, I saw something was going to come in. 18 contracts, risk was 9,000, sold at $45, profit was 72,000 or 800%. Again, you could have bought one, you could have spent the amount for one, you could have spent $500. And it was a really, 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 really nice trade. So again, here was the 475s we did here. Again, closed here, gapped down. We bought the put, fell, backed up, got the drop, 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 boom. So again, this was the Friday. Remember, then this was the 4th. And then this was Monday here where we had another gap down and we flipped. So again, you could have done one, which anybody should be able to afford, $500. Here's another good chart. Amazon, we've been watching this one too. This had earnings last week. We did the 195s. Again, we did a bunch of puts on the 28th. It was perfect timing. We did the 195 puts, cost $320. Again, one contract was $220 risk, which anyone should have been able to do. Sold it at 21, profit was 53,400. Again, 556% return investment. These are the types of trades, again, like I said, that can really make your account. My normal trades, I'm looking for 1-to-1. I'm trying to get 1-to-1, but if I get real big momentum coming into something, or if the gap goes in my direction overnight, that is how I'm making more than that, okay? But again, the rating system looks at 26 points in the daily chart of a stock. The rating system is a checklist. It's a tool. It's a very, very useful tool to help me decide what I want to trade, where and when. And the checklist tells you what to look for in the price of the stock to read direction. And again, you can't short everything that's gapping down, and you can't go long everything that's gapping down, and vice versa. Okay, it's not that easy. If it was that easy, it would be easy to trade. Again, one of the reasons that the stats are stacked in the favor of people that make a lot of money that win is because of the fact that there's more people that lose than win. So again, the people that do win a lot. And so you want to be on the side where you're winning a lot, where you're winning more than you're losing, and then you're also getting the big trades. So like I was saying earlier, having a positive attitude is extremely, extremely, extremely important. It will help you through the tough times. If you have a trade that loses, which I have trades like I showed you in the stats, I have some losing trades. When you know that, 7 of the next 10 trades are winners, you keep moving forward. And then you also know that you've had some big winners and you're going to have some big winners. But, education is extremely important. I just taught my class for May this past weekend. It's just one of these things where it's an eye-opening experience for people that come to me. That if some, most people have been trading for, that I teach for a long time. Some are brand new. I've taught brand new people. But if you get the proper education, you can do well. I think people go through the process, they take classes, they learn different systems, they don't make money, and then they start to feel negative about education. But the fact is, if you want to learn a good system, you're going to have to learn it and understand it. When you're risking money, your own hard-earned money, you want to understand, why am I shorting Apple here? Why am I shorting anything if the market's rallying? You have to understand why. And again, if you understand why, it will help you put on the risk. It will also help you hold the trade to get some of these big profits, okay? You can't be just taking calculated risk for risk's sake. You can't be taking every trade in the direction of the market. You can't be trading on news. You can't be buying every dip and expecting to have a high win ratio either. And it's not about risk for risk's sake. You have to look at each trade separately. Each chart is different. You're evaluating each ticker symbol, each gap, each one on its own. And the whole reason I developed the system in the first place is because I was looking for calculated risk, because I didn't want to lose. So I said, well, if I can find a way to find just one good trade a day that I have high odds, again, there's no 100%, but I'm trying to put the odds in my favor. So if I go through 26 things, it's a lot. If I get 20, that's a lot. So again, the higher the rating, the better the chance of the gap working, or the bigger the move. So I'm always trying to look for something that is giving me a reason to do it, okay? And then you can create a plan of action for you to achieve your financial goals, whatever amount of money as you need. I mean, a lot of people start out with a small account. You can grow it. You can grow it. And I showed you a couple big trades we had here in the last month. You can start with a small amount and build it over time. And again, many people are doing this part-time while they have another job, working towards being able to trade full-time in the future. But my system is a rating system. This is what you come and learn in the class. I'm looking to measure gap by rating them a daily chart to find stocks to trade that have, number one, a high probability of directional bias for the entire day, big move on the day, early confirmation of the bias in the move between 9:30 and 10, precise entries with follow through, and a good risk to reward target potential. Again, it's essential to have a good risk to reward, because again, if you're looking for 5 cents, 10 cents, 15 cents, you have to take thousands of shares to even make any money at all, and it's just too much risk for too little gain. So we're looking mostly trying to get 1-to-1. So my system is called the Golden Gap. The Golden Gap system is a 26-point professional gap rating system. The purpose of the system is to help you evaluate which gap to trade each morning using a checklist. This checklist tells you what to trade when and in what direction. The 26-point checklist predicts directional bias in a stock chart. So again, what I've been stressing here the entire time is how important it is to have a system, how important it is to have a winning system, and how important it is to have a winning attitude. One strategy is all you need to be successful in the market. You do not need a general, overall, broad-based view to make money. Tons of people have that, and they fail all the time. You can't be a jack of all trades and a master of none. You've got to really narrow it down for one thing. And again, it could just be shorting. I mean, because that's what I mostly do. Even though I will go long, I'm mostly shorting. And in any market conditions, even in a bullish market, learn how to read institutional money and price patterns in gaps, and you don't need to do anything else, because if your reason for doing this is to make money, this will make you money. So again, if you come and you decide you want to take my class and learn from me, you will learn a 26-point checklist that you will go through each and every day for everything you want to rate. So this is what I do. This is my process. I never skip it. I don't trade on the fly, because that's very, very dangerous. So my class is called the Golden Gap Course. This is a class on how to find, pick, and play professional bearish gaps. Class is online. You can be anywhere in the world and take it. And I teach it once a month. So again, I just had the May class. So it is earnings season right now. We've had tons and tons of earnings. I brought up Disney. We traded Disney. Disney was an earnings gap that we did calls in. So you will learn, it is a class on how to find, pick, and play professional bearish gaps. Class tuition is $69.99. Class is June 7th and 8th, 9 a.m. to 5 p.m. Eastern time. I always teach the class online. It's always on a weekend. And again, if you're interested in this class, you can email me. I am doing an earnings season deluxe package for people that are interested in starting to trade now, getting the trades tomorrow, getting the trades during this earnings season. If you sign up by Friday, which is tomorrow, 5/9, I've been running this special for a week here now. I'm doing a package for everything. That you would get the options newsletter subscription free for 1 year, the trading room subscription free for 1 year. You'd have access to the trading room. You get all my trades for a year that would take you into May of 2026. The market report subscription free for 1 year, 2 one-hour mentoring sessions with me one-on-one, and the wealth manifestation course free. If this is something you're interested in, this is going on till Friday. If you sign up for the Golden Gap Course Bundle, and this gets you 3 classes. So you would do the main class, which is the Golden Gap, which is 2 days, June 7th and 8th, the Trends course, which is June 11th, and then 10th, I'm sorry. And then the Gap Options course is June 12th. So it's 3 classes in the bundle for $89.99. And if you sign up, you get the deluxe package, and this is going on till tomorrow. Any questions from anyone about anything at all? I think I'm doing good with time. Quiet group today.
You're doing great with time. What we do have a question in terms of, you talked a little bit about options.
Mm-hmm.
Do you have recommendations around what options somebody should pick in terms of like expiration dates, in the moneyness, delta, that kind of thing?
I'm doing usually trains. I'm doing if I can get it close to at the money. And I'm also doing the weeklies, like today's Thursday. So I'm not going to do anything I would want to, like if I did something this afternoon, which I don't think I'm going to, but if I did, I wouldn't do tomorrow's expiration. I would do the 16th. I make decisions on the trade if I want to go long or short based on the direction. And again, a call is a long, a put is a short in an option. So I'm not looking at delta or any of that. If I see the momentum's going to come in, then I'm taking the trade. Again, we did the 190 BA calls, but I've been in them for a couple of days. They've been back and forth, but they really didn't have any momentum until today. And they expire tomorrow. So we made it. It was a nice trade. But I was looking for momentum to come into BA. So I'm always trading the momentum. So I'm not really looking at the delta. I'm making the decision based on the gap rating. If the gap rate's 20 points or more, I'm going to either buy a put or buy a call and then trade it till it goes. And if the trade loses, if it busts out and loses, then I'm going to lose in it. And then I lose in the trade because it never went. Do you know what I mean?
I do, yeah. We also have another question about whether this is applicable for gaps in the futures market.
Well, again, if you are trading futures, which I don't trade, okay. First of all, a lot of people are crazy into futures this year in 2025. I've heard good stories, I've heard horror stories. I've had a bunch of people call me that want to sign up for my class that are doing futures and they're losing and they're getting tired of it. Futures right now with the market, which gaps almost every single day, again, based on news, it could be at one point at night, the next point in the morning, has been challenging for people. Again, a lot of it has been news-driven moves in the market. And when I say the market, I mean the QQQs or the SPY. If you apply the rating method to the indice, for example, in the QQQ ETF, you would rate the gap in the QQQ and then you would trade it, but you would rate it and then play it as it comes in the direction. Again, if it's a bullish gap, you would rate it to go long. If it's a bearish gap, you would rate it to short or buy, to short it. But I mean, again, for some reason, and I was talking about this the other day with my broker, people are driven towards going towards the future market because of the fact that if they don't have to risk as much money as trading stocks, specifically if you're trading on margin, you can open up a smaller account. But again, you can lose big if you're not hit right on the money. I would tend to say to people, could you rate the gap in the market and trade futures? Yes. Are you going to get a trade every day? No, you're not, because the market isn't predictable or tradable every day. You will have more trades. You will have more trades and more opportunity if you move into trading stocks, whether they're options or again, stocks on margin. So I think anybody that comes to me, if they have in their head that they want to rate the gap in the market and do futures, will end up gravitating, because they'll be like, oh my God, I could have shorted Apple. I could have bought a put and I didn't do it. And again, people are losing money doing futures in the last 3 weeks. It's been very choppy to trade the market. And I don't trade the market every day because it's not a good gap every day. Do you know what I mean?
I get you. Bill wants to know, how could you see a gap coming on Apple before it came? Maybe
I didn't see it before it came. I played it when I saw it. 328, Apple gap down, and we did a bunch of trades. We had a gap here last Friday. That's when I entered the trade that we did, that I exited yesterday. I'm not predicting the gap itself. I'm playing the gap when I get a good gap that rates good. So I'm not predicting the gap. I'm predicting the directional bias after I see the gap. Like for example, tomorrow's Friday. I didn't look out to see what earnings are out tomorrow or tonight. There's a ton of earnings right now. It's earnings season. That's why I'm doing the earnings season package. There's tons of things to do all the time, a million things. We did Disney. Was I in Disney before the earnings? No, I wasn't. I wasn't long it before the earnings. I didn't even know what it was going to do at all. I don't take the trade before earnings. I don't predict the gap before it gaps. I would be a psychic if I could do that. If I could do that, I'd be a billionaire. So it's just, no, I'm seeing the gap, but I have developed a method once I see it and I say, wait a minute, is this going to continue in the direction of the gap and fall, which is what happened with Apple from Friday on, or is it going to rally and fill the gap, which is not what happened. Okay, so just to be clear, I'm not predicting the gap. I'm predicting how the stock's going to move after I see the gap.
Okay, that's the end of the questions that we've got. So the email to send an email to get ready for that June 7th course, right? June 7th and 8th.
Yeah, Melissa at thestockswoosh.com. If you want to email me, if you want to call me with questions, my phone number is 929-3200-GAP. I'm a real person. I live in New York. And again, it's been a very interesting time to trade. And we've been very active. Like I've just been like trading like a banshee lately. So it's just like, it's like now is the time to trade because it's earnings season. Again, we'll have a break over the Memorial Day holiday. A couple of days it'll be slow, and then we'll be back chomping at the bit. And then remember the tariff pause, that'll be at the end of June. So that'll be like, there's so much going on right now. There's so much going on. There's so many things to do. There's so much opportunity. But as for every trade that you could take that you can make a huge big winner, there's a million you could lose. So you still have to narrow it down and 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 narrow it down. It's like finding a needle in a haystack, but you can do it. You can do it is my point.
Right on. Thank you very much, Melissa. I appreciate you being in here and spending some time with us.
Thank you. Have a good weekend.
You too. All right. Let me go ahead and do this. Melissa at thestockswoosh.com for that. Let me go ahead and go back to sharing my screen real quick. I'll make myself the presenter, show my screen. And, we should do this as well. I do want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been a great supporter. They're probably the premier magazine when it comes to magazines around technical analysis. They're certainly the largest. You can get a subscription if you go to www.traders.com. I believe the subscription rate is about $100 a year, so it's not very expensive. That'll get you a physical magazine as well as access to all of the trading archives. There's about 17,000 of them. There's about 1.3 million subscribers. They've been making the magazine since 1982. So I do want to personally thank Stocks and Commodities Magazine for all the support that they've done over the last probably 15 years. I don't know, Greg, how long we've been doing these things? For a minute. Anyway, 1982, www.traders.com. I want to remind you, you can get an extended trial on our Metastock software platform. It can help you scan the markets, test ideas, forecast probable price movements, get real-time alerts, commentary signals, all that. Pricing starts at $75. We'll give you, if you buy a month, we'll give you the second and third month for free. That'll get you running until August at this point. And we'll also include, we had a question during Melissa's presentation, is there a way that I can get started? Like I want to use Metastock. I understand it's a powerful tool. What's the best ways for me to get started? Well, we want to help you use it. We want you to not just subscribe and be done with it in August and cancel. We want it to continue to work for you. And so what we're going to do is we're going to include not only unlimited access to our support. Once we have you set up, we're going to sit down with you with one of our install agents, one of our support people. They're going to walk you through any questions you've got, make sure everything's properly installed. They'll show you how to run the scans and how to set things up and all that kind of stuff. They do a great job of that. We're also going to include Unleash Your Power Metastock, and that's a training course that you can go through on your own time. And it's an as-you-go course. It includes, information on all of our favorite systems in Metastock, how to run system tests, scans, all that kind of stuff. So there definitely is a lot of resources to help you get going. So, and I will say that if you're interested in just kind of playing with it, it's a very, we've tried to we've made the software so that it functions very much like other software that you're used to. Very much like other Windows software that you might be using, where if you want to change something, you right click on it and you go to properties, you can click to pick, drag and drop. Those kind of things are stuff that we usually spend a lot of time thinking, okay, what's the easiest way to implement this and do it that way? So in any case, Mr. Gregory Lewis, let's get you on here if you're here. Okay, good. Okay, should we do prize? I have one of these books right here.
Can you hear me? I'm not sure if my mic's working right.
You sound good to me.
Okay.
I can't, for some reason, I no longer have visual access to where the cameras are, but I do see that you're, oh, there it is. Look at that. You look great. Hi. All right. So we're going to give away another Steve Bigelow book, Candlestick Profit Eliminating Emotions. And great book. And what I need from you, Mr. Lewis, to give away that book is any number between those 2 and 6,095.
All right. According to the Google random number generator, that's 3,222. 3222.
Okay. Vernon T. One with an AOL address. So if your name's Vernon, I can't imagine there's too many on our list of registrations here. If your first initial's T and you're in the USA and you have an AOL address, you probably just won this book. So what will happen, I'll send you an email next week and make sure you just confirm that your address is good or send me a good address. I'll need a phone number as well for the shipping. And then send that back to me and we'll send it out to you sometime next week. Congratulations, Vernon. Greg, how long do you think we've been doing this?
The long form multi-day conferences?
Not the multiple day ones. Those are like we started
live
those.
Events?
We started those in 2020 where they lasted all week. The live events. The summits we started like about, I think it was 15 years.
At least 15 years ago, at least. Yeah, if I dare I say, we were one of the pioneers of live trade oriented things like this.
There you go.
Especially the live streaming thereof. That was a little bit of a learning curve in the early years, and we were one of the pioneers in that.
Very cool. Yeah, I remember we were talking about it earlier, how we would run around and all that kind of stuff. Congratulations, Vernon T. You just won. Greg, thanks for the assist. Appreciate it.
You're welcome.
I'll see you again in about an hour. All right. Again, if you want to get any of the conference specials, get set up for anything, all that kind of good stuff, go to metastock.com/conf promo. That includes the extended trial where you buy a month and get a second and third month for free. Again, the software itself is very well established. This is something that we put together just a couple of years ago and started marketing. Something that we've been working on for 32 years in a row, or we're actually more than that, probably 40 years. But it's something that's consistently been rated the #1 software in its price category. I wouldn't trade with it. I just ran a scan. I haven't looked at the results yet. There was a lot of stuff on the scanner today. I'm going to take a look at them right now, but definitely something that can help you be more effective, more efficient, and certainly more profitable in what you're doing. So metastock.com/conf promo, metastock.com/sales chat, or 800-882-3040. So without further ado, our next presenter is Adrian Manz. Adrian has been a longtime partner of Metastock. I remember we wrote his Around the Horn Patterns a number of years ago, probably decades ago. Very, very visual patterns. Make a lot of sense when he starts to talk about them. And today he's going to talk about the psychology of trading. So without further ado, Adrian, let's get you started.
All right.
I can hear you. I can see you.
There we go.
I can see you.
All right. Here I am. Let's see if I can get a screen share going.
Perfect. Perfect.
All right. So it may be a bit noisy here today, Jeff. I got to tell you, we've got an entire, as you know, we've relocated down to Balboa because of what happened up in Pacific Palisades. So lo and behold, on Balboa, we've got like utilities being put underground. So all summer, this noise is going to be going on.
Well, I don't hear anything now. I don't hear anything now.
Okay. All right. Let's see here. There we go. All right, so I guess we'll get started, right? We'll just hop right in. And, you know, let me tell you that what I'm looking at today is the psychology of trading. So I find this to be particularly interesting since Julie and I are both psychologists. Those of you who have seen us here before, you know the drill, or if you've seen us live someplace else, we are just long time professional equities traders and analysts. We've been, as Jeff said, Metastock partners for, it's got to be going on 20 years, I guess. And have had just a really good relationship with the software and what it does for the people we work with. And we love that because it helps to bring the things that we do to life. So that's been really cool. So everything that I'm going to talk about today is based on the stuff that you can actually scan for in the scanner, and it's based on the things that we do as traders every day with our own trading and our own analysis that we do, and also with the folks who we work with. So we've got a lot of people we work with from just over the years who are clients, who are boot camp survivors, guys who have come to our live events and trained with us, and also are looking to be professional traders. We've been doing this since 1997. So our background is, we came at this from behavioral finance, we were working on PhDs, MBAs and PhDs concurrently at Claremont, and organizational behavior and a real focus on behavioral finance, which was a young field at the time, and just sort of looking at what is it that drives market behavior? What is it that drives everything from very rational behavior to fear and greed in the markets, and how do we go through and profit from that stuff? So early on, you know, I would say the insight that we had into this in the earlier 90s, 1995, 96, 97, was we got to work with folks from the New York Stock Exchange and dealt with specialists and $2 brokers, and you know, spent a lot of time down there sort of figuring out, even at the institutional level, even at the professional trader, even at the floor trader level, you know, what is it about what's going on in the world, what's going on in the markets that can really drive momentum, can really drive the price action. So today, you know, I think we're in a unique position that, you know, we've got a lot of stuff driving price action. You see it again today in what's going on with this surge in the market. You know, how do you go through, how do you interpret that stuff? How do you figure out what's next, so to speak, in the markets? We're intraday traders. We trade strictly during the session. You know, we open up here at 6:30 in the morning, so 6:30 until 1 o'clock. We are trading actively. 1 o'clock, everything is shut down, and you know, all the ponies come home. So there's no overnight risk, and that's a very important component in our trading psychology. So, you know, I've published a lot of stuff on all of this, including in Stocks and Commodities, which is, you know, a great magazine, and you know, I should probably get back out there and write some more articles for journals and sort of the popular press, because, you know, I enjoy it. I enjoy putting stuff out. I enjoy having people read about things that we're doing, and you know, I think that the psychology of it is the thing that's most overlooked. So people really tend to overlook what's going on sort of between the ears, and that's really, you know, where your war room is. And, you know, everything that I've done over the last almost 30 years in the markets has emanated from this. So Around the Horn, A Trader's Guide to Consistently Scoring in the Markets, that was the book that I wrote that sort of defined everything that we do to this day. And that was originally called a multivariate analysis of covariance in the United States equities markets, heavily statistically modeled, you know, put together in a way that said, you know, what's the probability of X, Y, and Z? You know, what, given these inputs and given what's going on in the world, right? How can you go and account for, by looking at chart patterns, what is going to happen next in the markets? So when you're looking to covary something, you're looking for, how do you get rid of the effects of something? So like normal news, normal like earnings driven stuff, normal things that happen in markets just because that life happens, every day happens. How do you go and take those effects out and then allow for just a predictive model of what's going on with price? And, you know, eventually we came around to, it's probably not going to be the case that people want to go and drill down and do a statistical analysis of everything, but they do like to look at chart patterns, and chart patterns tell you just about the same thing, you know, without having to run SPSS and Mankovas and all this stuff in the background. And that book then goes through and really focuses on market cyclicality. It's not in print right now. It'll be in print again later this year, a new version of it. But, you know, as it focuses on market cycles and the human psychology that drive market cycles, I think that the patterns and the strategies that evolve around the patterns really manage to capture you know, a lot of the upside, a lot of the potential in the markets, both on the long side and the short side, and put you in front of some really good opportunities. So, and that's the thing that Metastock scans for and does a beautiful job. So Metastock's scanner, the Around the Horn module, the plugin that they have for it, will go through and filter and you know, find the opportunities, and then it's just up to you to go and select which ones are the best ones and set stops and targets and things. And you know, if you play with it, I know they've got a you know, a great program, money back guarantees and all that stuff. If you play with it, you're going to find out that you know, like the fastball setup or the infield fly setup or the switch hitter setup, you know, those things can really get you out there in front of what's about to happen in the market before it happens. You scan for it tonight, and then you plan the trade for tomorrow, and tomorrow you just trade the plan exactly by the numbers. And I'll show you what some of those numbers wind up looking like at the end of the presentation here, because I think consistency is really the key to longevity in trading. So let me just tell you that, you know, our show, which was a live broadcast show from from Television City in Hollywood, that kind of a thing, is now going to be an online show. As I mentioned, you know, we moved south. We moved down to Orange County, to Balboa Island after the fires. You know, we were lucky we had a vacation house down here. It's not really feasible to drive up there and go to a studio at 4 o'clock in the morning on the weekend to film this thing. So we're going to do it online. And Trader Nation is the name of the show, and it's a weekly show, and it does like psychology deep dives. So as we go and do things like interview top traders, we're also trying to go through and figure out, hey, what's the psychology behind this guy? What's the psychology behind this person that drives success? What's the psychology behind this person that creates obstacles, that makes somebody fear, makes somebody doubt, what gives them confidence, what gives them the courage of their convictions? And it really goes through and tries to focus on what it is that makes traders tick. And with that, I'd like to say, if you have something that you'd like to submit and be featured on the show, you get a coffee mug or something, just send an email to adrian@traderinsight.com and let me know that you'd like to do it. And then what you're going to do is record something on your smartphone, and you're going to send it to us, and we're going to talk about it on the show and do a psychology deep dive. So we've had people who sent us questions about their propensity to gamble, right? A predisposition to gamble. We've had people who sent us questions just about, how do you stick to a trading plan? How do you avoid the emotions that go along with trading? And those are the kinds of things that we want to answer there. It's not really a show about, hey, what's Apple going to do Monday morning? It's a show about how do I get consistent in my trading and get in front of the opportunities every day. So if you've got questions and you don't mind, being the featured guinea pig for the week, it's not hostile at all, I promise you. And I think you'll enjoy being part of it. So psychology is huge to us. I'll tell you, we've got this income trading boot camp. It's a mastermind program. It's a coaching program. It goes on a full year. We only work with 20 people. It's available as a streaming thing we're going to do it in Miami Beach again on June 8th this year. June 8th will be in Miami Beach. We prefer people are there live because the psychology of what's going on, again, is as important as you get a 650-page manual of stuff you're going through. You get 40 hours of online learning that you're going through, but then the 4 days that we're together there really wind up telling us a lot about the people we're working with and who we're going to be around for the next year. And they learn a lot about each other too, and they get to work through some stuff and find people who have sort of similar backgrounds. As you go around the room there, I've got everything sitting in that room, from a food photographer and a cop to a guy who was a professional gambler, to a guy who owned a chemical company, to attorneys, and a farmer. And it's like everybody brings something to the table, and what you bring to the table determines in large part how you're going to deal with the stress that the market hands you every day, or how you're going to deal with the stressors in the market, or how you're going to deal with and react to news events. How are you going to interpret what's going on? How do you know when to use your hands as a seat cushion and stay out of the markets? There's a lot of different things that drive people's behavior. And a lot of people come to this and they've been very successful in what they do. Everybody at that table, very successful. The guy in the black on black there, the third guy, and that's my son Connor. He's not a trader yet, but everybody else at that table, they came to this business as successful entrepreneurs. Right? I've got a guy who's been a commodity trader for the last 25 years, putting on bona fide hedges. He's also a farmer, so he's doing real hedges in the commodities markets. You got a guy who's a market maker, a NASDAQ market maker. Now he's going to be an upstairs trader. They were all successful in what they did. And what they all have to get around is this notion of you get up and you have to go to work in the morning. And when you go to work in the morning, you have to work. And when you're working, you have to make money, right? Trading is very different. And a lot of it is about figuring out how you're going to deal with volatility. So right now, we've got a ton of volatility, obviously. And what I'm going to show you at the end again is how if you've got a very stable system of checks and balances in place on your psychology, then it's very, very possible for you to be able to go through and make sure that even when the wheels are coming off the wagon, you're going to manage to stay in front of opportunities for profit. And I think that the key to all of this stuff is you have to understand the nature of volatility. So if you're a trader, if you're an intraday trader, if you're day trading the markets, if you're swing trading, volatility is your friend, if it's the right kind of volatility. So the only reason there's opportunity ever, so we trade a lot of the Magnificent Seven stocks, we trade a lot of NYSE stocks to this day, right? We have a whole trading plan that is solely devoted to trading things that are on the New York Stock Exchange. We have a whole trading plan that's devoted to trading things that are only on the NASDAQ. We have a whole trading plan that is dedicated to trading volatility bands on sort of the super cap stocks. So why are there 3 different trading plans that we're actively involved in? Well, because there's 3 different kinds of volatility out there that you have to be able to account for. New York Stock Exchange, different animal. There's still a specialist system. There's still a system of price bracketing that goes through and sets up a different volatility profile than stuff on the NASDAQ. Stuff on the NASDAQ is going to have wider ranges, going to have more volatility over the course of the session. Those of you who trade lower dollar stocks that are sort of the high flyers of the day, the meme stocks and everything, why are you trading those? You're trading them because you want to get in front of that volatility. That volatility is something that you understand. But it's very, very important that you understand the volatility that you're dealing with and that you understand the difference between good volatility and bad volatility, because good volatility is your buddy and bad volatility is going to be the worst thing that you can step in front of, because what's going to happen is even if things wind up going in your favor, wind up exactly where you thought they were going to, you're going to wind up stopped out of a trade because the volatility gets so extreme that all of a sudden I'm up, I'm down, I'm up, I'm down. Well, if you can just avoid those situations and you can distinguish between what's good and what's not so good, that's 3/4 of the game as far as I'm concerned, because it's going to keep your psychology in check. So when I say good volatility, I'm talking about stuff that's data driven. I'm talking about days where there's so I never trade a Fed day. I never trade a Fed announcement. So yesterday, I think it's on YouTube. If you follow me on YouTube, you'll see on the Trader Insight channel, I was talking about, well, here's what's going to happen after the Fed announcement. There's going to be a 1, 2, 3 whipsaw in the markets. And somebody said, well, how did you know this? And I said, well, we've known this for 30 years. For 30 years, we've had, pretty much, I could just put out the video from 30 years ago and say, here it is. It's a reactive kind of a situation anytime there's a Fed announcement, whether it's the calm voice of Alan Greenspan or the somewhat panic-inducing comments that Powell can make now. Reaction's the same, and I stay away from it, even though I know it's going to be a 1, 2, 3 swing. Even though 90% of the time I'm going to see this pattern play out. What I know is there's going to be a lot of psychological discomfort that goes on for me, because those swings are going to have me underwater at some point in my trade. I can almost guarantee it. You're not going to get the trade-off exactly at the right moment to have a profit from it, and you're going to watch this thing ticking against you. And how does that affect you, right? Well, how far is it going to go? Holy smokes! What if this thing, what if there isn't going to be a 1, 2, 3 swing? What if it's going to go down? If I'm going to be down $2,000, $5,000 by the time that it turns around and goes in my favor or never goes in my favor. Those things are things that we avoid. What we like are predictable volatility movements. So, when there's earnings announcements, we know we've got our 2SD opening gap strategy. So some of you have taken that course. I know some of you guys are here today, and our mastery course on trading 2SD gaps is about one thing. We find 2 standard deviations of volatility, and we apply it to a gap in the morning. We look at it and we say, where does this gap put us, and what's the reason for the gap? Did the CEO of the company embezzle some money and he's sitting in a jail cell, or did he was in South America and involved in some crime? That's all happened, and he's sitting in a jail cell in Buenos Aires or something. It's all that's going to cause a distribution shift. That's not good volatility. Good volatility comes from things like earnings announcements, and we get a 2 standard deviation shift in terms of volatility in an opening gap, and then we know we're in the 95% confidence interval of the mean, 95% probability we're going to move back toward the average volatility. That's an opportunity for profit. These are the kinds of things that we teach our guys to look for. These are the kinds of things that we look for ourselves. Statistically reliable patterns that put you in front of the opportunity for a profit. When you get chaos, when you get unreliable levels in the markets, when you get these sort of random tweets or random announcements that shock the market and drive price incredibly fast, then what happens is a lot of people do the coulda, woulda, shoulda thing. They're sitting there, oh my God, NASDAQ, look at this, 40 points, 50 points, or Tesla or Amazon or Apple, or all the high flyer, they were really moving, and I could have been part of that. And the reality is you probably wouldn't be part of it, or you'd probably get in the middle somewhere, because you didn't know when the news was going to hit. The news hit, you saw something happening, you jumped in, now you're part of the volatility, and now you got a lot of decisions to make on the fly. And I don't like making decisions on the fly in general. So I like things to be very much pre-planned, and I like to know what I'm going to do before I'm going to do it. So being able to capitalize on good volatility and knowing when to avoid sort of chaos in the markets, that's what I think is going to keep you in front of just really good opportunities for profit. So fear in the headlines, geopolitical stuff, my worst enemy. So I don't trade any kind of, if we're talking, missiles, if we're talking tariffs, if we're talking, anything that's unpredictable that comes out of nowhere, I don't fool with it. So I also don't trade oil, and I don't trade banks. It's just my preference, because there's a lot of geopolitical influencers on those things. There's a lot of covariates, again, right? Mancova, the multivariate analysis of covariance. You have to figure out what you're trying to expel from your model so that you can figure out what's important and what's actually driving price. And 30 years in, I still can't figure it out for banking and oil and gas. There's just too many things: drillers, pipelines, oil services, right? Field services. All these things are impacted by lots and lots of covariates. I prefer to focus on things that are driven by a limited set of environmental data, right? Environmental stuff that comes in. So, when there's economic announcements, producer price index, consumer price index, run-of-the-mill stuff, manufacturing numbers, those things are very, very easy to account for. You know exactly what's going to happen in the market as a result of those announcements. We can go back, look at it historically. There used to be a great website that was like market history, and they gave you could do a look back and say the last time that producer prices came in at this level or this level of expectancy, what happened? Okay, the last 20 times that it came in, last 30 times that it came in. And you can build statistical models. I don't know if they're around anymore. I don't think so, but you can still do that kind of homework yourself. And you can figure out, all right, if I've got this number coming out in the morning, what's happened the last few times that it was in line, out of line? you met expectations, blew out expectations, and you can build a predictive model. Then you can go through and say, this is what I'm going to do in the morning if, right? If then. It's a bunch of very, very logical statements. So you're not guessing and you're not trying to read the chart on the fly. What you're doing is, I know what I'm looking for and I know what the reaction move is likely going to be. If it does this, I'll do that. If it does this other thing, I'll do this other thing. So, you know, you can prepare for this stuff and you can get out of the way of the chaos. So, you know, not to beat this to death, but you want to engage with rational behavior. So, you know, think back to the exciting people you've known in your life. The exciting people you've known in your life have probably been the people who got you into trouble. So, you know, I know from a lifetime of experience, you know, long before meeting Julie, that people who are very exciting can be a lot of trouble, and people who are stable and who are predictable and who have great personalities, those are people who make life better, right? So unpredictability out, life good. Unpredictability in, life bad. And it's the same with trading. So trading has a tendency to get chaotic at times. And if you can just convince yourself that what you need to do is take a day off, sit out the chaos, wait for the markets to settle in, wait for the markets to come to you, wait for rational behavior to return, then you're going to be way ahead of the game when it comes time to get in front of an opportunity for a profit. So some of what we do, as I said, is we trade the Magnificent Seven. And Magnificent Seven are, I'm going to say, they can be like your girlfriend stocks. And you've got Apple, you've got Amazon, you've got Google. Those three are going to be very steady personalities, very understandable stocks to trade, great companions. You've got Meta and you've got Microsoft. They're a little bit more expensive and they tend to swing more. Now they're not that far apart in price. Meta tends to swing much more. Microsoft tends to swing in smaller increments. Microsoft sort of stays in the boundaries, and Meta can have like big ranges and big true ranges that vary from day to day, makes it a little bit harder to understand. Tesla is a full-on borderline personality disorder. So if you get Tesla on a day that Tesla makes sense, that Tesla is stable, where you've done your homework and you've said, this is the volatility that I'm expecting in Tesla, this is where I expect the volatility to be in Tesla, and if it stays within these ranges, I'm interested in trading it, then you're off to the races. You got a great day coming up. If you go and get in front of a Tesla trade on a day that, you know, Elon Musk is a genius, but arguably none of us should have ever known him as well as we do now, because when he starts talking, the stock's personality changes. People don't know what to make of the things that he says. People don't know what to make of the opinions that he has, and it makes it super, super difficult, right, to go and wrangle in a trade and make a trade that makes sense. So, you know, it's just a situation where it requires some handling, it requires some skill. You need to have sort of a special psychology, a special skill set to be able to intraday trade Tesla, or even to position trade or you know, hold this thing in a portfolio over a long period of time. You got to be cut from a certain cloth to be able to deal with the volatility that it's going to hand you. You know, but on something like Tesla, on something like, you know, any of the Magnificent Seven, really, one of the keys to being successful is to figure out what's likely to happen after an event, after a chaotic event, after a big announcement. And, you know, that's something I'm going to get into here in a minute on a chart and show you, you know, how we handled Apple, how we handled Tesla after, you know, a bunch of the geopolitical stuff that we had going on over the past couple of months. So I'm going to focus on the tariff days. And these are trades that we set up with our guys. So all of our alumni join us in our war room every day, a Zoom discussion room where we talk about the trades that are coming up for the day. We put everything out there well ahead of time, entry, stop, target, and the list is posted. It's a spreadsheet. It's got things posted in yellow highlight if they're pending, and when they're going to go live, yellow highlight just we all know all the time what everybody's planning to do, including days where we're going to sit it out and observe what's going on in the markets. So on the days that we had the big announcements, what we were focused on was we're just going to see where the inflections are. We're not going to trade any of this stuff. We're just going to get set for the market to come back into normal trading. Then in the ensuing days, in the days that followed, what we did was identify the levels that we thought gave us clarity. We identified where patterns were starting to develop on the charts. And, in our trading, we focus a lot on pivot lines. We focus a lot on volatility bands that we deploy on the charts ourselves, where we'll sit down and figure out this is where the volatility is going to be. This is where it's, likely going to give us a profitable entry. This is where it's likely going to give us a profitable target. And then we get in front of those opportunities for profit in the following sessions. We don't do it when there's chaos in the market. So here's a prime example. So here's Apple. And you can see here that we've got some wild swings. So if you're looking at this chart, from the outside looking in, you're like, so these are great opportunities, right? This is an opportunity for profit just because there's so much range on it. Well, look at the first bar, opens low, closes high, big red bar, because there's a lot of volatility in that bar, a lot of sell side volume in the bar that actually, made that upside move. It went from $192 up to $200, on a stock that normally has about $1 or $1.50 in range around the open that we trade. So, do we want to be part of these swings where over the course of the session, you've got better than $10 worth of range on the stock, but you have to say, well, how much of this range am I able to capture at each one of these levels, and how the heck am I going to determine where to put a stop based on what's been happening in these swings, where to put a target based on what's been happening in these swings, and how could I possibly predict where that final trending move was going to start, where we finally got the price action in Apple that we're used to getting. So, it's hard to manage these things when the worst of the impact is happening. And if you can step away from it, right, you have a big headline driven day, you walk away, you come back the next day, and you see Tesla, right? I mean, sorry, it's not the next day, it's the same day on Tesla. This sawing is making me crazy outside here. Tesla, massive swings, right? $50 is the magnitude of the move. I'll move almost $35 right there in just the first few minutes of trading. And how in the heck are you going to go through, if you trade Tesla every day, then what you normally set up are bracket orders, or what our guys are normally setting up are bracket orders. We know what the typical range is. We know what the typical true range is. We know that if it gets into a pattern, then what we want to do is take profits with, say, $3 per share, have a stop loss that's maybe $1 or $1.50 a share. And if you set those same parameters on this day because you're used to setting them, you're dead, because it's swinging so hard that what you need is good luck on your entry, because your entry is going to take you straight to a profit target at $3 away or whatever. And what you need to not have is any kind of adverse reaction, right? That sort of tampers with your luck because the tiniest little swing on the chart instantly stops you out. And I can't tell you how many people, you know, I've spoken to over the last 2 months who are like, yeah, you know what, we want to work with you because I don't understand how to time these trades on, you know, the news out of the White House. And they're very disappointed when I tell them, well, you know what, the timing of the trades when the news is coming out like this, when the tariff news is coming out, is to just step away and wait. Because what you don't want to have is a bunch of psychological damage that happens because of your decision making. Because what happens with extreme moves is you do wind up feeling like you got lucky if you make a profit, and you wind up feeling like you're an idiot if it hits a stop. You wind up feeling like you don't know what you're doing. And you know, it's very disruptive in terms of having the courage of your convictions going forward if what you just did was made a decision based on some headline you read on your phone, or you know, something that blipped up on CNBC, and you decide, oh, I'm gonna go look at the chart and see what's happening, and you know, all of a sudden you see the thing flying, and now you've got an emotional response to what's going on. I tell people all the time, you know, this is not about emotion and intuition, being guided by emotion. This is about counter intuition. You need to be able to look at the markets and say, successful speculation is the art of anticipating the anticipators. That's an old Bernard Baruch quote. And you need to be able to figure out what the psychology of the other guy is about to do to what's happening in the markets. And figuring that out requires, like, that you don't have emotion in the game. So, you know, if you can just wait until the volatility subsides and then go through and put together a game plan, right, by assessing volatility daily and by going through and saying, well, now, what do I think is going to happen tomorrow? You can get very, very logical about saying, all right, look, Tesla had a massive move today, and that move was driven by headlines, and I think that the headlines are going to permeate what's going on in the market for the next couple of weeks, but now it's kind of baked in. Well, how do I go and figure out where I should put stops? Well, what was the average true range of a typical 5-minute bar during yesterday's trading? Maybe I take out the headline shock itself, but I focus on the rest of that chart and I say, where can I really expect price to go, both in my favor and against me? And then how do I say I'm going to be okay with what happens if I get in? So I figure out the stops and targets, and then I'll say, do I really want to be trading 1,000 shares of Tesla, or 500 shares of Tesla, or 100 shares of whatever my normal size is? Right? Maybe I want to cut it in half. Maybe I want to say, well, you know, if I'm looking at this true range and my typical stop is going to be $1.50, and now it's going to be maybe $3.50 or $4, what I'll do is cut it down. If I trade 100 shares normally, I'll cut it down to 50 shares. Or if I trade 1,000 shares, I'll cut it down to 250 or 300 shares. I'm going to figure out what is a comfortable way to increase the magnitude of the stops without increasing the magnitude of the capital risk to the account. And, you know, what it does for you then is when the next day's trading happens, it enables you to start being logical again. And logic is going to be the thing, right, that gets you to consistency, and consistency is the thing, again, that gets you to longevity in the markets. You have to be able to, I don't care who you are, like, if you can tell me what your best year was, you've already got a problem. Because I'll show you in a minute here, like, I've had the same year going all the way back to 1997. It's just year over year over year over year, the results are pretty much the same. It's identical. And our guys are doing the same thing. And when you hear guys say things like, oh, you know, it's 2008 was my greatest year ever because I was short the whole year. There's no way to predict that stuff. And there's no way to ensure that you're going to consistently be able to not just knock the cover off the ball and put up those same kind of numbers. But if you're doing something that allows you to focus on where the volatility is and where the volatility is likely to go, then, right, if you look here at this chart of Apple, now you got a different picture. So Apple opens the next day and it starts trading higher. Now we don't trade, we trade the open on Apple, that's a different strategy. And then we trade after the market settles in. So I watch for this next stretch of market behavior up to about 11:30 before I start making decisions about Magnificent Seven trades. And you know what you see here is those red lines are pivot lines. So you just go to in Metastock, if you're using the real-time version of Metastock, you're just gonna click on, you put an indicator on the chart. You're gonna use daily trader pivots, floor trader pivots. This goes back to when most of us weren't using charting software, you know, sorry to say, in the early 90s. And you would just calculate these things. You know, the central pivot is yesterday's high plus low plus close divided by 3, and then you get S1, R1, S2, R2. You can either go S3, R3. And we're looking at now levels of price action. Those blue lines there are the volatility bands that I've created based on previous day's price action. The red lines are the floor trader pivots. We also look at volume weighted average price. We look at anchored volume weighted average price. We look at a bunch of things, but this is the essence of it, right? So this is where do we think price is going? So if you look at the blue lines, those are my anticipated inflections. Look at those red lines, those are pivot lines, and look at what happens when we come to that first anticipated inflection, which overlaps with a pivot line. After a trending move lower from that pop higher in the morning, now we get this extension move all the way down to our next anticipated volatility band, the blue line. So we drew that. That's not generated by Metastock. That's generated by us having gone through and picked apart volatility in Apple. Where do we think the volatility bands are going to be? And look what else is there, right? So now you've made a move down to a pivot line. That pivot inflection is where we're saying that's a good opportunity to take a profit off the table. It's a pretty significant profit. You've made a move from $185 down to about $178 per share, and that's a nice opportunity for profit. And there's places on the way that we can also scale out of the position and take incremental profits. And we're doing it because we know exactly what we're going to do before we do it. It gives us the courage of our convictions, and it makes us feel like there's a reason we're doing the things that we're doing, as opposed to just, oh my God, it's taken off without me, and you know, I've got to get in on this. Then it moves down to our next anticipated inflection point. That's our next volatility band that we created. And then look at that, it moves up to that pivot that we just got out at, gives us another opportunity for a short, and makes a move right into that next floor trader pivot going into the close of trading. It doesn't have to be rocket science, right? You don't need so many indicators splayed all over a chart that you can't even read the chart. What you need is good, solid logic that tells you this is why you're doing what you're doing. And right, here's our borderline personality. Here's Tesla. So Tesla comes in that next day, and you know, sure enough, makes a big extension move higher. You're up, 20 something bucks, and then starts doing the same behavior. Tesla tends to move on its own. It tends to be a little less correlated to what's going on in the broader markets for obvious reasons, right? Again, we probably shouldn't know him. But once it starts making moves in the bands, once it starts making moves inside the pivots, you've got a very high probability that you can get on the right side of the position, right side of the trade. So it goes up here and it tags that upper pivot line. And, again, I'm just looking for it to do something that I can identify as trend-based going into like the 11:30 time frame. That's where I've got my sights set on boxing up. So if you guys watch, you can also go to if you go to traderinsight.com, there'll be a pop-up there for my daily strategy sessions. Right? I get on the Trader Nation stuff. I get on Trader TV every day and talk about here's where I think the Magnificent Seven stocks and the triple Qs and the spiders, diamonds, all that stuff. Here's where I think the opportunities are going to be. And it's based on this kind of analysis where I'm going through and I'm saying, well, at 11:30, what's the directional move that the market's making? And then am I getting a pattern move in the stock? So if you have the meta stock scanner, then right, you should recognize that little bar that we moved up to there, that's an infield fly bar. So that infield fly bar gives us a very strong indication of a reversal. So in our war room, in our Zoom room every day, the guys are all looking for infield fly setups. The only reason we're all there is just to, you know, keep each other in front of the opportunities. We're not trading penny stocks. We're not trading, you know, options. We're trading some future stuff based on the Qs and the NQ. We're trading some ES based on moves in the spiders. But we're looking at the charts and just trying to keep each other in front of these opportunities for success, these opportunities for profit. Infield fly bar, where is our target? It's going to be down at that next pivot line. If it gets, which is right below, right where the price moved higher from, we got up into a support and resistance level. We got up into a volatility band, set up the pattern. The pattern is one of the very, very highly statistically reliable patterns from around the horn. We know that, you know, infield fly is a favorite. And, you know, once it goes, it really goes. It gets us down to that first pivot line. If we got out there, that's great. That was our target. That's fantastic. If we waited for the next pivot move lower, then we got out, you know, when it got down into that next threshold level down around $237 a share. Picks back up again, bumps into that pivot from below. We've got a sustained downtrend. We've got the move into the pivot. The pivot is a place that we're expecting price to react. There's another opportunity for a short. And in this case, the short gets us right down into that next level of volatility that we were expecting to see, hits that next volatility band that we planned for, that we anticipated was going to be an inflection. And if you got from the pivot down to that level, you got another opportunity for a profit. And again, you're scaling back on the size on these trades, right? They're not $10,000 trades. They're not $1,000 trades. Probably they're trades that you've gone and made comfortable by limiting the risk based on the range that you're seeing on these intraday bars. Now you're back to your typical day, right? You've made the adjustments so that nothing is going to be outsized. You're not going to have outsized gains, but you're also not going to have an outsized loss that goes and wipes out your psychology. You've got another move lower after price came back up to the pivot, gets you down to the next pivot, down to the next volatility band. All these levels that you've identified ahead of time, right, are there and telling you what price is likely to do next. So, you know, it's much more to me like I was a musician for 30 years. I was a session musician. That's how I put myself through college and graduate school. And to me, trading is very much like music, right? There's a rhythm to it. There's a pulse, right? If this is an analogy you're more comfortable with. I use things like the volume weighted average price to tell me, am I on the right side of the market? Is the market trading above the VWAP and likely to revert down to the volume weighted average price? Volume weighted average price is where institutional traders are being rewarded for the trades that they put on. So it's very natural that you're going to expect to see price move back to that VWAP. Are we trading below the volume weighted average price and likely to have a pullback up to the volume weighted average price? Where is that in relation to those volatility bands that we've identified on the chart? Where is it in relation to the pivot points that we've identified? And then, right, what does the true range on because if the true range on a chart, if the average true range for the last 10 bars is going to be $2 or $3 and you're setting your stop at $1, you may as well just give away the $1. Just flush the $1 down the toilet because the market does not care how much you'd like to make or what you're willing to lose. It's all about what's happening. What are the dynamics that are driving price, and you know, where is price likely to wind up, either in an adverse move against you or a positive move that goes in your favor. It's not going to be determined by what you're comfortable with. It's going to be determined by what the market's been doing, what the market's natural reaction range has been over the course of the session. So, you know, I think you need to go through, I think everybody, you know, I tell my guys all the time, you take a look at what you're doing, you take a look at what you're not doing. Did you get to a price inflection that you had a trade planned for and then make the decision not to take the trade? Did that just happen to be when you got up and got a cup of coffee, or decided you had to stretch your legs or get away from the computer for a while? You know, what is it that made you decide not to take something? Or was there pending news, right? Was it a logical decision, or was it, oh, I'm afraid that if I get into that position, you know, I'm going to wind up losing $4, so I'm not going to take that position. And then you get back and, oh, it went to my profit objective. I would have wound up making $8. Oh, well, what I need to do is write down and tell myself, even 30 years into doing this, you know what, I didn't want to lose that money. And instead of scaling my position way down, I just decided to walk away from the computer, and now I feel like I don't know what I'm doing. So keeping track of these things is super important. We tell all our guys, you know, send us, well, like the videos, right? Send us a video of yourself, or send us a note, and, you know, let's stay on what it is that is putting you in front of opportunities or preventing you from capitalizing on those opportunities. And if you find yourself in a position of, I feel like I just made a bunch of mistakes, you need to go through and reset. Right? It's not time to you know, throw the computer out the window. It's not time to set the whole thing on fire. It's time to just say, you know what, I didn't do what I planned to do. I didn't do what I said I was going to do, and I need to figure out why I didn't do it. It's not really about, ultimately, it's all about, you know, are you making money trading? Are you not making money trading? But the reality is, it's about whether you are able to follow a plan consistently, and that's what's going to determine, right, whether you've got a long-term edge in the markets. So, you know, again, go through, isolate the two kinds of volatility so that you know what it is that you're looking for, and you know what it is you're looking to avoid. Use your tools, get in front of this stuff and say, I need to go and make shifts in my position sizing. I need to make shifts in the days that I'm going to be in front of the computer based on what's going on in the world. And most importantly, I need to keep track of those decisions and focus my energy on being able to stay psychologically successful. I need to be resilient. I need to be, you know, adaptive. I need to have a growth mindset. I need to be able to go through every single day, assess what I'm doing objectively, not be hard on myself. You don't want to beat yourself up in trading, because we've got this tendency, you know, to come down pretty hard on our mistakes and to feel like winning is winning and losing is losing, and winning's great and losing's bad, and if I lose, I'm bad, right? And I'm a failure, and if I win, everything's great. And then what will wind up happening in your trading is you take smaller and smaller gains in order to keep being profitable, or in order to book profits. You wind up taking larger and larger losses because you want to avoid that bad feeling of losing. So ultimately, right, my whole thing comes down to, I want to be consistent. I want to create a group of consistent traders. I want people to be able to go into the market and find the rhythm of the market and know when the market is behaving normally, and, you know, how it is that I can get in front of those things that are, you know, quote, normal, and how I can stay away from the days that the market is exhibiting some, you know, it's a bad actor, bad behavior, bad stuff going on. This is not for, you know, this is for maybe some really deep pockets out there who don't mind taking a giant bet on a big swing, but it's not for me, right? So I've got to go and stay on the sidelines, and I'm going to come back in and make sure that I've got some stable results as I move, you know, my business through year after year after year of market behavior. So, you know, I want to show you this. I mean, this is this year. And, you know, you can see that, I mean, the equity curve on top there is flat because, you know, we haven't gotten to the end of the year yet. It's just the way that this is charted. But if you look at this, there's a couple things to bear in mind. So January, we would have had a light trading month anyways because of the geopolitical stuff that goes around having an inauguration and having, you know, all these expectations and things that people think are going to happen in the market, things that, you know, reactions to comments that are being made. You know, in addition, I didn't have a lot of trades out there in January because my house burned down, right? So my stress also affected my trading in that I said, I'm under too much stress, you know, trying to get my family relocated and do all this stuff to go and say, I'm going to trade, you know, from whatever situation I've got going on right this, I'm just going to get in because I've had my guys were like, you know, my guys all said, geez, you know, well, not all of them. You're so lucky that, you know, you can just pack this thing up, take it on the road. And, you know, it doesn't even matter. You know, this thing would have shaken people up so bad and you could just sit down and start working again tomorrow. No. You know, I had to get my head back in the game. Just like when the market's chaotic, the market has to get its head back in the game. Look at what's happening in this equity curve, though, as the year is developing, and then look at what the equity curve looked like a year ago. This is a different market, right? So this would be during Biden. The numbers are the same, right? So if you look back to May, you see that for this time of the year, 2025 looks pretty much like 2024. Then go back and look at, you know, this is 2017. Look at May. Again, we're pretty much the same place. It's consistent. We're getting in front of consistent opportunities for success. You can look up top there. Those are all the patterns in around the horn. You can see how they play out year over year, right? We can go back again and look at, you know, the overall profitability, you know, shorts to longs. Shorts have been, you know, a big winner. The shorts have been a great place to find opportunity in the markets. The long to short ratio says that's where the opportunities were spotted. So when we went through, if you went through and you did the scans on Metastock, it's telling you, all right, there's more opportunity on the short side of the market, more opportunity on the short side of the market, more opportunity on the shorts than the longs. And over time, when you look at where the profitability was, it says, yeah, you know, we're not skewing things. We're not letting the psychology of, oh, somebody doesn't like to get short enter into the decision about how to trade. What we're doing is looking at this logically and saying the opportunities are in one place. The profitability tends to be in the same place. I'm running my business like a business. I'm getting in front of opportunities without letting my psychology impact what's going on. So, you know, that's the name of the game as far as I'm concerned, is getting a system in place that works for you, that gets you in front of the opportunities every single day that there is an opportunity, keeps you away from the threats when the volatility says stay out of the market. And, you know, if you can just wrap your head around that, and if you can wrap your head around psychologically, if you can say to yourself, you know what, just because I go to work every day doesn't mean I have to be at the computer all day long. I can assess what's going on and just say, you know what, time to step back, time to step away, let things settle in, and tomorrow I can come back and, you know, I can have another look at it. If you want to join us, if you want to come in and see what we're doing and look at the trading plans and all the blotters for all the trading plans, so not just those results that I showed you, but everything back to 2006 is on the site. So you can pull up every single trading plan, look at it, run your Metastock scanner for tomorrow, then go through and look at the trading plans that I'm publishing for tomorrow. You've got access to all that stuff and say, okay, of the stocks that Metastock scanned, of the stocks that came up on the scanner last night, right, which ones did Adrian pick? Which ones did he put on his trading plan? Why did he select those particular ones? Why, you know, out of the group that Metastock put up there, how did he pick the stop? How did he pick the target? And then what's the result? It's a really good place to sort of hone your skills. It's a really good place to learn a bit about what we're doing, and maybe if what we're doing is for you. traderinsight.com/trade. You just come in for 2 weeks. There's no credit card or anything. You can just take a look at what's going on. If you're trading intraday, there's a good chance you'll want to stick with us. You'll want to do the bigger training that we do, the boot camps, and some of the as well as some of the online courses. And in the meantime, if you've got questions, if you're watching the recording of this and you have questions, you can send me an email, adrian@traderinsight.com, or you can send me a text at 310-804-2248 and just let me know you want to talk. And then, we can just do a phone call. So just add that number to your phone book, Adrian, and that way when I call you back, you'll know it's me and you'll take the call. All right, so that's it. That's all I have. I barely left any time for questions, I guess, as usual, but if you have something, I'd be happy to answer. And if not, then I'll let Jeff take over and move on. And sorry about the noise here. There's nothing I can, yeah.
Oh, that's fine. You sounded great to me. I didn't hear a lot of background. I can't hear me though.
I hear you.
All right.
Yeah.
Thanks, Adrian.
Absolutely.
All right, let's go ahead and do that. Let me go ahead and be the presenter here real quick. Okay, and I want to talk for just a minute about the add-on that we've made with Dr. Manz around the patterns that he's talked about. And I have a list of the patterns that are included here: the fastball, the line ball, the line drive, the backdoor slider, the double hitter. You can kind of read them all. He was talking about quite a bit about the patterns he uses, and they're all part of the scanning that he uses inside of Metastock, and they're all part of this Metastock add-on, which is cheap, very, very affordable. They include explorations, scans, commentary to explain the patterns to you, all of that kind of stuff that you'd expect from a Metastock add-on, and it's ridiculously underpriced. It's only $299. As part of the conference, it's going to be $249. If you need Metastock, we'll give you a copy of Metastock as a trial to kind of use it. You can find out why it's been rated #1 in its price category for 32 years in a row. Of course, we'll give you a 30-day money-back guarantee on it. So if you'd like to do that, give us a call, 800-882-3040, metastock.com/saleschat, or metastock.com/conf-promo. And Greg is going to put all of that information in there. $299, 30-day money-back guarantee. If you need a trial to Metastock, you get it, all part of that. So very good. In any case, as we kind of move on to the next one, I want to talk a little bit about our growing community, the Traders Forum. You can join for free. You should do it right now, thetradersforum.com. There you can live chat with other traders, share ideas, learn about technical analysis in the markets. It's a growing community of traders, helping other traders, giving other traders ideas, kind of giving their thoughts, their feedback, all that kind of good stuff. Thetradersforum.com. Greg, we are going to give away a prize, but let's do it very quickly because we are right on time.
Okay.
So let me go ahead and actually go to the conference prize list. And what we're going to do now is we're going to give away Altos Trading's weekly live market strategy sessions. This is going to be a year of the strategy sessions from Altos Trading. Jeff Tompkins from Altos Trading is going to do those. He talked about trade trend price action pivots earlier this week. Runs a hedge fund. Very, very good service to kind of talk about the markets and talk about stocks that he's interested in. It's normally $550. That's going to be the value for it. And we are going to give it away to one lucky winner right now. Are you ready, Mr. Fluid?
I am ready.
Okay, I'm not. I was stalling. Oh boy. Okay, we're going to do this one a little bit different because I apparently closed my sheet. And so what I'm going to do is, it's important if you have questions to ask them. It's important to kind of come and do a lot of comments. And we like to reward audience participation. So we're going to actually I'm going to open up all of the questions right here, Greg. And then it's been kind of quiet today. So if you have questions, ask.
It has been quiet today.
I'm just going to have you tell me to stop, and then we'll announce the winner. And then Sunny Harris will be ready to go. All right, here we go.
Stop.
I'm just scrolling. Tell me when to stop.
Stop.
Reg E asked a little bit about the red-green knockout earlier. if you remember that. Reg, you just won the prize. So I'm gonna go ahead and copy your email address. I have it. You don't need to get anything. I'll email you, or actually, Trade Trend will email you next week to kind of help you get that prize. So thank you very much. I'll see you in an hour. All right. Sunny Harris, a good friend of mine. I've been really impressed with Sunny Harris and like the calls that she's had for the Dow, S&P. I follow her on Substack. Obviously, get a chance to work with her very much, quite a bit, and I really think she's a great trader, and I've been personally very impressed with like her wealth of knowledge in the markets. So that is the way I'm going to introduce you today, Sunny. How are you doing?
I'm doing great, Jeff. How are you doing?
I'm doing great too. I'm going to go ahead and make you the presenter here, and it's going to ask you if you want to share your screen.
Okay, let's see, show my screen. There we go. And let's see.
That's it. I can see
One
it.
more thing. I need to, where's my video?
I saw you for a second. I can actually send
I was
it.
up there for a second. I butted in, I'm afraid.
Oh, you're fine. We're always good to see you. I just sent you a little webcam request. So
Yeah,
it'll
I
ask
got it. Thank you.
webcam. There you are.
Thank you.
Awesome.
Now, where's my background?
There's
You
no
can
way.
see all my file cabinets, but normally I have my books behind me because I took a picture of my bookcase
Uh-huh.
and I use it as my background.
With this
Oh, well.
version of Go
We'll
to
look at file cabinets today.
Yeah. You might need them too. We will actually.
I'm an organized Virgo.
Yeah, I was actually, when we upgrade to the new version of GoToWebinar, which we haven't yet because we're kind of hesitant because everybody's comfortable with this version. But I understand the new version of GoToWebinar, when we migrate it, will allow you to change your background. So
Okay, cool.
anyway, I'll get out of the way. It's your turn.
Excellent. Thank you. Thank you. You see my screen?
Yes, looks great.
Okay, then we're ready to go. I'm going to talk about the business of trading today. I mean, people talk about the psychology of trading a lot, and they talk about technical analysis a lot, but they don't much talk about the business of trading. So I'm going to give you some tips here on the business of trading. My passion, besides trading, is in helping beginners learn to trade. And of course, intermediate traders. I have people that have come to me that say, I've been trading for the last 15 years and haven't made any money yet. So I love to help them. So this talk is for traders who've not yet become wildly successful. I'd like to help you get to that level. People who've not traded much and want to learn, and folks who want to improve their trading results. I love to teach and mentor and consult. I love to help people. So here's my phone number, and this is my cell phone, 760-908-3070. And I answer it myself. A salesperson doesn't answer it. It's just me out here. So trading should be ultimately a business. It shouldn't be for fun or games or a little spare money. It should be a business. Anything less is folly. And you need to know, of course, that trading is a solitary endeavor. It's usually just you and the computer, you and the monitor. And we don't have a lot of employees in the cubicles next to us or any of that sort of thing. It's just you against the market. You can do it with no employees. You are the manager. And here are the disclaimers. Basic rule of thumb here is do not trade with money you can't afford to lose. Always be careful of that. If you have trouble earning a $1,000 bill, then maybe this is not for you. Your capital is at risk when you invest. You can lose some or all of your money, so never risk more than you can afford to lose. I have the full disclosure on my website. My website's at the bottom of every slide, moneymentor.com. My phone number is at the bottom of every slide, so you can see that and give me a call, send me an email, sunny@moneymentor, and let's get in touch. So I'm a professional trader, and I have been for over 44 years now. I trade futures, and I trade stocks, and a little bit of crypto. but I do not trade options. I found out real quickly that I could lose money consistently trading options, so I gave that up. I'm going to tell you a little bit about myself so you'll know why I'm qualified to give this talk this morning. But first, let me show you how I trade. I've been trading since 1981. It's 44 years, through the 41% crash of 87, the 38% crash of 2000, the 52% crash of 2007 to 2008, as well as the 38% COVID crash. And the next one. Nobody knows when the next one is. We could be in it right now. We never know. And I trade the S&P 500 futures contract on 1 and 5 minute charts. I've heard people say it's the most difficult market to trade, but I think the NASDAQ's more difficult. And that needs to be changed to a 44. I've been doing it for 44 years. I do have long-term stock holdings. I'm in Palantir, NVIDIA, and Zoom right now. So long-term to me looks like a week or more because in the S&P I trade 5 minute charts. So holding a stock for a week is long-term. And a little bit of crypto. Bitcoin went over $100,000 today. On my website, moneymentor.com, right here at the bottom of the screen, if you join, membership is free. If you join Money Mentor, then you can get the PDF of this talk, and if they give me a replay, you can get the replay. I also have a free podcast called The Sonny Harris Show, and I've interviewed, I think it's 53 famous traders now. I also have a Substack called Where's the Dow Going Next? When you get the PDF when you go to Money Mentor and get the PDF, it's under Appearances. And if you get the PDF, these things will be clickable. At the end of this session, I'm going to give you 1 week free to my live trading room, Trade Along with Sonny. And it's every morning of the week at 7:30 a.m. Pacific time. And it goes for 1 hour. I was rated #1 trader twice, 2 successive years, with 365% profit and 178% profit the next year. Last year in my live trading room, we made 482% for the year. And I just used Sunny Bands and my dynamic moving average to do it. You can see right up here at the top, highlighted in pink, that's #1. I grew up poor in Appalachia. I mean, we had dirt floors and an outhouse. But now I have 3 degrees in mathematics and another degree in photography. I've been programming for 57 years since computers didn't really have programming. The only thing we had back then was COBOL. I've been trading 44 years. I was a systems programmer for Lockheed. That was my first job out of school. And I helped found a little company called ISCO, which is the world's leader in computer graphics software. And the PC version of it was called Harvard Graphics. When I was 30, I retired. I just sold my shares of the company and retired and traveled the world. And I did what I thought was the smart thing. I gave my money to money managers, and they lost $75,000 in 3 weeks, and I figured I can do that poorly on my own. So I taught myself to trade. I started out reading 117 trading and economy and investing books, and now I've read 749 right now. And for the first year of watching the market, I just learned the rhythm. I watched the charts. I tried to see, is there a pattern to this? Is there something I can translate? So I didn't trade any for the first year. I just watched and learned. I've written 5 best-selling trading books: Trading 101, Trading 102, Electronic Day Trading 101, Getting Started in Trading, TradeStation Made Easy. And then I wrote a book with Linda Blair, my friend, called Going Vegan. And then Using Easy Language 9.6 with Murray Ruggiero. And in 2023, Sam Tinnis and I released the definitive guide to TradeStation's easy language and OOL programming. And I've written articles, of course, for all the major magazines. Here they are. Here are the covers of the books. And the cover of my magazine. I published this magazine for 8 years back in the early 90s. And here's the newest volume. These two books together are 1,300 pages, so it's really been a work of, it was hard. It was just hard to do. We've got some quips and quotes here. If you go to my Money Mentor site and you look right at the top, it says quips, and you can read deep, unsolicited emails about things that are important to other people. Some customers, some not customers. Let's see. Until Sunny Bands, I hadn't found indicators that could say I could replace my job, and now I have. Very nice comments. I also have a Facebook page where I post things of interest, and you can get my predictions for free. I sometimes post them on Facebook. Just look for Sunny Harris. And I also post them on Substack. This is the link to my Substack. TCRG was the name of the magazine, Trader's Catalog and Resource Guide. And it's called Where Will the Dow Go From Here? And we've been pretty accurate. Every day or so I post my latest prediction, and we've been pretty accurate so far. The Dow is right now up at the upper outer sunny band and could have a little higher to go, and then I think it's going to turn around again. The Substack's free for now, and I also have customers all over the world, so don't be afraid to call me. I answer to WhatsApp and Skype and my cell phone. Now I'm going to show you how I analyze things. In order to make a six-figure income, let's say 120 grand a year, that would be a good trading year, wouldn't it? So divided by 12 months, that gives you $10,000 a month. That's a little easier to envision. You know, it's hard to manage how you can go from 0 to 120,000 if you just have that as your goal. So break it down. 12 months is 10 grand a month. 10 grand a month divided by 20 trading days in a month is only $500 a day. Now that makes sense. You can make $500 a day, but it's really hard to envision it if you say it's 120 grand a year. So $500 a day is 5 trades of $100 each. That's it. So you have to keep that micro goal in mind while you're working. S&P usually allows for $1,000 to $3,500 per day potential if you're going long and short just one contract. So the money's there. It's just waiting for you to grab it. So that's part of the plan. But before you start trading, you've got to determine your goals. You've got to divide the goals into attainable dailies and develop a written plan. You need to have a list, a recipe, a list of rules, a guide map. You've got to have something written down. This is the way I trade, and do the same thing every day. So plan your strategy, test your strategy. If the stats are good, keep going. If the stats are not good, go back to number 1 and start again. There's only one reason to trade as far as I'm concerned, and that's to make money. If you're doing it for any other reason, I would dare say you're not profitable. There are things like excitement, the challenge, making a few extra dollars to help out the family, the thrill of the win. There's lots of reasons that people trade. Not all of them are good. You want to trade to live on it? That's really hard. It's really hard to know that every time you have a loss, you're taking away from your living money. So that's too much stress. If you made $192.46 per day for 1 year, that's what it would look like. So I keep a chart of my trading in the live trading room, and I draw a line on it so I know where my goal is. And this is how many dollars per day, and it adds up to 50 grand a year. So keep the chart. Keep a chart of your trades. Know where you are and what you're doing. I keep a chart of just about everything. And if you keep the chart every day, you're going to be more likely to make the goal. I'll put a spreadsheet on Money Mentor for you to download so that you can have my trading room spreadsheet to work from. And if you just become a free member to Money Mentor, you get access to the private areas of Money Mentor. You have to fill out a little form and send it to me, and then you'll be entered as a free Money Mentor member with your own password. If you're a lone trader, who's your audience? You've got to know your audience. The audience is you. If you're doing it for others, obviously your audience is them. If you're doing it like I do, daily, live, your audience is you and them, because I do it in front of people. So as I'm doing it, they're watching to see how much money I make, and it's kind of nerve-wracking, to tell you the truth. There will always be losses. We all have them. So in your projections, be sure to account for them. If you plan to make $200 a day, you probably should allow for making $400 and losing half of it. So $200 a day is 400 divided by 2. And keep track of the details. Be sure to account for commissions as well, although they're very low these days. When I first started trading, it was $50 aside for the big boy S&P, and the margin was 50 grand. So it's come a long way, and it's next to free now. I pay $1.20 aside now for my brokerage. Stocks are free. Futures are $1.20. Stocks and ETFs are free, actually. There's zero commission. Stock options are 0 plus 60 cents per contract. And the margin requirement is among the lowest available. Keep track of your expenses, because remember, this is a business. Commissions and other brokerage fees are expenses. Slippage is an expense. Office space is an expense. Even if you're working out of your home, you can write off whatever percent that office takes up on your taxes. And we have office expenses. You've got to get computers, you've got to get software. There's lots of things that are part of your office expenses. I already said that, computer expenses and software expenses. And of course, taxes, because if you make a profit, you're going to pay taxes on it. A retail business is happy with 10% profit per year. That's a good year. But I hear all the time, new traders want to make 100% per year or 30% per year. And that's next to impossible. I did a little survey once. I had a book of the 2,000 top CTAs in the US. And of those 2,000, the average was 0. You average all 2,000 CTAs, that's commodity trading advisors. So if you average all of those together, they make nothing. If I take the top half, so the top 1,000, the best ones, they make 10% per year. And the top half of that, which takes you down to 25%, which is the cream of the cream there, creme de la creme. And they make, on an average, 30%. If you make lots of trades, like I do, then you need something like TradeLog, which is a little software program that you can export your trades to, and they do all your statistics as well as your taxes. And I think it's $359 a year for that. I've had it for 4 or 5 years now. If you make fewer trades than that, a spreadsheet will do just fine. You've got to keep up with it, though. You can't let it lapse, or when you get behind, you just quit working on it. The reports from your platform, TradeStation, MultiCharts, NinjaTrader, or Metastock, should be sufficient. Here's my trade along with Sunny log. This is how I keep track of my trades every day, profit or loss, profit or loss. And there's the performance trade chart for this year so far. We've had a really rough year. I call this area Trump chaos because after Trump took office, we had all kinds of chaos in the markets. Every time he'd open his mouth, something would happen. And it took me a little while to get used to the frequency of the trades because they're a lot faster now and a lot less money. But we're up 99%. If you were someone new and you wanted to learn to trade, I would try to discourage you. 90% of all new traders wipe out their accounts. So why would you want to do that? And what would make you think you could be in the top 10%? It's a pretty dangerous profession. And like I said, you've got to be prepared to lose money. Don't trade with money you can't afford to lose. And proceed with caution. So how much is enough? How much can you make and how much is enough? How much should you plan to make? And you have to ask, well, how much is available? So we have a new indicator in Metastock called PHW, which stands for potential hourly wage. We're going to look at this for a second. We're going to look at the SPY to see how much is available. Because if there's nothing available, if you're trading lumber, you're not going to make any money at it. Choose something else. Potential hourly wage, PHW. With this, we can compare different symbols, futures or stocks or Forex or whatever you want to check out. And it gives you the ideal amount of money if you caught it makes yellow dots on your chart. And it gives you the ideal amount you could make if you caught all the dots. And then I take 60% of that and call it the PHW. So I figure I can leave 20% on the table getting in, 20% on the table getting out, and keep 60% of it. So see these yellow dots? That's PHW. This is a new Metastock indicator. It's not quite ready for release, but it will be there soon. The channel you see on this chart is sunny bands. And we've got a purple and a gold line in the middle. That's my dynamic moving average. And then 1.2 and 2.0 average true ranges away from that dynamic moving average. If gold is on top, the bias is to the upside. And if purple's on top, the bias is to the downside. So that's as simple as it can get. And at the bottom of the chart, we have my dynamic moving average histogram, which is the difference between the gold and purple lines. It takes this one and subtracts that one, and then these are small numbers that show you how far apart the lines are. The details on the SPY, which are in an expert advisor on Metastock, are buy and hold. It's $262 on that chart. Ideal, which was $3,083, which is a lot more than $262. PHW, which is 60% of the ideal, as I said. So the possible is $1,850 on that chart. 73 trades, and it was, what's that, almost 5-year date span. Here's a spreadsheet that shows you the same thing. The yellow column is the PHW. And it's cool because you can double click and sort them highest to lowest or lowest to highest and find out where's the most money. That's what we're interested in. Where's the most money? So the way I started years and years ago was I had a software program. I had Metastock, I had CompuTrack. I've had them all. I had Genesis Navigator. I had I can't remember the name of the other one I used, but I've used them all, and they all provide a certain number of indicators that are just in the software, moving averages, MACD, RSI, that kind of stuff. So I examine the available indicators on my charts to see what is true. I'm always asking what is true. So you can put it on your favorite chart, and if you don't have PHW, marking the turning points with the yellow highlighter. So you just take a yellow highlighter and mark the significant turns, and then you have to choose the entry price and choose the exit price and subtract them to get how much money for each trade. So it's a little bit of a pain in the rear, but it's mandatory. You need to know how much money's on the chart. So you write down the values of the P&L, or you put them in a spreadsheet, and you're constantly asking what was true at those yellow dots. Of every indicator in your software, what was true? So you've got to test all the possibilities. I'm really big on testing and proving strategies. And keep a comprehensive log of your work. So we've got all kinds of indicators. I'm just giving you a few here. There we go. Just keep on going. That's just all kinds of indicators for you to measure the market and ask what is true. It's a long list. So with moving averages, this is two simple moving averages on this chart, which is the SPY again. And you can see the red lines on top, that's the faster moving average. The blue line on the bottom is the slower moving average, and you can see where they cross over. And you have to ask yourself what is true at each of these crossovers. So right here is where this one crossed over. So you'd be going long at this level. You would get in sooner with sunny bands, but this is the crossover of the simple moving average. So it crosses over there, it crosses over here, it almost crosses here, crosses twice, 3, 4 times up here. So with all those back and forth crosses, you enter what I call whipsaw. So you're constantly giving back the money that you made during the trending periods. Let's look at MACD, same way. What is true? Look at the yellow dot, compare it to the crossing of the MACD and see what is true. Try different inputs. Optimize your inputs so you can see where the money is. RSI, same story. Do you buy at 80 or sell at 80? Do you buy at 20 or sell at 20? You've got to ask what is true over and over again. ADX, there's another popular indicator. So you can see the positive DMI, the plus DMI, and the minus DMI, and then the red line is the ADX. I used to use this as a confirmation of my signals. When the ADX is rising, it tells you the market is in a trend. When the ADX is falling, it doesn't say which direction, it just says not trend. So there's trend and not trend. And I would use that to say, eliminate the whipsaw trades and just look at the trending trades. Now with sunny bands, what is true? Let's go back one. So what is true with sunny bands? Well, when the market is at the bottom sunny band, the lower outer band, and turns red, and turns green, then that's a long signal. And we write it up to the top band, turns red, goes down, that's a sell signal. It hits the flat DMA, we know to get out because flat DMA means danger, danger, and we go long again. So these are really accurate trades. At least they work for me. Here's another one where you can scan all the stocks. This is the NASDAQ. NASDAQ 100 here. And you can see that if you look for 3 moving averages and you want the stocks that are all above the 3 moving averages, it'll tell you. Sometimes that's just a few stocks if we're moving down sharply. And in a nice bull market, lots of stocks above the 3 moving averages. So these are the rules I use in my own trading. And remember that they're for educational purposes only. I don't give advice. I'm not a trading advisor. So basic rules level 1. I enter long when red candles have been moving downward. So I should show that, but right over here to the left, there were red candles moving down, and then they turn blue and move back inside the bands. We go long. And when I say if price confirms, I mean that price has to, if you're going to go long, price has to be moving up. So you want price moving up before you're buying. And then for shorting, we've got blue bars coming up. We touch the upper outer band and turn red, and we go short. Now that's the simplest form of the instructions. There are caveats to that, and here's one of them. The DMA, the purple and gold lines, adjust themselves to market conditions. So I don't know what the input values are for this indicator. It prints its own values. It calculates them using work that I did in my master's thesis. And it does a great job of staying out of whipsaw. Now, the black line between the two in the center here is the average of those two averages. So the black line's the average, and I call that the midline. So if the midline is flat, and that means moving sideways, you can see visually, or you can buy one of my indicators that shows that. So if that happens, I don't expect price to move very far beyond the midline. In fact, it often acts as a barrier, and that's why I call it danger, danger. You can see on this little chart, it was moving up, it came up to the DMA and turned around and went back down. So it does go above it a little bit, see if there's anything up there, and then it turns around and goes back down to the lower inner band. Now the third level of rules, which you're applying to everything as you're thinking about this, is if gold is on top, the bias is to the upside. As long as price stays up here between the two outer bands, stay long. So if gold is on top, stick with it until right here where the gold line is penetrated, and that's where I would exit this long trade from back here all the way up to there. Likewise, if purple is on top, the bias is to the downside. So I like to stay short, stay with the trend until it's penetrated right over here. You can get sunny bands for free. It's a little expensive, especially compared to other MetaStock offerings. But if you keep in mind that I have users all the time emailing me to tell me that they made $7,000 on their first week trading with the Sunny Bands trial, that's certainly enough to pay for the indicator. 1 week of it for free. So if you want to put Sunny Bands in the chat window, I'll pull out the chat window here so I can see it. If you put Sunny Bands in there, Jeff, can you keep track of these people if anybody actually signs up for it? So if you put Sunny Bands in the chat window, then I can send you a free copy, a free 7-day trial of Sunny Bands. You can see if you like it. I do 2 videos while we're doing it. So we do 2 Zoom calls. So the first one is to set up the indicator and show you how I use it on your chart. And the second is live market trading, so you can see it on the hard right edge. You can text me Sunny Bands at 760-908-3070. That's probably the easier way to do it for me. Oh, and also tell me what platform you use. I have these indicators available for MetaStock, TradeStation, Master, Multicharts, and NinjaTrader. So I need to know which one of those platforms you use. Also, if you'll tell me your name and your email address, I can send you the link that way. It's free for 7 days, free orientation and instruction. I don't think any of the other developers give you free Zoom calls. And yeah, and live session, Zoom call during the live market. So I'm going to remind you, this is what I did last year, 482%. This year so far, that's what we look like. 167% out of not quite 5 months. I do have a free live trading room. You can get 2 guest passes before you subscribe so you can see if you like it. The free one is Wednesday mornings at 7:30 a.m. Pacific time, and it goes for 1 hour. This morning, what did we make this morning? 2,000 something. So to get your guest pass, you can go to moneymentor.com/tradingroom.html, or you can text me guest pass. And I'm going to give you here a 99-second live trading replay. This is actually in my trading room. And you can see I don't talk a lot, but I focus on the trading. So here's the disclaimer. And that's my theme song. You're in the money. And the trade
With the
times.
flat DMA with gold on top, I don't really expect it to go much lower than the DMA. If it goes down and closes under the DMA, then I'm short. Like 1 minute Nasdaq was going straight up.
No, I keep, every time I touch something on this.
Look,
stops.
there's it's trying. Let's see what this one's doing. Come on.
Order filled.
Okay. What I'm watching right now to see if that's going to go above this inner band. And if it does, seems to me like it's going to move even further up.
Order filled.
There we go.
Good job.
Thank you. That was a perfect exit on that trade, wasn't it? Sure was.
Yeah. Yeah, it was. I've taken 2 of them, son.
Have you? Did you make any money?
Yeah.
Excellent.
Yeah, absolutely.
Okay, so that's a quick overview of what the trading room looks like, and you're free to ask questions or ask me to show a different symbol. I primarily trade the E-mini, so that's what we're looking at. But remember, ask what is true to develop your strategy or strategies. Create a detailed written plan. If you can't specify your rules succinctly, then you really don't have any rules. I used to do live seminars, 3-day seminars throughout the world. And one of the things in the early part of the class is I would take a loaf of bread, a jar of peanut butter, and a jar of jelly, and a knife. And I said, I want everyone to write a recipe for making a peanut butter sandwich. So yeah, right, they thought that was kind of a silly exercise. But then I took the recipes back and I looked through them, and one of them said, open bread bag, get out 2 pieces of bread, spread the peanut butter on they didn't tell me to screw the lid off the peanut butter. They didn't tell me to use the knife to get out the peanut butter. So I reached in with my hand and got some peanut butter and spread it on the bread because that's what the recipe said. So you need a detailed written plan. You need to include your expenses. You need to test your plan for efficacy. Does it actually make money or not? Does it have a positive mathematical expectation? So you've got to test your plan to see if your rules work, and then stick to your plan. That's the psychology of trading. Stick to your plan. If you have a winning strategy now, and you can amplify your returns significantly by using my Ultimate F spreadsheet. So I have tailored this after Ralph Vince's optimal F equations and made it so that it doesn't have the kind of drawdown that Vince's program does. But without a winning strategy, you can't compound your trading. You'll be compounding losses. So you've got to have a series of trades that are positive. Bigger losses just make bigger losses, so don't compound that. But with a winning sequence of trades, you can judiciously compound for great success. Let me show you. With Ralph's Optimal F, you end up losing on your largest loss, or largest contracts held, actually, that should say. So you can, and it's true of Ultimate F as well. You will lose on your biggest position, but you have much less exposure with my equations. Let me show you what this looks like. So this is an equity curve with one trade, one share, one contract. So we're going from $0 up to, what's that, about $85,000, and that's a year worth of trades. But using the Ultimate F spreadsheet, that's what it looks like. So yes, there's drawdown. It happens when you have a reduction in your profits. That it will happen. But look, instead of 85,000, we're up almost to 600,000. So it's worth putting some money back for margin calls and compounding. You can call me anytime. So if you have questions or you're interested in anything I've talked about, give me a call at 760. Jeff, you have it in there wrong. You put 706. So it's actually 760-908-3070. I answer the call myself, and there are no salespeople here. Here's my website. I have a new logo, though. I have a better logo than that now. And the programs that I have for sale, I developed them all for my own use in my own trading. I didn't develop them to have something for sale. That just occurred to me after I had them, that maybe other people could benefit from them as well. So they're my stuff, and I make them available to you as well. I also show you exactly how I use them. And if you want to go look at moneymentor.com/order_form.html, you'll see everything I've got to offer. It's also descriptions are available if you go to moneymentor.com/products.html. And I don't hold anything back. I don't keep the special secret sauce for myself. I tell you exactly how I do it. And that part's all free. And then you have access to me for life. You can give me a call with questions. On my websites, you'll see that I've got several. If you're a member, you can go to this page, and it shows you that I've got several little webinars that I did. I did a 4-week strategy trading forum, free for members, of course. And then I did a technical analysis forum. And it's not too late. You can get them too, and you can access the slides and the videos if you become a member of Money Mentor. And then I did an easy language forum, but it's not free. It costs. And there are 5 sessions teaching you how to use easy language. I should do one of those for Metastock. I do a live trading room every day by subscription. It's called Trade Along with Sunny. I call it TAWS for short. 7:30 a.m. Pacific time for just 1 hour. And remember, 1 hour a day, and I made 482% last year. So just text me TAWS, and I'll get your information and send you the link. And there's my phone number once again. 1 week free for attendees. So if you want to have access to my live trading room every day for a week, text me TAWS and tell me you want the free week. And that's normally $395, so you get something for free there. You can come every morning. And if you want to see my free predictions, here's my Substack link. TCRG Sunny is that Trader's Catalog and Resource Guide. And you go there and see, I do it. It's called Where Will the Dow Go From Here? And I do it just about every day. Not quite. I haven't posted one yet today. So where will the Dow go from here? I offer education and consulting, easy language programming services, mentoring, distance learning. I have a distance learning course called Solving the Puzzle, and the indicators I use myself in my own trading. I use them every day. I'll show you exactly the charts that I use and how I do it. So the special offer is, if you order this before the end of this coming week, today's Thursday, so I'll give you the end of next week, 20% off all indicators and mentoring. Now, I offer indicators in bundles. My first bundle is 10% off. So this week, I'm offering 20% off for anybody who tells me they attended this conference. Oh, and I also have a new 3-month payment plan. If you think it's too expensive, we'll divide it up into 3 payments and you can trade it over, pay for it over 3 months. You want the free trial? Call or email. Or text me trial. Got a lot of things you can text me to let me know what you want. How about questions? Do we have any questions? Let's query the attendees and see.
We have a lot of people saying Sunny Bands in the chat. So,
oh, we do?
Yeah. David, Dave, Jerry, Shekhar, and another David. Shekhar wants to know if you support or if he can use TC2000.
TradeStation, Metastock,
go
multi-charts, and NinjaTrader is all I have.
Okay, and we can of course give you a free trial to Metastock as well, Shekhar. So we will have somebody reach out to you to help you get that set up.
Can you make a note of the people that puts Sunny Bands in the chat? I don't have access to the chat.
You do now, but since what I'm going to do is have we've got a handful of them, and what I'm going to do. Oh, you don't? Yes, you do. You should be able to see the chat. We have a handful of people, and I'm going to have our sales guys help get set up with the indicators, the software, and then we'll let you know whoever is on the 7-day trial.
Oh, now I see the chats.
Yeah, I turned it on for you.
I don't think we have a certificate to give anyone.
Oh, you're looking at chats from way earlier this morning.
Oh, okay.
Yeah. You're looking at all of them for the day. I think we've covered all of the people that have chatted recently.
Okay, fantastic. All I need is your email and your name. Text me whatever it is you want, trial or Sunny Bands or TAWS. So if you just text me that to my cell phone. Do we need to give the cell phone one more time?
No, and I got it right this time, 760-908-3070.
You got it.
It's right there in the chat, yeah.
Excellent.
The first time I had 706, but I blamed dyslexia.
Slide Dexy.
So there you go.
Event, Jeff. I've really enjoyed talking to your audience.
I've been very impressed, I have to say, with your Dow projections. I've been subscribed to them, and a great job with those.
Thank you.
All right. Very cool.
Okay, give me a call. Here's my information again. I appreciate this. I appreciate your attendance, and I'd love to hear from all of you. Let's get some Metastock Sunny Bands going.
Awesome. Thank you very much, Sunny.
Thank you, Jeff.
All right. Let me go ahead and do this. Also, let me go just kind of talk a little bit about how to get the 7-day trial. So let me go ahead and make me the presenter real quick. I wasn't quite prepared for a full 7-day trial. This is the first time we've done it. It's going to be pretty cool. But I want to kind of talk a little bit about what Sunny Bands are and talk about putting your money where your mouth is, like giving a free week of the actual mentoring service, a free week of the indicators, like you just play with them. It speaks to a lot to how it could be valuable and how valuable it is. You know, she's confident enough to just, if you try it, you're going to like it, period. So anyway, Sunny Bands includes the DMA. She talked a little bit about the bands and how they work. She talked about the DMA histogram, the slope. All of these things are included in the Sunny Bands toolkit. And in addition, of course, there's scanning. You can go in and scan for congestion areas, entry signals, trade setups. You can use it on any market that you want. Comes with an expert advisor, a scanner, a commentary. So also includes 2 one-on-one calls with Sunny. which he's going to do absolutely free as well, and instant access to a boot camp session that I sat down and recorded with Sunny a little bit earlier this year. So normally the cost on this would be $6,177. As part of the conference, you actually get a discount $4,317, but you can try it for free. So you should just try it. You can't do that on the internet. I was not prepared for that. But I've talked to my sales guys. I've said, hey, we're going to kind of do this. They are ready to kind of help you get set up with it. If you just want 7 days, so to be clear, 7 days of the indicator, 2 one-on-one sessions with Sunny Harris, access to the boot camp, as well as access to Metastock if you need it. We'll give you all of that for free for 7 days. To do that, you need to call in. So you can call in at 800-882-3040. You can go to metastock.com sales chat, and they can chat in with you. We aren't prepared to offer this on the internet. So, but we are prepared. We can absolutely handle it if you call us or if you get in touch with us by chat. So metastock.com/sales chat, 800-882-3040. Give Sunny Bands a try. It's free. You can try it for free. You can sit down with Sunny. You can go to live sessions. You can go to 2 one-on-one sessions. And then if you like it, you can buy it. What an offer. Did not expect that today. 800-882-3040, metastock.com/sales chat. If you said Sunny Bands in the chat, I've got your information. I'll have a salesperson reach out to you to help you get that set up because we're going to need to set it up fully. So, all right, very cool. Very cool offer there. We did just talk about the Traders Forum, didn't we? Join the community. Let me unskip this slide real quick. And we'll talk about a different, okay. That's fine. If you haven't yet, join the Traders Forum. You can do it at thetradersforum.com. We do weekly sessions. We talk about indicators. We bring in special guests like our next John and Jack are actually some really good guests that we've had in there 3 times where they've talked about some cool different market conditions. It's a community of traders. You can chat, you can share ideas. You can say, hey, I like this stock. What do you think? And they'll tell you what they think. To join, go to thetradersforum.com. So there you go. Of course, we're Metastock, and we're going to give away a little bit of a prize right now. Greg, are you ready?
I think so.
I have a brand new list, so I have new numbers.
Okay.
All right, let me go ahead and look at this. The reason the numbers keep going up is we get more of you subscribing. Yeah. So if you're watching us on YouTube, there's a pinned comment at the top of the chat that says click here to subscribe so you can be eligible to get prizes. If you click on that and fill out the form, you'll be on this list. And then that way, you'll be one of the people that we're choosing. Let me go to my conference prize list. It looks like the next one up is from Sunny Harris, actually. Well, that's timing. That's not on purpose either. This is 2 full all-day sessions for Trade Along with Sunny in May. So the value of that's $695, and we're going to go ahead and give away one of those prizes. Actually, this is a prize anybody can have. If you want 1 week access, get in touch with our sales team, 800-882-3040 or metastock.com/sales chat. Greg, why don't you give me a number? I need a need number between 2 and a 6211.
Okay, according to Google Random Number Generator, that would be 598.
Ooh, okay, went low this time.
Yep, because it's random, Jeff.
Yes.
Boy, that is quite a deal. 7 whole days of Sunny Bands. That is unprecedented. I don't think we've ever done that.
No, that's never happened, and I wasn't ready for it. But
nor was I.
I was like, okay, well, I guess we're doing this. But you know what? We'll do it. And I think it shows a lot of like enthusiasm behind her stuff. I watch her. I subscribe to her Substack, and she's really, really like the predictions that she gives. I think are great. She nails them. So yeah, take advantage of that. It's cool. I'm going to go ahead. This is a little bit not something we would normally do, Greg, because we're not so. Kelly doesn't like it when we say first and last names when there's a prize winner. But I'm just going to say it. The winner of the next prize is a gentleman by the name of Don Trader.
Don Trader. Oof. That seems poetic.
All right. I'm going to go ahead. I don't think that's his real name. That's why I thought.
Really? It could be.
Okay. Okay. All right. You can't get that 7-day trial on metastock.com/comfortable. If you want to get that 7-day trial of Sunny Bands, you have to call 800-882-3040 or go to metastock.com/saleschat. I'd encourage you to take a look at it. You might learn something in a week of going to Sunny Harris's premium market chat, the 2 lessons. So take advantage of that. You can call us 800-882-3040 or metastock.com/saleschat. So Dave says, how do I get a text window for the chat? I have no text. Dave, I got you. Our sales guys will get in touch with you. They'll help you get set up for that trial. Don't worry. You got it in the right place. So for any of the other offers, including the 90-day trial to Metastock, where you buy a month and get the third month for free, any of the other add-on offers that we've talked about today, you can get those at metastock.com/promo. If you have any questions, any of the offers, anything you want to see, metastock.com/saleschat, and you can also give us a call at 800-882-3040. We'll be happy to help you with whatever it is that you need. So, and for all of those of you that mentioned Sunny Bands, we'll be getting in touch with you real quick here. So, all right. Our next guest is John and Jack Kosar. John and Jack Kosar have actually had a huge impact on my trading this year due to the fact, due to some of the recommendations, kind of some of the discussions that we've had. I've brought them in to do we call them ticker talks we do about on the tradersforum.com, but they were kind of talking a little bit about markets, the fact that they've gone risk off and different markets they were looking at, they were risk on was fascinating for me and actually kind of opened my eyes up to some things I never thought about before. And so John and Jack Kosar do a great job. They've been we've done a number of different sessions with them over the course of I think we've had them first in November, but they've done an amazing job. I really like the way that they look at the markets and kind of what the keys that they use. I think they call them keys. We're gonna go ahead and bring them on right now. John, Jack, let's bring you on.
Hello.
Hey, there you are. Okay, let me go ahead and make you the presenter here.
Okay.
It's good to see you guys. You guys were just here last week, right? Or was it the week before?
Last week.
Yeah, we did your third ticker talk. You're the only people we've brought back in for a third time. We haven't been doing them that long, but you guys did such a great job. I really enjoy having you in.
Got to get some frequent flyer miles or something.
Yeah, you can have some Metastock bucks.
Perfect. Yeah, we'll keep coming until you get sick of us.
Okay. Challenge accepted. All right. I can see you. I can hear you. I can see your screen. I'll get out of the way.
Awesome. Great. So away we go. Doubling down on data, how to navigate market chaos with confidence. We had a lot of market chaos for sure. So there we go. All right, so about us. So this is my 43rd year in the business. I started out on the floor of the CME, the Chicago Mercantile Exchange, back in 1980. I didn't know anything about the markets. I got the job because the guy that I used to lift weights with at the YMCA was he was a live cattle broker. There was the cattle pits, the agricultural pits there, and I was lifting weights at the time, and I was kind of jacked up, and he thought I would be good in the pit. So I started there not really knowing anything. I came from a family that, were construction. We were a bunch of blue collar, second generation people from, Poland and Italy. And I spent 17 years there. And on the trading floor, as you would imagine, it's a very emotional seat of the pants sort of a trade, for the most part. There were people even back then where there was no computers on the floor that were making point and figure charts as they were walking around the floor, but generally speaking, there were no computers on the floor when I started. That didn't come until a decade, maybe later. Then I got off the floor in 1997. I worked for a few firms, kind of smaller boutique firms, let's call them. And then I discovered that I really wasn't a very good seat of the pants trader, and I did a lot better when I started to become a systematic trader. Meantime, Jack's coming along. He's a math and science kid. He's really interested in the stock market. And so right about the time where I started my company, Asbury Research, which started out strictly selling research to money managers, Jack and I started to build models together. And that has, continued just, sporadically at first. And now, Jack and I are basically partners in Asbury Research. Everything that we do is driven by models. Do I have opinions about stuff and do I have experience? Absolutely. But we found that quantifying, basically when Jack came here, I was able to quantify what I know. Those of you that have traded for a while, you'll know that you might have a certain indicator that you look at that you think is the world killer. Because in your head, without actually doing the back test, sometimes I remember when I first discovered stochastics and I was like, man, where have you been all my life? This is all I need so I could be, the king of the world, right? By trading stochastics. But, you start to trade the stuff in real time. And especially when you start to back test, quantitatively back test your ideas, you'll find out that your eyes and your brain and your greed can be really a deceiving thing. So Jack and I have been building models now for 10 years, and we've started to manage money also. That's where I think our business is probably going. We're managing money for some individuals, and we're also managing money for some RIAs, advisors. That they may have 100 million under management and give us 25 million of that to trade in our models because our models offer a certain type of risk and reward profile. That might be very risk averse, part of their clientele that needs to be in the market or likes to be in the market, but they can't stand this up 100 and down 100 stuff that we're seeing. So that's kind of what we do now. Jack he's the educated one in the family. I learned 17 years in the CME, kind of what works for me. And Jack's got his master's degree in finance from Illinois Tech on the South Side here in Chicago. Now, isn't it one of the best business schools in the country?
Recently ranked one of the top 50 business schools in the country, yeah.
And so, he's worked for a few different companies, Northern Trust here in Chicago, and I talked him into coming over here and being my partner. We're gonna keep building models, and hopefully one day when he puts me out to pasture, he'll be running the company, and maybe my grandson will be here. Who knows? So I've been around. I'm not going to go through a laundry list of all of this, but I've been fortunate enough to be noticed over 40 years. I guess I had plenty of time to do it, right? But I've been giving semi-annual presentations for Fidelity Investments for the past 10 years, and have been on all the major channels and stock charts and Schwab Network, and that's really helped our business. You really need to be visible. There's probably guys out there that are a lot smarter than I am that didn't have the opportunity to be in all these different places and to get seen. So just a few of the places that our firm's been seen. I had mentioned this. Everything we do is data driven. We build our models, and I'll show you kind of how we do this. So it's not, we're not going to give away our secret sauce, obviously, but maybe by seeing how we determine a strategy may help you in your own, when you're trying to figure out what works for you. There's a million ways to trade the markets. There's so many different tools. I mean, look at Metastock. I don't know how many indicators are in Metastock, but it's got to be 50 or more. There's so many different approaches. There's so many different time frames. There's long-term traders. There's short-term traders. There's day traders. So it's kind of like being thrown in this giant store, and you have to pick out the two or three things out of 100 shelves that you want to use, and then you have to see if they work. So we basically broke it down. There's two things I think that every trader or every investor wants to know. Should I be adding more risk to my portfolios, or should I be taking risk away? So basically, should I be risk on or risk off? And then the second thing is, when I'm risk on, what do I want to buy? If I'm risk on and I buy the S&P 500, well, that's great. But what if we could buy parts of the market that might be outperforming the S&P 500? So then you have kind of a nirvana where you're getting the market right in terms of wanting to be in the market. Let's just put it this way. This year, if you were in or out of the market at the wrong time, you probably got your butt handed to you. The market dropped 18.5% between the middle of February and the beginning of April. So knowing risk on and risk off, and knowing which parts of the market to be on, those are the two questions we try to answer. Should I be risk on or risk off is number one. And number two is, if I'm risk on, even if I'm risk off and I'm a money manager and I can't go to cash, where's the outperformance? So we built a lot of models, as I said, and we're going to look at a lot of them today. We're going to look at the correction protection model. The Asbury 6 is our daily health check of the market. Maybe by showing you what we have built with the Asbury 6 will spark some ideas in your own mind as how you may be able to build something similar for yourself. Our CEF model is for sector rotation. We're not going to look at CARP or US. I guess we are going to look at US versus the world today. Give you some ideas how we pick ETFs to buy. There's how many ETFs are 6,000
and 6,600 ETFs every day.
Right. So trying to go through these on your Metastock, or on whatever charting program, you're gonna wear your fingers down to big nubs. So we do some quantitative scans to try to see if the basic building blocks of what we think is important are there, and then it spits out a list of out of 6,600. We might get 10 or 12, and it makes it a lot more time efficient to be able to find good opportunities and not going one by one through your list of all the stocks or all the ETFs that you're tracking. And then finally, we built 4 model portfolios out of our individual models. Our individual models became building blocks for these model portfolios that we use to manage other people's money. So where to find us, just spend a minute here. If we get to the end of the presentation and this resonates with you, our YouTube channel is free, just like every other YouTube channel. We put a lot of informational stuff there. So you can just go to YouTube and look for Asbury Research, and we've got a twice monthly podcast, thank you, called Follow the Money. A lot of different clips from when I'm in the media. I'm on IBD a lot. Once a month, I'm on the Schwab Network. So we try to put a lot of videos out there. I'm always here doing stuff for Metastock with Jeff. And the other thing is we have a Substack. And our Substack is $25 a month if you want the paid version, but we also have a free Substack. So if you like our approach and you want to kind of stimulate more ideas based on what we're doing, just go to Substack and find us, asburyresearch.substack.com, and sign up for the freebie. And hopefully it will help you to enhance, or maybe get you thinking in a different direction, other approaches to the market, because there's a million of them and there's a lot of them that work. We're certainly not the only ones that have found the Holy Grail. There is no Holy Grail. It's just finding something that works for you. So our CPM model is the model that Jack and I built first. And the reason we built it is it was 2008, maybe 2009. And a lot of the RIAs that I was selling research to, Asbury was selling research to, all kind of within a few months, they all asked me the same question. Can you build a model that is simple and it doesn't move very much? It's either risk on or it's risk off, because I just had a bunch of clients that stayed throughout most of the horrible move down. I think the whole move down was 35% from top to bottom, during the financial, during the crisis. They finally got out at the bottom because they couldn't take the pain anymore. And then the market bottomed. You remember, the government came in. It's actually Steve Ratner was the car czar at the time. If you know, he's on TV all the time on Morning Joe. The market bottomed, started to go higher, and then these people just lost a third of their money, and they were terrified to get back in the market again. So they sat there with deer in the headlights, and the market came all the way back. So, John, can you guys build us something that doesn't move very much, that either tells us to be risk on or risk off, so we know when to get our clients out of the market, or at least reduce their exposure to equities? And that's where CPM came up. That was the genesis of CPM. You can see this is back from fourth quarter of 2023. Green is risk on, red is risk off. So we first went to risk off on December 18th, and then we had a little bounce and we got back in the market for a short time, but we've been mostly risk off since the latter part of February. I'm going to give Jack a chance to explain kind of what this is and why we built it and how it works.
Yeah, so I think we wanted to replace here is, a lot of advisors put their clients into this static buy and hold type strategy, and we just we don't really see the markets behaving that way. I think actually the chief investment officer of JP Morgan today said that it's basically the end, I'm paraphrasing, but the end of buy and hold with US equities. So what this is a dynamic stock bond allocation. So when we're risk on, we're buying the markets, we're buying SPY, and then we're risk off, we're going to BIL, which is a 1 to 3 month treasury rate note. And what we're doing is we're taking, we have several internal indicators. Again, we're not sharing the secret sauce, but we're trying to generate signals when we see the internals of the market, looking for a positive or looking for a rally, and then when things start to come negative, we want to get out of the way and put you into bill. What we've been able to do really over the last couple of years is, this thing trades 5 times a year, no short positions or treasury notes, or derivatives trading, and we've been able to really kind of keep with the market. Bring up our statistics, really been able to keep returns on the same level as the market, but really reducing our drawdowns and our standard deviation. And the importance of that is, our clients tend to skew a little bit older, and those drawdowns, especially, we've seen some pretty big ones this year, and have, with COVID and like I said, the financial crisis. When you have those drawdowns, that A, can be scary, and B, it can take a long time to try to re-engage in the market and make up the money that you lost during those drawdowns. So by having a model that can give you the performance of the S&P 500 with a significantly less drawdown, as you can see down here, over the last roughly 7 years, the market has had a drawdown of 33.9%. The CPM model has been able to achieve a max drawdown of only 20%. We also do this with a little bit less noise. So, for older investors who want to kind of keep a hold of the money that they've spent their life generating, this kind of creates a safety blanket for those investors. They know when to engage the market, they know when to get out of the way. And then, we have clients that also use this a little bit more dynamically. And, when they're looking to put on positions that might not necessarily be the S&P 500, but they know, when the CPM is risk on, they know they can engage the market with a little bit more confidence. And when it's risk off, maybe it's time to do some profit taking or clear out some of the other positions in their portfolio. And as you can see here, what we have on top here, this is a year-to-date, since inception line chart. In blue, we have the S&P 500, and in green, we have the CPM. And again, we have stuck like glue with the S&P 500 over those times. But if you kind of drill down into some of these lower parts for the S&P 500 in these bottoms, CPM disengages well before we actually hit that bottom, and it allows us to kind of take an advantage and re-engage in the market at a higher price, which is, again, trying to avoid those drawdowns, trying to avoid.
I was just going to say, so this started in Q4 of 2017. So all we're looking at, the point we're making here, most older investors, what they want is, if you could give me the S&P 500 with less risk, that's kind of nirvana for them, right? So I don't know what the S&P has done for the past 5 years, somewhere annualized in the 12% probably neighborhood. Yeah. So if you can give them 12% and the S&P's drawdown is 34%, which it's been, that was during the COVID period, the drawdown for CPM was 20%. So this is kind of a big deal for them, because especially when you're older, when you get to the point where I'm in my 60s, when people get into their 60s and 70s, if they draw down 33% of their account that they've been building all their life, well, now they're thinking about, am I gonna still be here? Am I gonna be above ground by the time the market comes back? Sometimes the market comes back quickly. Sometimes after we made the bottom in, 2001, it took a long time for the market to get all the way back to the highs in the tech bubble. So these little points Jack was showing is what CPM does is, once certain things happen internally in the model, it disengages. It shifts from SPY over to bill. So this is something you might think of in your own trading, is when certain criteria are met, don't fight it. Move out of equities and go somewhere else. It might be gold, it might be the dollar, who knows what it might be, but that's the strength of this, is really staying really close to the S&P 500, but taking the drawdowns away.
Yeah, so, and then what we like to do too is, obviously we have clients that are not just older and more risk averse. So we have clients that are looking for a little bit more juice. And the way we've been able to accomplish that is by turning CPM into more of an offensive strategy. And we do that through the use of a levered ETF. So in this case, we would be using SSO. We do have a couple of clients that use UPRO, but we'll keep those crazy risk takers out of this for right now. But this is focused on CPM using a little bit of extra leverage, CPM Ultra. So we'll have a little bit of SSO and a little bit of SPY. And because of the overall defensive nature of CPM and the way those risk numbers are have kind of aligned themselves, we've kind of configured the blending of CPM, still trading on the signals, but again, using the levered ETF to kind of match the defensive statistic, or match the statistics of the S&P 500. So what we do is, here, as you can see, CPM using a little bit of leverage has about the same drawdown of that of the broader market during the time period, and a very similar standard deviation, which means that your returns are moving about the same machinations that the S&P 500 is, and your drawdowns are similar as well. But what we can do then, though, is by taking that same risk, that if you are comfortable in investing in buy and hold in the S&P 500, you will be comfortable with the similar risk profile that CPM Ultra shows, which has the lever. And you can see we've been able to really get some outsized returns kind of doing that. So again, using a similar risk profile, but applying what we like to call smart leverage allows us to outperform while still staying relatively in the same range.
Tough to see here, but this again, this is starting in Q4 of 2017. That's inception for us. CPM using SSO. And for those that don't know, SSO is the 2 times leveraged version of SPY. Let's call it 166% versus 115 for the S&P 500. So quite a bit better. And again, it was similar risk metrics in terms of standard deviation, beta. And by the way, for those that don't know, beta, it measures a stock's volatility relative to the overall stock market. Standard deviation quantifies how much the returns of an investment have deviated from the average return over a specific period of time. So a higher standard deviation indicates bigger price swings and a wider range of possible returns, implying higher risk, where a lower standard deviation, which our CPM model has quite a bit lower standard deviation, suggests more steady returns and lower risk. So just a little glossary there. And now we go to the Asbury 6. So the Asbury 6, the first version of the Asbury 6 was built for us internally because after doing this for a long time, I couldn't tell from day to day what the condition of the market was, because the market's up 100 today and down 100 tomorrow. When you've done your research, and I'm sure you've all gone through this, you do your research, the market looks good to you, you've looked at whatever metrics that you look at when you're looking at Equus, when you're looking at the Metastock charts, and then all of a sudden one day the market's down 100, the S&P's down 100, and now you're starting to question your research. Why did it do this? Everything looked great. What's happening here? So you get spooked out of your position, and then 2 days later it's making fresh highs for the move. So Jack and I made a list of all of the tactical indicators that I viewed during my time in the markets, and we started to back test them individually to see how well they performed. And then we started to blend them together. Like we would take like a MACD and a stochastic. Actually, we don't use those. We're not really looking at the MACDs and stochastics and RSIs and more of the canned indicators, but we have our own indicators that we've kind of developed over the years. We started to back test them together. Jack was a college baseball player. We're kind of a baseball family. So when we look at building these models, we look at, like, if you ever seen the movie Moneyball, with Brad Pitt, where they had some smart kids, from Ivy League schools come in and start to quantify what these various players were good at. Like they had a fat catcher that he was batting #1. He didn't have any talent and he couldn't run, but he got on base almost all the time. So they start fitting these players in the lineup based on quantitatively how well they do a certain job. Like the VIX might tell you when the market's getting risky and help you to get out. The MACD, maybe when it's starting to turn higher, it will tell you when the opportunity to add alpha is starting to change because the momentum is getting stronger. So we took 6 indicators. We're going to look at them all individually in a second here, but this is meant to be very active. This CPM, about 5 round turns a year annualized, going back to 2017. I think this is 11, isn't it?
It's a little north of 11.
So this is 11. So you can see this is a lot busier, but we want this to be busy. We want this to be an EKG kind of for the stock market. So we want it to be busy. You see, it did a pretty good job here finding tops here in middle part of December of last year. This is February the 21st. It didn't get the bottom down here, but it got us back into the market on April the 23rd. So again, about 11 times per year. But the nice thing about this is it sticks very close to the S&P 500 throughout the period, similar to the way that CPM does, but the maximum drawdown here is only 13.6%. The S&P was 34%. So again, we're looking to play the game with less risk. So let's run through these. So this is what the model looks like. It's updated in the research center. That's the paywall for asburyresearch.com about 2 hours after the close every day. So this is an everyday thing. You can see on the 23rd and the 24th is when all these metrics actually turn back to positive. And if we back up one, there's the 23rd. So that's when the metric itself changed from down to up or negative to positive. 4 or more of these in one direction indicate a signal for the model itself. 4 or more green, positive. 4 or more red is negative. Here's what they look like individually. This is the monthly rate of change in the S&P 500. It's a momentum tool. So you can see it turned above its 21-day moving average on April the 24th, which gave this particular constituent of the A6 a positive reading. Why 21 days? That's Asbury Research's tactical time period. If you're building a model, if you want to be a systematic trader, what I suggest is the first thing, or one of the first things you have to do, is decide which time frames you're going to trade in. Because if you don't know, you're not going to have a lot of success. So the first thing is strategic. How long optimally do you want to hold your position? Whether it's long or short, it doesn't matter, but optimally ask yourself the question, in an ideal world, how long do I want to be in a trade that's going to make money for me? For us, it was 63 days or quarterly because we manage money. And most managers manage their book to the quarter. If you go, to Morningstar, you're going to see they're going to be looking at, a lot of times they'll be looking at quarterly performance. So that's our strategic time frame. Our tactical time frame is 1 month or 21 business days. So the integration between the move I'm trying to catch, which is a quarter, to how I maneuver in and out of that quarter, that's 21 days or a month. So that's why this is 21 days. Then we have the relative performance of stocks versus high yield bond prices. That's SPY versus JNK. JNK is the Bloomberg, it's like a paragraph. It's a spider, Bloomberg Barclays high yield bond ETF. JNK for junk, it's junk bonds. So when the stock market, when the S&P 500 is underperforming the price of high yield bonds, as it was here, stock market goes down. This is statistical. We've actually back tested this, and the correlation between this indicator and the S&P down here has been tight and stable for a long time. And when stocks start to outperform high yield bond prices again, like they did on April the 24th, which was right here, that told us that from the perspective of this relative performance chart, the market was healing. It was getting strong again. This is ETF asset flows. This is the daily AUM in SPY is what we're looking at down here. All looking at the 21-day moving average. One of the mistakes that I made, and I think a lot of traders do, is if you come in front of your computer in the morning and you decide that you want to buy ABC, whatever ABC is, you're going to find an indicator and a time frame that's going to tell you, yeah, this looks wonderful, buy it. You need to know what your time frames are, and you need to be consistent with them no matter what stock or what ETF you're buying. So this is 21-day moving average of the AUM, assets under management, that's in SPY. You can see it turned down here on March the 3rd, right about here on the S&P, turned back up on April the 23rd, and has stayed there since, which has given us all of this. If you're a futures trader, you're looking at futures open interest, because that's telling you how much volume shows your urgency to trade right now, that day or that hour. ETF asset flows, AUM, It's the same as open interest in the futures market. It tells you who has the conviction to hold the trade overnight and take the overnight, whatever the risk might be from holding the position overnight. That's why this is an important indicator, and this has been up since April the 23rd. Volatility is the VIX. There's a million variations of the VIX, but we look at the VIX. So when the VIX is above its 21-day moving average, tells us the market is getting nervous or spooked relative to the past 21 business days. That was April 3rd to 22nd. That was right here. Once it dropped down underneath it on April the 23rd, note that April 23rd and 24th keep coming up. It's not always that, it doesn't always have that much synergy, but in this particular case it did. But that told us the market was calming down again. The news out of Washington or whatever it happened to be was calming the market down. So since April the 23rd, we've had the stock market go up while the VIX is fading underneath the 21-day moving average. Next one is volume. Again, volume indicates urgency. We use cumulative volume, which is less jumpy and less erratic than looking at the raw volume. But you can see when the NYSE cumulative volume index, we call it CVI here, was underneath the 21-day moving average, we got to move down in the stock market. In the S&P 500, it's been up above it since April the 23rd, and that's given us all of this. Volume indicates urgency to buy. Urgency to buy got better on a monthly basis as of April the 23rd. Market breadth. Market breadth is how much of the market is participating in a move. There's a lot of different ways to look at market breadth, a ton of them actually. This particular one is the NYSE AD line, you know, the composite index, the NYSE AD line. Generally speaking, it dropped below its 21-day moving average on February the 20th, right about here, when the market was peaking. It went back above it on April the 23rd. So that's how this works. Why is it important? It's important because earlier, over the past couple of weeks, we had a couple of days where the market was down 100. So what's to keep you from going, the market was down 100 today. I'm sitting here with a little bit of a lead maybe, but something's wrong here. You know, the market's down 100. I think I better get out. And then what happens is the very next day, it's right back up again. And 2 days later, you're having to buy back that long that you held, but now you're buying it 2% higher than when you bought it the first time. The A6 and indicators like this keep you from focusing on all the wiggles on the screen and all the crazy stuff coming out of Washington. First there's a tariff, now there's not a tariff. You know, we're going to fire Powell, we're not going to fire Powell. This keeps you focusing on the signal and stays away from the noise that you see on your screen. And with that, I'm going to shift back over to Jack, who actually built our next indicator here.
Yeah, so the A6 kind of tells us, you know, where the health check of the market is. The next question is, you know, what do I do with that? And we built this table here. We call it the SORT report. It's the Strategic Opportunity Radar Tracker. It's really a top-down approach to just letting our investors know where should they look for opportunity. You know, the market's healthy or the market's unhealthy, but what do we do with that information? So we picked 10 pretty diverse ETFs, and then we track them in our three core pillars, which is trend, relative performance, and money flow. We want to make sure we're trending in the right direction, that price is going in our favor. You know, there are some indicators that are counter trend. This is just looking at, is any of these particular 10 ETFs trending price in the right direction? Relative performance, we are very much a shop of, if something is underperforming SPY, which we quantify as the market, do we really need to be there? You know, if we can buy SPY and something's underperforming SPY, it seems a little bit of a waste. Obviously, there's a little bit of diversification in there in terms of portfolio management, but on an individual purchasing basis, you know, we want to see that relative outperformance versus SPY, and then money flows. Are managers not only telling you on TV where they're voting, but are they voting it with their feet or with their dollars? So in this case, we have all three. In this particular one right now, we're seeing some strength in crypto, global markets, as well as emerging markets. And again, this is just a quick at-a-glance view for, when you wake up in the morning. This is actually available for our premium Substack subscribers. But just a quick glance in the morning, where are the opportunities? Where can I drill down? Yeah, that's the short report.
Just making a couple adjustments on my screen. See if we can. There we go. Okay, cool. One thing here, when you sit down at your screen in the morning, there's a million things to buy. There's a million pieces of information. Oftentimes you miss opportunities because there's so much to look at. It's trying to eat an elephant, it's too much. This is a great report. We put this out twice a week?
Twice a week for a Substack.
Twice a week, and this is, okay, so when you sit down, okay, I'm gonna trade today. What do I wanna trade from a top-down perspective? So this is telling you crypto and global equities ex-US, which means everything else but the S&P 500, and emerging markets are quantitatively trending higher. They're outperforming their peers, and there's new blood going in there. Their AUMs are expanding. So this is a good place to start. And it just kind of tells you where you might look for opportunities instead of going through 200 charts looking for a head and shoulders pattern. This quantitatively, it takes your sort down to something that's this big from something that's that big.
All right. Next, we have our SEEF model. This is our sector rotation model. It's really a model that we built to track the velocity of money over 3 different time periods using the 11 sector spiders. So this table that we have here, we break down, we have an internal algorithm to kind of track the flows of money through 3 different time periods. So our trading week, tactical month, and our strategic quarter. And what we really like to see here is a building of momentum over 3 different time periods. If anybody out here has been trying to trade within the sectors or the sector rotation type space, well, you'll know that sector rotation has really sped up over the last couple of years. It's been a lot harder. The trends are a lot shorter. And it's been a little bit more difficult to try to identify what sectors are going to outperform at any one given time. I know specifically this year, we've been quite whipsawed, a lot of it coming out of Washington, but just in general, a lot of the money's been flowing out. So if you're tracking individual trends on any one of these sectors, especially on a price chart, you kind of get yourself twisted a little bit and not finding the sectors that are truly outperforming. What we have here is it's kind of like a golf score. So we add up the rankings in terms of where we see the money flowing in the 3 different time periods. We add those together, and that gives us our SEEF score. The lower the better, just like golf. In our trading model, we use the top 3 at all times. That was quantitatively back tested. So in this case, the SEEF model is currently invested in technology, communication services, and real estate. Again, tracking money flows through those time periods. We have clients that use this as a model. We also have clients that use this for their individual trading. So for example, if you're an energy trader, things aren't looking great for you right now. We have 11s in all 3 time periods. It's got the worst rank score that we can have. And you might want to look at your portfolio and say, hey, I'm going to pare down on energy right now. Obviously, if you're interested in technology or looking to buy technology on a particular day, technology is a good place where we're seeing money flows through several time periods. Through that, we've built to try to better understand what these models do and how they interact. We've built our rainbow charts. These rainbow charts, what this top portion of the chart suggests is the daily score of the SEEF model for this particular asset class. So in this case, we have technology here.
And it goes back for 12 months.
We go back 1 year for this. And on the bottom half, we have our relative performance versus SPY. And as you can see here, in periods where we have green, we're up in this favored ranking for the CEIF score, we tend to get relative outperformance, trends of relative outperformance, and then vice versa. When we're kind of traveling from neutral down into a void, we have these periods of relative underperformance. In this case, we, April 24th, we went into favored for technology. So far, we have outperformed or relatively outperformed by 1.75%. We have rainbow charts for all 11 sector spiders, and it's a good way for a visual representation of that table that we showed. Kind of going into the statistics, another key thing to note is the CEIF model over the last 7 years has identified the top relative outperforming sector in the space each year. So we are consistently in the spots where you need to be to relatively outperform the market. Historically, standard deviation, write that about the market again, that is the variability in your returns for your portfolio. A really strong Sharp. This Sharp actually historically has been over 1. With the recent market correction that we had, we dropped just slightly under 1, but still 0.93, relatively strong Sharp ratio historically for CEIF. And for those who don't know, Sharp ratio is the return you get for a particular portfolio or model over the risk-free rate divided by the standard deviation. So it's really kind of a return risk metric, understanding of how much return you're going to get per the unit of risk that you are putting out there. And then again, maximum drawdown. We've had maximum drawdown just shy of the S&P 500 going back the last 7 years, about 4% under. And why these are all important going into our next sheet is our returns. So we have, again, roughly risk metrics that are roughly that of the S&P 500. So again, if you're comfortable with the S&P 500 buy and hold, which anybody with a 401k theoretically is, you can use the CEIF model to then really drastically outperform the market. Now, this is, we like to joke, this isn't a coupon for a bond. You're not going in and collecting a return every quarter. We have, certain time periods that we're outperforming the market, and there are other years where roughly a relative performer. The other kind of question that we end up getting is when your CPM model goes risk off, do you go risk off into CEIF? And the answer to that is emphatically no. We have tested that every possible way that we can imagine. And the reason being is there's a lot, what we believe is there's a lot of managers that due to their investment strategy, they have to stay invested in the market. So there are going to be periods of time where the market might be underperforming, but they have to stay in, they have to go where the relative outperformance is. And a lot of, in one case we had, I believe it was 2021 was, 2022, the market was down, but we were invested in energy for a good part of the year. And we actually ended up not only having outperformance, but we were positively performing for that particular year. So, when a lot of investors were pulling out of the market, we had aligned ourselves with energy because that's where CEIF model told us that investors were voting with their feet, and that's where that put us.
So the difference with CEIF, I had built a model 10 years ago that measured relative performance in the 11 sector spiders. It measured relative performance versus each other individually. So all of the 11, I measured each of those, how they were relative performing versus the other 10. So a lot of equations, and then how they were all doing versus the S&P 500, put a little math on that, and I built a model. It stopped working, and kind of all of a sudden, it just seemed like within a couple of quarters, it went from making money like 3-4 years in a row to always being behind the 8 ball. And what I found was that the trends sped up. The previous relative outperformance trends would last a quarter or two, and then they were like 6 weeks. They just started as more people were using computers to trade, and the market got smarter and the market evolved, it got faster. So the reason that this does so much better, because we don't care about the relative performance anymore, we've figured out a way to mathematically represent how fast that those assets are moving around the 11 sector spiders. Are they, speed-wise, not so much how much of the assets, but how fast they're changing, going from moving out of a sector to going into a sector kind of, so we built an algorithm that represented that, and then we looked at it in 3 time periods. So oftentimes when we are getting in to a sector like energy, when we went overweight energy here in 2022, I think it was like the 3rd week of January, XLE was bottoming. I think we bought within a day or so of the bottom. Why? Because the money moving in there was faster than waiting for the trend to show up on the chart. And that's why this really performs well, even in markets that are spooked, like we've seen this year. You know, the money is in technology 1 week and it's in utilities the next because of the mixed messaging. Everyone's afraid of tariffs or afraid of interest rate hikes. Nobody knows what's going on right now. But the point I wanted to make is that this is not tracking trends in relative performance. This is gauging how fast that money is moving around those 11 sector spiders, which gives us a big edge in how we get in and how we get out. This is another model. This is our US versus a world model. This is a really simple model here. All we're doing with this is we are looking at 25 global equity indexes. We've arranged them in geographic chunks. This is South America here with Chile, Brazil, and Peru. We've got Canada and Mexico here, continental US. In here is Western Europe. Down here is Asia Pacific. We've got the Middle East here, and then we've got the islands. We got Australia and New Zealand down here. All this does is it measures, it tells us where the outperformance is in 3 different time frames: trading, tactical, strategic. And it tells us if the US is outperforming, it isn't bolded, because the norm is a normal condition is when the US is outperforming everything else. Most of the time it does. This time it's not. This changed really about the 3rd week of January when the new administration came in, and then there was a talk of tariffs, and there was just a lot of uncertainty that was going on that really exacerbated with the tariffs, exacerbated with the interest rate situation, or firing Powell, or there's just a lot of mixed messaging going on. You saw a big migration of assets move from the US to foreign markets. It started here in Germany, really, and then it went to Spain. You can see Spain is kind of tapered off a little bit. That's why it isn't green or bolded. And then it moved into South America, and then it moved here into Asia Pacific, just kind of started in Western Europe and started to move around the globe. So we've got 3 open trades right now that are based on what we see in this particular model. So we've been overweight Malaysia, which is EWM, and we'll show you this chart in a second. So far, since 24th of March, it's up 8.5% outright, outperformed the S&P by 10%. What we're looking for here, more important than outright performance, is relative performance. A lot of managers that are managing other people's money, they can't go to cash. They have a mandate where they need to be maybe 80% of that money has to be invested. Whether the market's up, down, or sideways, they're getting paid to manage that money. It needs to be somewhere. So for these guys, if they could have moved some of their US exposure to the S&P 500 or the NASDAQs overseas and picked up some of these moves, well, they're looking great now, and their clients are writing songs about them because they were able to get on these trades during a period where the S&P was really getting beat up. Australia, 7.4% outright, 5.5% versus the S&P. And Thailand since 421. So I've only been in Thailand about 3 weeks. Outperformed so far 6.8% versus the S&P. This is what it looks like on the chart. So here's EWM. This is Malaysia iShares product. It's risen by 6% from here to here outright, while outperforming the S&P by 10%. This is what we're interested in. Down here is the daily relative performance chart of EWM versus SPY. 21-day moving average again, right? Because I want to know what the tactical trend is. So we caught that trend right here on March the 24th, and we're still overweight. Note that it's also starting to break out above its 200-day moving average. So we can have a second gear on this thing as the trend turns from down to up, as most people look at the 200-day moving average as kind of a major trend proxy, if you will. So this is how this looks in real life. And again, this is just another way that instead of me, looking at this and going, is that a head and shoulders bottom, or is this a cloud pattern, or whatever you're looking at, statistically, this is telling me that we've got outperformance in multiple categories. So that allows me to look at this chart and say, does this look like it's a good buy? And this is where you can overlay your MACD or your stochastic or your relative strength index or your chart patterns. But the most important thing to me is relative performance. Before I even look at this, it has to be outperforming the S&P 500. Otherwise, there's no reason for me to go overseas. I could stay here in the US and trade the S&P, because most of the time the S&P 500 is going to outperform the world. Let's go to the next slide. These are ETF trade ideas. Again, this is built on a scan. There's a lot of ETFs out there. So Jack basically built the scan that looks at 6,600 ETFs every day at 5 o'clock in the morning, and I have it sitting on my screen, when I come in about an hour later, and it tells me what ETFs are. Well, you could break that down for me. What are the three criteria that you were looking at here?
Yeah, it goes kind of to our core pillars. It's relative outperformance, trend, price trend, and assets under management. And we're just our asset inflows. We're looking for positive trends in all three. So we want to make sure we're price trend positive, we're relatively outperforming the broader market, and that managers are voting with their dollars by showing a net expansion into the assets, into those particular ETFs.
So this year has been an atypical year, right? The S&P has been down for a good part of the year. Investors are apprehensive until this tariff stuff gets sorted out. Businesses aren't going to hire. They're not going to be opening new stores. There's a lot of, so it's been a short list that I get on my screen every morning, where there might be 12 or 15 normally. There's 2 or 3. Sometimes there's 0. One of the ones that popped up for this week is iShares US Aerospace and Defense ETF. It's ITA. And here's what that chart looks like. Now you can see what we're looking at. So here's ITA. Above the 200-day moving average, positive long-term trend. It just started to break out here over this high that it made back in November, a couple of weeks before Thanksgiving of last year. We've got a breakout on the price chart. Here's its AUM, assets under management. It's been expanding over its 21-day moving average. So it's expanding on a monthly basis since April the 23rd. And down here, it's been outperforming the S&P since February the 25th. So I've got the three legs of the stool, if you will. That told me that now I can look at this, and now I can look for other indicators that I might like. Whatever indicator that I think might be really important for this. I thought, the breakout here after bumping up against this $158 level for months, it finally is getting through it. So now I've got the risk reward that I need, and I know that there's new assets that are going in here, which gives me the conviction. It shows me conviction that other people want to buy this, and it's outperforming the S&P. If it's not outperforming the S&P, what am I doing there? So this is what we use quantitatively to take over 6,000 ETFs and to break it down into the basic building blocks that I need to even look at this thing. And then from there, Jack and I will look at this and decide, if I buy this here, how much do I have to risk and how much can I make? That's the risk reward part, and that is subjective for us, and where I use some of my experience of trading on the floor to try to figure out how much the risk reward might be. Here's how it's done. 96 trades from March of 2023 to April 4th of this year, just about a week or so ago. And the reason I'm showing you this is how you should be judging your own trades, in our opinion, is percent of winning trades right here in the middle, percent of the winners, 54%. You should have a system where your winners, you have more winners than losers, and your winning trades are bigger than your losing trades. Those are the two most important things. Percentage of winners has to be greater than 50%, and your winning trades have to be bigger than your losers. So the average winning trade here for this 96 trades, which is about one trade a week, 4.4% was the average winner. The average losing trade is only 2.3%. So my winners are almost twice as big as my losers. Average winning trade length in days, 18 days, 21 business days is a month. So just about a month I'm staying for my winners, and my losers I'm out in 8 days, which is about a week and a half. So these are good numbers. If you can produce numbers that look like these for whatever you're doing, that's how you tell if your model's any good. That's how you tell if the strokes that you take, if the steps that you take to try to build something that you can use, and it'll keep you disciplined, and you just basically make the donuts every day. You know, you run it through all your criteria, and if you can come up with numbers like this, you have a winning system. The Sharpe ratio on this thing is 1.3, which is an exceptional Sharpe ratio. So this is how you can help yourself to build something, not that, hey, I had a great trade last week, but rather I've got a good system that is robust enough to last, you know, to perform pretty well over the past couple of years. We're not going to have a chance to go through our model portfolios, but we built four different model portfolios. This is what you use to manage money. Our ultra conservative model stays within 2 or 3% of the S&P 500 going back the past 5 years. But the maximum drawdown has only been 9.3%. So for somebody that wants to be in the market, maybe not because they love it, but because they have to put their money to work. This is comparable to the S&P 500, but with a tiny little drawdown. And the standard deviation is like a third of the S&P 500. The beta is like a quarter of the S&P 500. Then we have an Asbury aggressive. Do you recall what the performance on that was off the top of your head?
It's outperforming, I believe, 3 or 4% on top of the S&P 500. With the risk numbers are actually still relatively low to that of the S&P 500. The Asbury aggressive does use a little bit of that SSO leveraged ETF, so you know it tends to trend a little bit on the younger or investors willing to take a little bit of extra risk, as you know the standard deviation due to that 2-time lever can provide a little bit more jumpy return or jumpier daily returns, but on average, again, outperforming by 3 or 4% a year.
Yeah, so now that we're managing money, this is a lot easier for someone to come to us, tell us what their risk profile is, you know, maybe when they want to retire, and give us an idea of who they are as an investor. And we have 4 different sizes, so to speak, that we can see if one of those is going to fit to them and make them feel comfortable. So we have investment research to sell, a premium service that includes all of our models. We have a Substack. Again, the Substack, we have a free version. So go to Substack, look for Asbury Research, and you can at least get an entry level. It's not going to cost you anything, and it's going to be more of the same. You know, our data-driven approach to investing. You know, we're managing money. We use Charles Schwab to manage money for individuals. We also are involved with some TAMPs. If you're a money manager, we're managing money for some RIAs. $250,000 is our minimum investment, and it's a 1% management fee up to $1 million. Here's your keeping the lawyers happy.
Yeah.
And that's how you get us. If you want a copy of the PDF, we would be more than happy to send that to you. Go to asburyresearch.com, go to the contact tab, give us your name and your email address, and let us know in the little query box that you'd like the PDF, and we'll be happy to send that to you. Sorry, Jeff, we went over by 2 minutes.
You did a great job, though.
Thank you.
That's
All right.
that's certainly worth 2 extra minutes.
We've got the Asbury Research links in the chat. Also, sales at Asbury Research, or give them a call, 888-960-0005. Thank you, John. Thank you, Jack. I really like kind of the takes that you have on things. Thanks for coming in.
Thanks, Jeff.
Thanks, Jeff. Always good to be here.
All right. Let me go ahead and do this. I'm going to go ahead and dismiss you. Okay. See ya. Thanks for coming, guys.
Adios.
All right. Let me go ahead and make me the presenter real quick. I'll show my screen, and we'll move quickly on to the next presenter, who is another good friend of mine. So before we do, I want to say thank you to the CMT Association. CMT Association has been sponsors. They're called Chartered Market Technician Association. They've been sponsors of the events for a number of years now. If you manage money for a bank, if you want to manage money for a bank, if you want to work for a bank, if you want more assets under management, or if you just want 3 cool letters after your name, CMT, then you can go to the cmtassociation.org. They'll be able to help you with that. Very well accredited organization. Accrediting? I don't know. There's a word there somewhere. They can help you get accredited. Very well respected organization, all that kind of good stuff. So cmtassociation.org. I want to personally thank Tyler and all the guys over there to kind of help with kind of doing that sponsorship. As a reminder, all of the offers that we're doing today can be found at metastock.com/conf-promo, metastock.com/sales-chat, and you can also call us 800-882-3040 to get them. So hope everybody's enjoying themselves. If you have questions, let us know in the chat. Our next presenter is Peter Dalal. Peter has been working with Metastock, had a very, very popular add-on that was called FX Traders Advantage. As you can imagine, it dealt with Forex traders. He's been kind of working on his work for decades now. The Magic Trader uses an ingredients-based approach to kind of help you get an idea of what the stock you're looking at is going to do. I love the ingredients approach. It kind of helps simplify things, make it kind of easy to read. And without further ado, we're going to get Peter started. Peter, how you doing today?
Can you hear me?
There you are. Yeah, I can hear you now.
All right. Before we start, I want to tell you, your technician and me work on changing some monitor settings, so we have to adjust here. So I just want to tell you. All right.
Okay. I'll stay here until we make sure we have the correct monitor share.
Okay. So tell me what we need to do.
What I see is just I just see a big sun on a lake. So, but
sun and a lake. Okay, I see it. So let me move my stuff there.
Okay, that'll work. I can also show you how to change the screen if you want to.
It's okay, but if you have difficulties, then we will do it.
Okay.
Okay. Yeah, now, can you see my? Oh, okay. Let me put the PowerPoint now. Let's see if you can see.
Okay.
What? How about now?
I can. There is one thing I want you to change, and it'll be perfect.
Go
Do you
ahead.
see where it says Display Settings right there?
Right.
Click on that, and just say Swap Presenter, and I think it says Swap Presenter and Audience View. I think is what it says when you click on that down arrow.
Hold on. Swap Presenter. Okay.
Yep, the very top option right there.
How about now?
Perfect. Yep. Thumbs up.
Can you see everything?
Yep, it looks good.
All right. So how are you today?
I'm doing well. We're having a good we're having a good conference.
All right. I normally don't get chance to even look at that except the last few minutes, and then that's the way life works, I guess, in New York, too occupied, right?
No worries.
Doing too many things, I guess.
Yeah, I understand. Well,
all right. So thank you for having me. We're going to get started, right? So we're going to catch up the speed, I guess. All right. So let's get started. All right. So I changed everything according to your suggestions last time. So let's see how that comes out today. All right, so we're going to talk about simple way of trading, and this is designed for especially newcomers who never had any exposure about Magic Trader. Magic Trader is all in one, so you don't have to buy every year new software kind of thing. And basically, it was designed for institution and was used for institution, and still is for many years since 2006. That was the first time it was put into action, right? So, and first time I was trying to rescue somebody, which is the company Bear Stearns, and one of our partners told that I have a son, needs help, everybody's losing money. Can you help him? I said, listen, I can't give you the software. I don't have time to teach him, but he could come to my house and I'll see what I could do. So 15 days he was here, and now I enter into things I never did, right? But with Magic Trader, I had an idea, and by the time we finished, he was the only guy turn around the whole portfolio in a positive way, and then Bear Stearns went out of business. So he did not lose his reputation, but technically that gave me another idea how I could correct people's portfolio. And that's how I started with Magic Trader. So it is a basically designed and supposed to be used for only institution side. But last few years, I went to Utah and we made a deal with Meta. Okay, we're gonna scale it down, right? And then we're gonna further scale it down too to make it work for retail traders. So creating simplicity, but it is honest truth. There are not billions, there are trillions of risk combination. If somebody's telling you otherwise, I don't know what to tell you. But only thing I could tell you, we wind up getting patents. So patent office are not easy to deal with, especially software patents are like a no-no. So that's academic, but it is true. I filed the patent after I created. So it has a lot of merits because I don't like to waste my time unless it works. So there is no reason. And we did the first product with MetaSuck same way. And day before, I think 1 week before release, I had even filed for patent, right? So it has a long lasting number of years. It's still existing, that pattern. And Magic Trader has a many number of years left. So we're going to make it simple for simple guys. So by the time you have already time, so later on, Jeff will show you this software. What I did to save the time going back and forth, then I could show you the chart, right? So it is right here. I could bring it and show it to you. But I make a screenshot of all the same thing, right? And we are open to show later on. And if Jeff has the time, he could show it too. So he will show a couple of parts of commentary window and things like that, right? So we could make it as simple as possible, or it has a few expert advisors, so don't get over intimidated, right? So it was designed so you don't need other software. So every year you don't have to spend money. I'm not interested in those kind of things. All right, so okay, my company is registered. I'm going to make it short and simple. Jeff has a copy of the same disclaimer. The only thing we're going to talk about, which is bare minimum, otherwise we'll be here beyond 1 hour reading every line in this disclaimer because lawyers wants us to at least show, and we could give you the copy of the disclaimer. Long story short, everything we're doing is for education purpose only. Everything, right, is designed for what you call designed for simplicity in a way that we cannot guarantee anything. Past performance is not guarantee for future results. Lack of liquidity also plays a big role in a market bid and ask spreads, right? That tells you the story. And when you go in option side, when you go out of the money calls and right, you're going to see wide spreads most of the time. Why? Because less people are interested in. So long story short, we cannot guarantee you anything. CFTC rule 4.41, everything we're doing, even though live trading I do with my traders, right? Everything is hypothetical, not typical. And I could lose money. There is no such thing that you cannot lose money because we are all humans. So sometimes we get carried away emotionally, but I try not to control my emotions, right? I have a fixed amount of losses, I will take it, or I will start taking partial losses and try to correct the portfolio. And it is not a big deal, but I don't risk any money. You're not going to believe I don't even use 99 times, even in Forex leverage business anymore, my own money, right? So I don't have to worry about all these sleepless nights. But if I need it, I will use it, but I will also bring it down to almost no leverage situation. So this way, I could preserve my capital. So hopefully, people don't have capital. Don't take it wrong, wrong way, but it will go. It is going to take some time. Options are risky. All right, some strategy you should not be trading, and your broker will not allow to do so because naked calls and naked puts. And I will tell you, it took me 3 years with the UBS. It used to be pen waiver to get naked calls and naked put approval. Do I want to do it now? No. I'm a senior citizen now. I should not be doing that. But did I do it? I did it for many years. You have to have a large account. Right? So those kind of things, I don't do that anymore. I don't need to. We are registered. My company is registered. And this is our registration number. We required by law to tell you at least, so you could do whatever you want to do with that. But we are not managing people's money. As soon as I started doing this magic trader, I had to notify to NFA that I will not be managing money. We took the exemption so I could do this job properly because I'm signing a contract with Metastock. So I had to do a job whenever they want it. And managing money is a very, very stressful job. I had a good time, but you can't do every single thing in a day. Otherwise, don't manage money because you're taking responsibility to do good job for other people. I did it for years, but only reason why I gave up, right? I still have licenses, so but there will be a time to go back. But right now, I got to another year probably, so I'm hanging there. Intellectual property. Most of the things you do it is has a pattern or pattern in transition, all different trademarks, register marks, service marks. We spend a lot of money and many years. So since 2006 and earlier, I've been putting time, and I quit multi-million-dollar income business construction, which is #1 plumbing company in the city of New York, and I phase it out to do these things. So my commitment is that I'm going nowhere except I go up. All right. AI disclaimer, lawyers wants us to tell none of the items you should be putting into AI. We have notified most of the companies, then evidences will tell what lawyers wants to do with those individuals. I myself don't put anything about Magic Trader in AI. I don't need to. However, some of these things we have developed since 2006 and they are hidden there. One of them I'm going to show it to you. All right, so copyrights, everybody knows, right, what not to do. We're going to go a little bit faster as we go along. All right, everything is stimulated. It falls under that category. So even though if I show you live trading, falls under hypothetical category. I didn't say that. Recently, last year or more, one of their representatives told us to put stimulated hypothetical performance, not typical, on every slide. So we get audited and we do whatever they wanted, no arguments. Listen, federal government has a lot of lawyers. I don't want to fight with them, right? Jeff has a pretty much idea. All right, scalp swing, you may not be knowing it. We're not trying to teach here, but this is the reason I'm surviving. I figured out if I have to take a risk, that money has to come from Magic Trader while I'm waiting for the move. And Magic Trader gives those opportunity, and we call drilling down, right? And based on drilling different multiple time frames, I have no drawdown or Sometimes if something goes crazy, then everybody gets beat up. But most of the time, I will not otherwise enter. But there is no guarantee. So we're going to talk about how we could trade with different ingredients. Magic Trader has, I do believe that's 15, 16 highlights. They have 112 symbols. All right, some of them, what do you call, expert has a little less. So long story short, the combination on my previous presentation, with you could see yourself. I put from Google the formula. You go and figure it out, trillions. So that tells you this something. There are so many opportunities to trade too. So we don't have problem finding the trade. I have a problem grabbing every single thing I want. I don't have enough time. So Magic Trader, any market finds the trade for you. You don't have to worry about it. All right, so we're going to talk about 5 different ingredients. So what we did approach, most of the traditional thing we staying away from it, right? MACD, this, that, RSI. That doesn't mean they're all wrong, but every trader who's been around will agree with you. Those are lagging indicators. That doesn't mean it doesn't work, but you will be late in a game to get out and get in. I don't like it, right? So that's why we went back to 0 and created everything from scratch, right? So everything you see, more or less, you can't find anywhere. Okay, what we're going to show you how to use them to trade. And Catalyst, I'm going to show you where it is, but we will not have enough time to teach you. But you could go, dozens of recordings are there. We've been doing for 3-4 years now. So at least you could get 20-30 recordings, right? So we're going to show you how the pinpoint entries, you could pick it up so you don't have drawdowns or close to 0 drawdowns. So we're going to teach you today how to boost your confidence with Catalyst. At least I'll show you what to look for in multiple time frames. Or Magic Trader is designed to do trade with only one time frame. Whatever you want, it has a flexibility. Last time we have misunderstanding. I was very clear, right, that last presentation was including everybody, beginners, intermediate, and advanced trader. Today, we're going to focus only on a beginner's presentation. And so they could feel confident about Magic Trader. All right, now Magic Trader can work with a single time frame, every instrument you could imagine, as long as there is a data feed from now Refinity becoming London Stock Exchange pretty soon. So I started singing song for LSEG in my lifetime with Metastock, and I started with Reuters, and that's how I met Jeff and Kelly, right? I have seen the transition from Reuters to Thomson Reuters, then Refinity to London Stock Exchange, and the more or less many same faces are still there. It's a good company. So basically, pretty soon you will see LSAG platform. All right, that's not my place to say when, whatever, but it is imminent. They merge or whatever, they bought it, right? So what we're going to focus, right, for little guys, you stay focused on this few time frame. Daily, you could do with the 60, or daily with the 30 and 5, or daily and a 15 and 5. For me, it doesn't matter. Wherever is the opportunity, I will figure it out and trade it. So for me, I have flexibility. I want you to learn about it, flexibility. If you have a blinders, put it on. Oh, I have to only trade with daily or a 60. My buddy told me, you are wrong. You're going to learn with a cost of money, right? You got to be flexible because you will be surprised. Sometimes it will start with 15 minutes because institution desk is trading and taking positions. So yellow bar will show up there, or institutional trader symbol, advanced perceptor will be there. So I know what they're doing it, but you need to get adapted. And I grew up with institutional traders, right? And we don't have much time. Later on, if I have time, I'll tell you a little bit. But I was just lucky, right? The highest amount of order flow went into our office, right? You have probably no idea what that means. And you're talking about everybody in a industry, the order flow used to come there at the end of the day. So what that means, you have intel. The tape reading comes into your blood. And I was just lucky. So eventually, what I did, a lot of things I learned, I created. I did not know whole from a wall for programming. I was struggling. First 6 months were horrible, and I would ask Metastock help because I had to file for patent. I got to keep secret. And trust me, a guy who doesn't know anything about one programming, one word how to do it, and you're going to see what it was created. But too much pain has gone through, and I like to solve things at my own. That's the way I am. And young guys and new people try to create things, not to copy from people, all right? Because we don't need to copy anybody. All right, so multiple time frame is the key. My first set of patterns, I got the pattern for multiple time frames for cumulative desire to buy and sell securities, right? And this one we got also for believeness. All right, so what I believe here, you could desire to pull the trigger, but you never pull the trigger. So it kind of, you know, it's a thing after the fact. I wanted to know as it happening when everybody in the world puts the pull trigger, or majority or more buyers than sellers pulling triggers, right? So those kind of things, instead of calling the institutional days, hey, what are you doing? I don't need to do that. However, all these years I have called them and tell them what they're doing it. It's how you know. I said, this is how I know. And I had fun doing it, including Citibank, the biggest money manager there. I'm not going to say the names, but that guy is brilliant. But I also open up his eyes. Not I'm smarter, but my software says. So Magic Trader is based on a risk and risk clusters. So remember I told you there are trillions of combination. This is what it looks like. All these things are risk. Last time I went into more details, but now for you guys, I don't want to make it more complicated. Just within this bubble, there are risk, similar kind of risk, different sizes, different strength, they combine, and that gives me idea to pull trigger to on a sell side or buy side, right? So there are different kind of risk clusters I'm using in this Magic Trader, and over the period of time, right? And thanks to Metastock, they have a sequential ability, right? When you design, and over the period of time, I put a lot of trades into and figured out what is the ideal sequence, and Magic Trader is already designed to do that. And it could be one symbol, it could be thousands of cluster in there, which we don't normally talk about. You don't need to know because it's too complicated. Then I'll get beat up by Jeff. So this is the outcome. Look at that here, right? This is simple way of explaining. And hopefully Jeff likes it now. No more all this stuff, a lot of stuff there. However, what I did it, I put the color of the candle. And let me give you an idea. So in the trainings, right, there are indications what are these candle means. But if you want to do it later, you could do your own. It tells you number of types of receptors. So we got the pattern. Everybody says, oh, buy is one single symbol, go long, that means it's green. No, it is not true. It has, in this particular chart, two different things, two different kinds of set of institutions, right? There are institutions, which I was part of that. They will buy even though it goes down, and they reverse the trend. And that's what we were supposed to do. So for instance, it is not the chart. They will start, keep buying here. Then it goes up, and then everybody else shorting, hedge fund shorting. But these are the location of different kind of institution. So basically, I invented that it's not just buy. There are different kinds of buys. It is more or less a green symbols, and there are areas where it can go either way, and there are areas which can go down. So on this side, there are two different kind of cell signals, so colors, and there are catalysts, right? So in this case, catalyst is the warning sign. We're going long, Oh, you just go long. Here, we're going to go long. We go long, and look what happened. And you're going to see different setups today, and you're going to be surprised. This is where institution. I was on the trading desk, institutional desk, and they were taking positions, right? Besides what my inventions are, I synchronized what I knew from there, and right, because they are traditional people, whatever, right? But I know I could take a risk here, right? And you could see here there is no drawdown because they're buying it. So what are you waiting for? Right. This one is forecasting. It tells you we're going to go higher. Look at this. What happened? Right. And when we see this thing, everybody knows around me that it's time to shop going long. Right. So, and option, we have a separate expert and it will tell you call or put option. I took it out all because you don't need to worry about that. All right, so now I enlarge it. So you could later on go to that slide and see what the hell is going on, right? So everything is very clear now, right? So it is, if you can go to, preschool or kindergarten and recognize the color. So I wanted to also recognize the different kind of risk while I'm trading. But as it is, we babysitting this chart. I'm not a guy who will set and forget kind of thing. We're putting a lot of money on a line. So I need to look it up. That doesn't mean I trade every second, no, or I trade every second I babysit. No, I want to know what I'm taking the risk for. Then whatever happens, we'll worry about it, right? And you learn about to manage the risk and you'll be fine. So these are the symbols I was talking about. So normally Metastock has a 5-6 symbols. I got tons of them, but it has all the meanings. Like this is the forecaster and they have a different kind of risk attached in a categories. So I know now, even though it's telling that we're going to go to the moon, I'm not taking my risk. I'll be looking to get out, right? Or pullbacks. So you're going to learn those things, but this is the as simple you could get it. So you don't have to get intimidated. But I use those symbols to exploit the situation while I'm trading. So my risk is low and I could have a better output. So I took these guys, right? Future highs. So you could see here, when you put an arrow here on a symbol, it tells you this. Magic Trader earlier highs. I went through regulator 2 years, right? They want to know everything about Magic Trader before we release with Metastock. 2 years, right, from New York office, right? And they made me change. Initially, it was that it is kind of indicating it is going to kind of, according to them, shows the guarantee. But now, then we compromise earlier highs, earlier warning. They want to warn you it is going to go higher. A couple of slides ago, you already see it's going or not. Look here, right here. You put an arrow here, it shows that. And it is telling we go to, and who's buying? Even though price goes down, people chicken out, I buy more because I know where I'm going. So this is the beauty about this thing because it's telling you it's going to go higher, but there is no guarantee. They told us we cannot guarantee anything. All right, we will not say those words, but evidence says itself, right? But that doesn't mean it's going to work 100%. We cannot do those kind of things. I'm regulated, all right? But at least we could say, right? Past performance is not guaranteed for future. When it comes in, you have more odds to win, right? That's what we need to do. So now we're going to make it simple for new guys. Don't know nothing. If you can recognize ingredient number 1, and it has a vertical line, and that represents the green directional line. So when it says green, we're supposed to go long, right? That's how simple it is. So you got to find that on a chart. All right, we're going to find on a chart where we could find it. This thing took me 3 years to final submission to patent office. 3 years, right? Because there are hidden things which I don't want to talk about it, but this is the simplest way I could do it. So I have a health issues. I had a stroke business or whatever, right? So before Magic Trader was created, so I'm looking at those, machines in a hospital. Oh, they could see my heart. So why we cannot check all the security health. So I figured that out. All right. So long story short, I said, why not? So basically, I made it further simplified. Direction line, put it in for both sides. And when it shows up, I'm going long. Simple as that. Then second, bullish health. So how is the internal health and how to make it simple? And what is the ideal way of finding them? So when these lines are parallel, which is a number two, number two, number two, all three. So this line is below that, or both lines are above it, and they are parallel and has a value on a chart, number 4 and number 1. So this is number 4 and this is number 1, which is right here. So as long as they parallel, right, I will take a shot and I will stay in a trade regardless what happens. So I don't get chicken out. And there is a way to get out too. Then a spike. So direction is fine, but what I have seen that I want to enter before even the direction comes in. So spikes are, I forgot to put it in here. We crack the code with the Metastock, which we keeping secret, and so do Metastock. And we crack the code. So this spikes, all right, comes earlier than it should be with artificial way. So artificial intelligence. But we kept quiet because now is the right time to talk about it. But Metastock knew it, what we did it, right? And it's all patented product. So you don't have to worry about it. So when the green spike comes in, you will see half of that. So if I'm short, I'm get the hell out of that. Or if it comes in full, I'll take an entry order to the broker. I'll give it to them or put it myself. So let's practically look at it. Where is that spike? So on this chart, this triangle, dotted triangle is called spike. So we'll see half, you see yellow bar happening. My hands start itching, to be honest with you. And this is a little bit advanced. I see -4 or -5. I am in. All right. I don't wait for anything. And look, these forecasters are telling way before we're going to go to the moon. They figure all out. So these ideas came from while I was trading institutionally and before that prop trading. Right. So basically this was warning. We could go down, but there's a way to trade. So you wait for this spike for confirmation, new guys, and this gets anchored, then you get in there. So you have least amount of drawdown, and it's telling you we're going to go to the moon anyway. So it doesn't matter. So you go in there, you want to get out. Where you get up, pull back, get out, right? And then it can do drawdown. There is nothing wrong with that, but you could do intraday. That's what most of the people get chicken out, right? But I will be doing scalping at that time and take advantage. And number 4, risk. I'll get the hell out of it. Once it pulls back, I'm out. So there is a way to trade with that. So most of this software gives you buy and sell arrow, but the regulators were very happy. It shows different kind of risk. And in fact, I got compliment from them that, and they say that everybody should be doing that. And technically, I don't want to go into laws and whatever. They are happy when we voluntarily goes and show them this is what we're going to give it to general public. All right, I am ending discussion right there. So with doing, not doing, I'm not the regulator. All right, so now pure health. So the health indicator, I wanted a juice when I'm hurry, and it has to be in my favor to look at that. So this little green line comes in, we generally put it at the bottom of the chart, which I'm going to show you in a minute. So those are magic believer pure health. So when you have that, right, I'm going in there, right? Oh, I'm too late. No, you're not too late. 2 or 3 is okay. We could say that, okay, this is the retracement side. So I will be looking to get the entry in this side. I'll be looking an entry. And you see, then it's taking longer and longer time and horizontal time risk. This is not the ribbon you looking at every Metastock product. All right. We file patent for. This is one of the dimensions, and we have 8 dimensions. We got the patent, right? And 9th is in pipeline or pending. All right. So this is a part of all these things, right? So this is one of the dimensions, right? So basically, it is not the ribbon. We're using Metastock software to show things, but internally it's not the same. and doesn't need to be same. So if you are used to using the other one, put all your ideas on a side, the existing Metastock user, because this is totally designed from scratch. All right, the green ribbon, right? So these ribbons are not the same ribbon. This is the horizontal time risk, right? I even discovered that. And I always wanted to know about neutralization. When is neutralizing, right? So they get rid of all these buyers or sellers. So as long as it's green, good to go. So this is what it looks like on a chart, right? We're going to show in a few minutes all of these things, right? So just be patient. So this is the horizontal time risk. This is for neutral, and for red is the STR2, right? And they are not the same, which comes with the Metastock software. That doesn't mean it is wrong, but this is designed differently. So what I did it to sum all these things, what you just learned, in a one place. I put it in one simple slide so you could study it, and they are the same one, nothing different here. So those are the 5 ingredients Jeff was talking about, and you need to know just simple shapes, and you good to go bullish. Same thing, we're going to go a little faster because we got to finish it up. So ingredients, right? So here, same way, opposite, we want to short it. All right, so we're going to see the red color direction line, which is right here, and you see everything goes down, then green line comes in, right? This is choppy, right? So you got to get used to market is choppy, but I prefer both lines horizontal. But for demonstration, it was not a good idea to find it what it is. That's what I'm showing you, not perfect picture look perfect. You got to get used to, and we teach you how to do this interpretation. But I prefer like this area. Those has the maximum juice. Then retracement comes, then they go down, and then it start going up. So you have a turbulence is going on. But you could find trades every day, right? And there is a way to find them. Like what we learn, right, on a health side, like internal health, you below 0, this blue line should be, number 2 should be below it, and below that is a purple line, has a value of -1, -4. As long as you could identify, everybody went to kindergarten, they went to school, preschool or high school, whatever it is, but you could identify these 3 colors and things like that. That's simple it gets. So what I do, I ignore everything else in the Magic Trader. When I need to trade, I'll look at them. So I avoid this, and I don't want to teach you. You remember I show you those symbols, you could turn them off, but don't change the sequence. You're going to get in trouble because those are the optimum way of trading. But if you are not liking some symbols, turn it off. But don't complain then, because you will be doing partial analytical work in your mind, right? At least you have to give yourself some time to learn it. So look at here. On a negative side, 0 is on top. Here is the bottom, right? Blue line, -1, and then -4 is right here. This is the ideal spot. This is the ideal spot. That doesn't mean, so I use these bumps to short it more. Retracement, right? Once you become a smart trader, you will know you want that upticks. So this is my uptick, right? Because NASDAQ rule, right? If you learn later on, you can short it, right? If it is going down. So this is a good place for me to short it. So I want them. Earlier they come is better. So there's nothing wrong, because people are, and you're going to learn eventually, they're going to do bull flag and bear flag. In this case, right, they are making bear flag. And there is a misconception. I was trained, I will not tell the name because we get in trouble here, right? She's a friend of Metastock, and number of years, many people in Metastock had dealt with this woman. She is the real inventor of bull flag and bear flag. So I'm not taking credit about it, but it is true. She knows bull flag and bear flag, and every now and then when I see people teaching all these immatures, sorry about that, and they butcher it. So I'm not claiming expert, but I was on her team on my prop trading, and thanks to her and a couple of people changed my life. She's tough, and scalping inspiration came from her. She scalps. I never realized she is scalping 100, 200 trades in a day without blinking. And then she will pick up her spot for swing trading. She's awesome. We all love her. She's a very good woman, good trader, smart. She's a money manager. Jeff, you know who I'm talking about, right? We don't want to talk people's name. I got in trouble from her. One of my students called her up. She said, don't call her. And she called me. Don't give my name because these people are wasting my time. You call me, it's okay. They want to make sure she exists. Can you believe that? One of my students did that. So we don't tell people's name anymore. All right, this is the bearish entry, right? And look at here. I prefer people to wait until it comes here, not this candle, this candle. All right, and we call this anchoring, and then look what happened after that. Once you see turquoise bar, this is a part of catalyst. Run, short cover. Sometimes I pray God it comes in so I could get out and take my profit. Indication when it comes -5, -6, I know that it's slowing down, and eventually you see the counter cycles, right? And then more selling came in, and this is the last call. You got to get the hell out of that if you are short. The same thing with your put option, right? And I exploit every symbol. So we are indicating what is happening in that particular time frame, and some people get intimidated, but it is risk based. So we want you to know the turquoise bar has a reversal risk. Is by design, it tells you the trend is going to change. It's an earlier warning. So don't pray God, take your money and run. Same thing you learn for bullish side, opposite to that. It's a pure health, and same explanation. When things are bad, you're shorting it, right? These are the spot. These are the times you could buy back and short it more. So the retracement happens. Those in this area, those spikes comes in, right? So the blue triangles. So this is the horizontal risk, right? So this based on time. That's what I figured out. There are different kind of risks. They follow the time, and you got to find them and put into the cluster. So once this ribbon has all those clustered, I feel safe. But that doesn't mean it's guaranteed safe, but I feel better that I have my, army with me. All right. So basically, this is the army. And here I know, so they're going to take profits and then they're going to do the bear flag. So I'll be shorting more. Why not? So this is where I put everything together, just like bullish side. This is for bearish side. Later on, you could go and scroll it down and apply all these things right yourself. This is as simple as that. High school degree is overreaching out. So this is the chart looks like, right? With all different things in one place. So here again, I will go very quick. Number one is a direction. This is the health indicator, right? Number three is a spike. Entry spike, we enter here, right? Then you do scalping. That's what I do. Then this was the end of the day. Take your money and run. And then look, advanced price specific institutions at the end of the day bought it. So you know what I do? Sometimes I buy right at the last moment and my option especially, and I get out at the open. First thing I get out, I take my money and run, right? And then this thing came in, he's telling me it's going to go down. So I'll start buying, and sell it somewhere here, right? As soon as these loosen up, I'm out, right? But you could stay in a trade, you will get the opportunity if you are a swing trader or whatever trader you are. All right, look here. Again, catalyst came in. It's telling we're going to go higher. So next day or next hour, whatever you're following, right, you could take the profits out. And if you don't, then when the spike comes in, you get out, you make less money. So this is how it is. So on a sell side, look here, right? It came in, it came earlier, so warning sign, right? So basically, I forgot to turn it off. Sorry about that. Let me, so people don't call me. All right. Okay. So now you could do short sim. If you are afraid of everything, parallel lines, all right, you could short right here, right? Or you could buy put option. There is a different expert for entry of calls and puts. So even if you do not have it, just common sense tells you, we are told this parallel line. So let's go and experiment. No guarantee. All right, regulator wants us to keep telling you guys, no guarantee. Even it's a parallel line, it can change. All right, now how to find these things? So we have a scanner there. It comes with the software. Five ingredient catalyst. So those yellow bar, indigo bar, yellow bar, and what do you call turquoise bar, they are all there. I'll show you in a minute. So basically, right, it's a BU. So we're going long, right? I put F means we using filter. So I don't want to look at $1 chart or anything less volume. I don't like to do it. So I like to trade 50 and up or 30 and up. Sometimes we go $10 because it has a high beta. So I could do, you know, bear put spread or what do you call spread. Depends, right? So I make more money. All right, this is what the scanner looks like. Exactly, you're going to get that. So here, every ingredients you saw it are tagged in. So I put those things. So for your knowledge, but it comes with number 1, number 2, number 3. So you don't have to worry about it. It is in order. So you scan them and you get these results. And these are those yellow bar, turquoise bar, black bar, right? And horizontal time risk also is there, and price perceptor. And you have a separate because Metastock I cannot do more than 12 columns, right? So we created a new one. You could use that scanner for advanced price perceptor where institution comes in. Most people don't use them. We're giving too much to them, too many scanners. I got about 1,000 scanner created. Do you think I have a time? No. Stay with basic initially, then you do all the experimentation. Look, I scan it. This is very recent 5.2, couple days earlier, right? Because I had to prepare these slides. So basically, it came in a scan, same exact thing. You could go back and check it out and look what happened. And you could find out what happened afterward. So multiple time frame, you could do the same thing. Or I did this one, it was already there, right? So it already lined up by itself. So you could do the same thing with a 60-minute scanner. And you are a scalper, you scalp that way. All right. So this is as close as you could get it. I prefer this lineup, right? I prefer the lineup. So usually with the yellow bar at the open, I go in there. So you enjoy intraday scalping, make money, and next day or whatever happened later, you could figure it out yourself on a chart. So the name of is ADPT, so you could figure it out. But this came right from the scanner. Same thing with the bearish side. Look at this here, right? Same scanner, but opposite side. 5 ingredients, catalyst, right? And it is BE. These are our own kind of, it's in a manual, whatever it says. Now I put those 1, 2, 3, 4, 5 here for you where to find the ingredients. So it's easy for anybody, right? With a little bit knowledge of symbols, how to recognize. And this about it. And we got this security. Let's see what happened there. So look at here, daily chart. And this was lined up by itself. And this came in here. So what? We wait for that if you're scared of everything. So wait for that. And you got a couple of dollars. And when you see, right, symbols like -5, -6, get the hell out of that. And that's it. You're done. And look here, spikes start coming earlier than reversal. So you definitely get out last call right here. And that's how it works. It's not a big project here. It's intimidating when you receive because you have to have Metastock salespeople educate you a little bit how to set it up, right? Practically, I'm not accessible because we keep, but I do communicate with traders through my alert room, right? That's what what do you call Jeff is going to tell you what to do. I go to talk very little about myself. No, my daughter first, right? ladies come first. And she is integral part of my life. This girl is a God blessing. Jeff, Kelly, everybody likes her. Everybody, right? And she put her young life with Magic Trader and FXTA. Since she was 7, 8 years old, I used to give her little work. And then in construction, doing estimating and measuring the plans. And then you could see how many skill sets she over the, because I went on Wall Street, I did mergers, acquisition, there's risk management, right? All the emerging markets, right? We did business overseas, solar project, this project. I owned many companies at one point. After I stock, I slowed down. But who did all these things? We have an office here in now it's in Hexville. But 2 o'clock in the morning, my office staff is sleeping, right? So who's helping me? My daughter. And she's going to school. She got 4.0 average, right? And many good awards. So I take pride of my children, right? They are not perfect. I'm not perfect either, but it is a God blessing. And everybody who has a children, you will be surprised if you put a little bit time, right? They will be doing much better than you do. And Magic Trader, all these symbols, selections, manual. She's the one who did, right? I had to handle other businesses. So who did all these things? She did it. And she also trading too. All right. So a little bit about me, right? In order to do it right, I went to get Series 663 and 7, and I was structuring a deal for Citigroup. I don't want to talk about it. Was a huge deal for artificial intelligence. A friend of mine developed, right, spying on market makers. So I said, oh, that's a good deal. I stayed with him 1 week, me and my wife, right? My wife likes to trade too. So me and my wife stayed there 1 week on 55th Street on a penthouse and want to know every damn thing. And he teamed up with the guy who invented Atari. Long story short, he showed me real time, real money. In half an hour, he makes $500,000. So, woo! Right? I was already have a relationship with travelers and Sandoval and all those geniuses. I used to hang around with them, including my children in a smart Smith Barney theater, right? So I went and talked to the right people. I said, hey, right, Citibank can make a lot of money. Or at that time was a Citigroup, become Citigroup. So all right, bring him on. So we want, and then 1 week before, I think no, 10 days before, I told this guy, he was NYU professor, how I'm going to get paid? He said, you got to have Series 7. If the deal is done on next 10 days, if you don't have Series 7, you can't say nothing or you will not make any money. So can you help me? I called, the people who open up the window. He said, no, we can't. They made a one phone call and I got my window open. Now I got to technically 10 days gross and 7 days in reality. And I got to pass 7. But at that time with Paine Weber, I was one of the heavy duty option trader. So part 2 was like a joke for me. I finished in 2 hours and I got my Series 7. I went to see him and the guy, listen to this, the team behind, he's yelling at me. I said, I don't want to say his name, right? I said, Mr. Right, Professor, right? I got 95 on the second part and the other one 78. He said, you wasted your time. I said, how come you say that? I worked so hard. You didn't even give me time. You overstudy it. I'm giving some of the traders message. I learned something from him. Do only what is necessary. That's what the message was. Change my life. And my life changed in a way I become more efficient. So Magic Trader can show 10 different things. Focus on what you want to do it, right? And that's what I would say. I'll go very quick. This technology is based on believers. When people believe to pull the trigger, it identifies. How? It's based on a risk or the risk cluster, and we put it together. I'm not going to tell which risk. Previous recordings will tell you it is reality. And not all will show up at once. It has a sequence priorities, right? But you will have, right, a lot of things you never knew what is really happening every candle. It's very interesting. Institutions do care. That's how I figured all out. You're putting 10 million, $50 million position, right? At every, we call cliff, right? 50,000 shares, right? Just figure out heavy duty money goes in there. You have to be knowing what the hell is other institution doing there, what they're doing. You want to know, you want to be with them. And if you don't have this color, you are a loser, or you're making not too much money for your client. All right, so these are not the lines you are used to, but it is there. I just want to put it out there. As long as it's about these 2 lines, you are good to go. And that's a trend. So you could identify the trend, and they are not the lines, right? I don't want to go in a bash about it, but every trader knows, but everybody keeps their mouth shut. But I went in a different way, right? Different approach, and created line in a sand. And this line took me 6 months to figure it out. If it was your regular, regular indicator, I don't need to spend 6 months, right? And I struggle to design this. This was developed just after that, put a stops, right? So I want to put where to put the stops. So this was created. There's a method of madness to use it. But line in a sand, that was the first line was created for Euro and changed my life. The whole magic trader, and I knew on one side all the bulls are that they believe to stay long. So I want to know where this line becomes so important and where to take profit, or risk mean reversion. So I want to pull back right here, I'll take the positions again, right? Those kind of applications are there. Same thing on a bear side. You don't chicken out if it closed below it. So you got to give yourself a time sometime. Jeff is going to take it over from here. We're going to answer Q&A if there is one. But Jeff, please take it over. Show them your expertise for Magic Trader.
All right. Thank you, Peter. Appreciate that. If you have any questions, let us know in the chat. Let me go ahead and grab the presentation real quick. And I just kind of want to talk a little bit about the add-on, the room that that Peter offers, and kind of the offer that we're going to do, which is a really good one. So let me go ahead and kind of do this. I think Peter did a really good job of talking about Magic Trader. Of course, it's going to have the ability. Oh my! I turned on my monitor and it's the only thing I can see, or my camera. Oh, let me get back to where I can see the chart. Okay, so you should be able to see my screen. You should be able to see everything. If you have questions, let me know. Peter did a really good job talking about the ingredients and kind of what they do, and the scanning and the fact that you can run scans. I love scanning in Metastock. It's my favorite thing. What I wanted to show is how easy it is to kind of put things together. One of the things that I wanted to highlight particularly is the development that Peter did on the Expert Advisor, and particularly the commentary. I also kind of want to talk a little bit about this gold chart, just so you can kind of see it. As you kind of get started with Magic Trader, the first thing that you really want to get in tune with is what the ingredients are. So what I've got is I've got the Magic Trader chart up here. I'm going to kind of zoom in a little bit. I love with 19 how easy it is to zoom in, and we can kind of just maybe go right here onto the current day, which I am on the current day. So right now we're just looking at this one. And I love how well Peter put this together, because it's going to kind of tell you exactly what's going on. So if I'm looking at gold today, obviously we had a little bit of an indigo bar yesterday. You can see that says that it's the indigo bar warning. But I just want to show you exactly, if I just want to get a summary of what's going on currently, well, my magic direction line is bearish. My health indicator is bearish. My spectrum spike is bearish. My pure health and my time risk are all bearish. So it kind of breaks everything down for you. As we kind of go down in here, you can kind of see exactly a breakdown of everything that's going on, how long ago all those things were bearish, that kind of stuff. But as you're getting used to stuff, it's very, very good to have that written down. Also, I just kind of want to go back here to, we'll just kind of zoom in right here. Kind of take a little bit of a look at this yellow bar. Actually, maybe this one instead. And it does take a little bit of a second or two to load, so kind of bear with me as it kind of loads in. Oh, wait, I'd have it. I have it stuck on there's a fast forward. You see right here, it says fast forward. That just holds it to the current bar, which means you can't really change it. Now I have changed it. If we're kind of looking at gold way back here before we kind of had a big run up, you can see that you had your yellow bar, bullish, 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 bullish. Everything is kind of reading bullish. And so as you're getting started, when I got started kind of using Magic Trader, I kind of read through the manual. Peter also did a really, really good job of denoting that in the manual. But this is a good way to kind of get started. Another thing that's a good way to get started is all of the information that Peter includes as part of that. Neil asked in the chat, at what time does Mark Leibovit start? We'll be starting him within about 5 or 10 minutes. Thanks for the question. All right. So let me kind of go in here. You can scan. There's all kinds of explorations that are available in here. If I wanted to kind of run in and run a scan on the 5 ingredients, that is one of the explorations you can run. And I'm just going to do a search. I like how in Metastock, you can now search for the scanner that you're looking for. But right here, if I just want to do a 5 ingredient scan, I can run through that. You can look at the reports. It's very, very easy to kind of piece together. And I love kind of how this works. I liked how it worked in 17, and I love all the changes that they've made along the ways just to help you find the stuff that you're looking for in the new versions. So let's kind of talk a little bit about what's included here. The first thing I want to talk about is the Magic Trader Education Room. This is a room that meets right now. It's every Wednesday. It's a service that Peter provides that a lot of people are very, very happy with that are in the room. So I understand, Neil, we are running a little bit late. Mark will be starting in just a minute. Thank you. All right, I'm going to get through this in just a few minutes. So have a little bit of patience, please. Thank you. All right. In the consulting education room, there's going to be a lot of different topics. Here's a complete list. I'm sure I'm not going to kind of go through this entire list, but they talk all the time. People that are in this about different strategies, you can see right here, there's volume weighted average price, spikes, Fibonacci, all kinds of different topics that are discussed. There's all kinds of different patterns. These are all part of the elite room, things that are kind of coming in. Here's another things on just the option topics. So it's a very, very educational room. Here's some different option strategies that are included with that. And as part of the offer, wait. Okay, yeah. As part of the offer, you're also going to get access to the private Facebook room as well as the magictrader.com. So as part of the Magic Trader add-on, you're going to get 58 indicators. As part of that, you're going to get 47 different explorations, 2 expert advisors, 35 templates, a 127-page manual. In it, there's 102 different symbols, all the commentaries I just showed you, as well as the highlights. So normally the add-on is for Magic Trader Elite is $199 per month. We do have some special offers that include access to the Elite Room as well as the Magic Trader. I'm going to talk about those as in just a second. Also, in addition to the Magic Trader, when you get the Magic Trader, you're going to get a boot camp class. You're also going to get a Fundamental of Magic Trader course. This is a course that normally sells for about $999. You can see it here. And in that is 20 hours of recording that we did with Peter to talk about the different parts of the Magic Trader Elite. So total value of today's package, if you do 3 months of the Elite Room, that would be about $597 for Magic Trader Elite. It'd be $897 for the Elite Room. And then for the training, that would normally be $999. So the total value would be $2,493. Here at the event today, what we're going to do is we're going to do a special offer where you have 3 months of access to everything and permanent access to the fundamentals training. So with the package, we're going to give you 3 months of the Magic Trader Elite. We're going to give you the educational alert room, which would be a total of 3 months. And we're also going to give you that fundamentals package. The difference is instead of being $24.97, it's going to be $9.97. Okay. To do that, you also get the recorded boot camp. You also get the educational portal. All that stuff is included. Special offer, it's good for a week. You can do that by giving us a call at 800-882-3040. You can also go to metastock.com/saleschat, and that's how to do it. 800-882-3040, metastock.com/sales chat. Both of those will actually get you there. So I do want to say thank you to Peter for being here today, for all the work that he's done, for all the contributions he's done to Metastock over the years. And give us a call, 800-882-3040. All right, cool. I do want to, we are going to give away a little bit of a prize, and then we're going to kind of move on to our final speaker of the day. Before we do that, I want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine has been providing support for the events that we've been running. Biggest magazine in the industry, something I've been getting for like 27 years now. You can get a magazine, the Stocks and Commodities Magazine, by going to www.traders.com. They've had 17,000 articles over the years, 1.2 million subscribers, and they've been publishing since 1982. Okay. Ooh, what happened there? Oh, I clicked on Stocks and Commodities Magazine. All right, and we're going to do a quick prize. We've got a prize drawing. Greg, can you give me a hand with the prize?
You know I can.
It's the last speaker of the day, which means we're going to do the Metastock Mega Prize. And
awesome.
To kind of keep it faster, I'll just tell you what that is. We're going to include 3 months of Metastock real time. That's value of $300. We're going to give you 3 months of the data, the Zenith data that powers Metastock. They spent $1 billion designing it, has some of the best news and research information on the planet. They built it to be a competitor to Bloomberg, which is by itself about $1,800 a month is what I understand. We're going to give you 3 months of that as well. We're going to throw in 3 months of Learn Metastock. It's going to help you get started with it. We're going to, of course, throw in the white glove service treatment where you can kind of sit down with a rep. They'll show you how to use the program. They'll get you real comfortable with it. And we're going to also throw in the Unleash the Power of Metastock. So big, huge Metastock.
Sounds like a lot.
Yeah.
I heard that's all really good stuff. That's what they say.
Yep. Let's get a number.
Do it.
All right.
Between
What I'm
you and 6,211 still, or did it, I guess it must have gone up.
I actually haven't pulled. It's 6,211 between 2 and 6,211.
All right. Here we go. That would be. Are you ready?
Yes.
4,193. 4193, according to Google Random Number Generator.
Okay. That is, I'm going to say a Zarko B. In Croatia. We have a Croatian winner. Awesome. So I'm not sure what time it is in Croatia, but if you're listening, good morning, probably.
I don't think it's dinner.
You can say hi in the chat. Okay. All right. Thank you very much for the assist, Greg.
See you later.
All right. Bye-bye. See you at the end. All right. Our next presenter is Mark Leibovit, who's going to come in for popular demand. Mark is a top market timer. He does a lot of work on gold. He's got a lot of newsletters and does a lot of research. When I say he's a top market timer, there's actually a company that's called Market Timer Digest, and they'll actually keep track of recommendations. He's been a top market timer for gold, among other things. It's a very, very prestigious contest from what I understand. And I'll let Mark talk more about that if he wants, but he's been rated several times as the top market timer. Mark, let's go ahead and get you started. How you doing?
Pretty good. Can you hear me?
I can hear you. Yeah, you sound great.
Yeah. Okay. Can you see me though? Share my webcam. Is that what I have to hit? Share my webcam.
That'll share your face. Yes.
Okay.
There
I am.
I can't see you though, but yeah, I think everybody else can. It's just, but
I can see you and Mark, but I cannot yet see a screen.
Okay. And Mark, I just said make presenter, so it should have popped up a thing that says, do you want to share your screen?
Okay, there we go. Show my screen.
I can see
so
it.
Far, so good.
Yeah.
There you go. You see that?
I do see the non-expanded PowerPoint.
Yeah, right. Okay, from beginning. Yeah, there we go.
All right, looks perfect.
Hey,
it's all yours.
It actually works.
Yeah. I know we're starting a little bit late. We've been running a little bit late the last couple sessions, so feel free to go as long as you need to.
Listen, I'm happy. I'm here taking care of my 2 dogs and recovering from the market today, so I actually enjoyed being late.
Okay, well, we're happy to have you. I'm going to let you start, and I'll just get out of the way at this point.
Okay, Jeff, thank you. Appreciate the opportunity. And you say I'm the last presenter of the day, correct?
Right.
Yeah.
So you don't need to be worried about like stop times and stuff.
Yeah, I have a webinar actually coming up in about an hour, so I can't sit here, forever anyway. But thanks for letting me know about the timing. All right, hi everybody. So here I am. I love being with Jeff and Metastock, and it's been about 14 years, I believe, since we started working together. And I produced the Leibovit newsletters. Originally, it was called the volume reversal survey. I think there's a slide here when we launched way back. This sort of dates me back in 1979 when we launched the original letter. Now it's vrtrader.com. Leibovit newsletters, that's another way of getting into it. Those are all our newsletters up on the screen. So as Jeff mentioned, we cover a lot of markets. Particularly excited about the cannabis group right now. We have the blockchain letter, as you know. Bitcoin went over 101,000 in trading today, and we're going to have some slides on various cryptos and stuff that we track as well. But this is our newsletter. We are offering 50% off. Half off is the promo code. Yeah, this was the volume reversal survey way back in 1979. I do a weekly podcast, which I have to do after I get off the air today with HouseStreet.com up in Canada. The most recent title was the U.S. stock market may have bottomed. So we seem to be on track there a little bit, at least for this current rally. And I'm a bit more bullish than that, as you'll hear. Timer Digest, Timer Ranking. Used to be an elf with Louis Rukeyser on the old Wall Street TV show way back. The old timers know me. Young traders probably never even heard of it, but this was big for me on PBS back in the 80s and 90s, and along with Paul Kangas on the Nightly Business Report. For 30 years, I was a market monitor guest, so I owe a lot to PBS. Even though they just got defunded by the government, I still owe PBS thanks for the exposure I had over the years. The Trader's Book of Volume, this is sort of my pride and joy. 2011, we published it. We're working on a sequel book now, covers just about all, if not all, the volume indicators out there. It's about nearly 500 pages, including my proprietary volume reversal. So I encourage you to buy it on Amazon, and it gives you some insights that you really don't get in other research or other books, because the focus is almost strictly on volume, which is my whole theory, that volume precedes price. And I sort of picked up on that when I was a floor trader on the CBOE way back in the 1970s and 80s, when the exchange was first being launched. And back when I was down there, when we first started trading, there were no puts, only call options, believe it or not. But anyway, watching the markets move and how stocks traded up and moved with volume sort of gave me the clue to help emphasize that indicator. And the volume reversal is a registered trademark, by the way. I'm really proud of the annual forecast model. I want to get into this right away because I know a lot of you are trying to predict or think where the market is headed. We've been doing this since 1987 when we put out a model, almost jokingly, because people kept asking, as they still do, where do you think the market's going? So I had to put a lot of stuff together, a lot of cyclical work, along with my own intuition and volume, and we created this annual forecast model. And for an example, in 2023, we put out the forecast, which is the vertical bar lines you see, and the yellow line is the actual result for 2023. This is for the Dow. We had, this is our Bitcoin forecast. This is from 2023. The vertical lines was the forecast, and the actual result was the yellow line. This was the Dow for last year. We had a forecast. Again, this comes out at the beginning of the year in January, and this was our vertical lines, was where I thought the year would go. And I have to caution, that we don't have a crystal ball. I sort of joke about, the weatherman making a forecast, but always looking out the window. That is referring to your short-term indicators before you pull the plug on your forecast, but you certainly want some confirmation before you, jump in on a trade. So this worked out really well. And early on, I just wanted to show you, and this is valuable stuff. I mean, we actually have our VR forecaster report, which covers not only the Dow, gold, Bitcoin, copper, silver, treasury bonds, US dollar, and so forth. And this is just one chart from the extensive report, which you can purchase on our website. But this is our forecast for 2025. And this was put out in January. And as you can see from the chart, I think we're going to new highs, and it's going to be a good year. And if you look and see where the indigestion is, it's in the current time frame that we're in right now. And I'm not going to give out the exact targets. That's for my clients, but I think it's going to be a positive year, and I'm not worrying about 2026, 2027. We'll see where it takes us. But the anxiety and panic we saw here in the market in recent weeks, coupled with our model, I think all fits in together, and nothing goes straight up. The model is not 100%. As you can see from the previous ones, you get little zigzags along the way, but the overall impression is up. So I'm a bull, and you know, you got to look at your charts for trading entry points, and I tend to be short term in my stuff anyway. So really quickly, I want to jump into the crypto area and my blockchain letter, which I'm really excited about, because I honestly believe the biggest percentage gains we're going to see the next couple of years is going to be in the crypto space. We can be looking at a Dow Industrials or an S&P, and you can be happy that you got a 10 or 15 or even 20% gain. But with some of these blockchain cryptos, you could be getting at 100, 300 to 500% type numbers in some particular cryptos. For example, XRP, which we're going to have a visual of coming up a little bit, was trading about 50 cents just about a year ago, went to $3.60. So you had hundreds of percent, 350% gain in that one. And, you know, there's probably more of that still coming. So with those type of returns, obviously, like anything else, it's an asset allocation decision. Like anything else, you don't put everything in it, but I think this is where the real excitement is. The story just came out a couple of days ago that Eric Trump is using the World Liberty stablecoin to close a $2 billion deal. So this is real stuff, and Congress is now working on legislation. It's called the Genius Bill. It's going to take some time. It may take until next summer, but basically the whole idea is to create a level playing field for crypto. And as you know, there are already ETFs trading like GBTC, the Bitcoin Trust, and of course the big one that BlackRock created with Larry Fink last spring, and that really kicked Bitcoin off to the upside. Right now, there are 18 ETFs filed for the SEC for XRP, and as I mentioned, this is one of my favorites. I think it's around $2.20. It was low as 50 cents, high as 350, 360. Certainly, when all these ETFs start trading, there's going to be some buying pressure on the XRP, and that's only part of the game. It really depends on what XRP actually does, how the government gets involved in its usage, how the world gets involved in its usage. There was talk that the BRICS nation wanted to use XRP. So I just want to bring this to your attention as something you got to keep an eye on. Just briefly, these are some of the ones that I track. The Stellar XLM, we're just going to flip through some of these. Of course, the XRP that I just mentioned, these charts are about a day old, just to let you know. The XDC network, that's another hot one. They're all very cheap, as you can see, so there's a lot of upside potential. Shiba Inu, which is more of a meme, I guess, coin, you know, it's more of a speculation, but this has moved around quite a bit, so it's popular among traders. The IOTA USD, Bitcoin, this is another one. Caspa USD. You can see that some of them are 7, 10 cents. I mean, this is the range that they've been trading in recently. Miro USD, this is 2.5 cents. Litecoin is more expensive, that's $87. And Ondo, which is about 90 cents, that's another important one. So I just want to throw those at you. I'm a little biased because of the thing. And, you know, of course, we can use Metastock and our charting tools. For example, the XRP, when the ETF starts to trade, you know, obviously we have a missing component with all the additional charting that we would like to have without it, but you know, we have it already with IBIT and a bunch of ETFs and stocks like Coinbase and the ETF for that one, and on and on and on. So we still have plenty of ways to trade the market. Ethereum, of course, but going forward, I'm looking forward to those other ETFs. That's me in the Metastock studios in Salt Lake City a couple years ago. And this, when you go to our website, this is the video you could run if you miss some of the things that I'm talking about here. If you go to the Metastock website, and I guess this is a bit of a commercial, and you just pull up the Leibovit volume reversal toolkit. There's a nice video there which goes into a lot of detail along with Jeff Gibby's explanation and along with my introduction. So this gives you a little bit more background than you might hear during this presentation. So go to metastock.com and check it out. So what we're going to look at today, and I'm jumping right into this, there's a lot of other indicators and cycles and stuff that I play with. Who if you're following my work and read my newsletter, you know that I'm all over the place in terms of trying to figure out market direction and timing. And I guess that's why I still consider myself a survivor, having done this for now nearly 45 years. What we're going to show here are some just examples on Metastock of the volume reversal. There are 3 versions on the platform. We don't have time to go into all of them. The favorite that I like is the sequential, which shows all the volume reversals. There's one called the directional, which edits out the repetitive volume reversals. And we have another version called the 2-day, based on the theory that when we get a volume reversal, we tend to get a move a couple days in the direction of volume. But for here, we're going to use the sequential because it's easier to cover in a short presentation. So it's sort of a skeleton chart of what we're looking at here. We're going to look at some real charts in just a second. This is sort of the idea that when you see a chart, you see the little volume reversals, little blue arrows, and they're red when we're going in the opposite direction. This is sort of an idea of what the general idea is looking at them. And we try to keep the charts really simple. I don't have a bunch of indicators up there, as you'll see in a moment. And my primary focus is the direction of volume. And I have to emphasize a lot of this is for trading purposes. I just got a little text just now on my phone that XRP was up 5.39% today to 232. So in one day, XRP was up 5%. Imagine what that is for the stock market if you're up 5% one day in the stock market. So XRP had a nice little move there today. Anyway, getting back to reality here. So let's look at some examples. I do have Metastock connected here, and if we have time and if the technicals work out for us here, we can pull up some individual charts based on listener questions and so forth. So this is just an example. This is some stocks that I've been trading and ones that I follow. We're looking at maybe 7 or 8 examples here. This is Peabody Energy. This is the coal company. And what I'm trying to show you is here how the volume reversal plays into my thinking. Just recently here, if I can circle around here, and I want to explain a little bit what you're looking at. So you've got my basic bar chart, no candlestick, just a straight bar chart. We have a 200-day, 150-day, 50-day, and 20-day moving average. I just put it up there because I want to know where they are, and because so many people look at moving averages, particularly the 50-day. In the bottom middle of the screen, we have a 533 stochastic, which I use as a little bit of a momentum indicator. So my ideal trade is when I get a positive volume reversal, as you're seeing here as I'm circling, particularly if it comes off a low. We can look at some of the others in just a moment. And I have a rising stochastic, and this gets me long the stock. And we had a nice little move, from $9 up to $15. And this stock is way down, as you know, from the 30s. And Donald Trump has come in with support for the coal companies. And a lot of the coal stocks have been doing better. But Peabody in particular is one of the bigger known names. So this is one that we've been trading and been successful with. But along the way, I just want to show you some of the other VRs and the way we use them. I'm looking back here last November where we get a negative VR and a declining stochastic, and sure enough, Peabody is going down, particularly immediately after the signal, which is really important here, because if you're trading on a 2-day, 3-day basis, which I tend to do, if you get a negative VR, you want hopefully some immediate gratification. So you get it right away there, and even on some positive VRs here, you get a day or two move up and then a negative VR and it continues down and so forth. So that's what I'm looking for, essentially, is a change in volume. I get a picture of where the stock is and trade accordingly. And if I'm real aggressive, I tend to take a trade in a day or two. If I'm thinking as back here in the last couple of weeks here with Peabody, particularly with the political story and coal being supported by the government, that perhaps a bigger move is underway. So then we just moved on to Taiwan Semiconductor. That's another one of my favorite trading stocks. And why? Because the VRs really work. And this is what I'm really trying to point out here. We can't look at all of them. There's a bunch on the screen. You can see here with the positive ones. It went up right after each of them. What is this saying? Institutional money, smart money, trader money, whatever you want to call it, is either buying or selling the stock. And usually it creates some momentum in that direction. So in just the last, a couple weeks or so, we got negative VR and the sellers came in and sure enough, it trended down for, a couple days. And then we got a negative here and then immediately reversed with a positive and it took off here in the last 2 weeks. So in each instance, the stochastic was in line with the little short-term signal. So the most recent signal in Taiwan, of course, this is not up to date. This is not a live chart, so I can't tell you whether we had a negative or positive here in the last day or so. I think we did this chart 2 days ago, so I have to put up a live chart. But this is another one of my trading favorites. Taiwan is down from, I believe, $230 a share. It got down to about 136. They're building a huge semiconductor plant right here in Phoenix, where I'm based. $500 billion. Some huge number was announced when the president of the company of Taiwan was talking in the White House 3 weeks ago. So, you could drive here about 20 minutes from where I live and you could see the huge Taiwan semiconductor facility going up. So that's pretty impressive. And we know the world needs semiconductors. So I'm a little prejudiced to Taiwan both as a company and as a trading vehicle. And you can see it's got some nice little swings here. Let's see, everybody wants to talk about Tesla. It's one of my favorite trading stocks. And why? Because we get some nice trading signals with our little VR indicator. In just the last 10 days or so, we had a nice little positive VR, rising stochastic, and sure, it takes off. I might have traded out of it a day or two later just because I like to take trades. But in each of these instances, it gives you a sense of where short-term volume is headed and, where the traders are what they're thinking. But way back here, you can see back in December where a negative VR comes in and the thing just falls apart for a few days. Then I guess sentiment changed a little bit and positive VR came in, so buyers decided to step in. There was a nice trade there for several days to the upside, and then negative VRs came in again here back in January, and sure enough, it came down. So on and on and on. I don't want to beat a dead horse about it, but basically these volume shifts, if you're a trader, what you really need to do is, you don't have to be like me because I focus almost strictly on this because I'm been doing this for 45 years. But I would definitely encourage you to add this to your arsenal of indicators here at Metastock. Put the VR up there along with your other tools that you're using, and this will give you a good complementary or even contradictory signal about what may be happening in your stock or index. So that's a little prejudice there, but I think it's definitely something that is worth using. And I consider myself a survivor. I've been doing this for all these decades, and if I didn't have this tool, I don't think I'd be doing this today. Let's see what we got here. Let's see, who was that? SPRT. So physical gold. This is GLD. No, the CEF. This is another one of my favorites. This is the Central Fund of Canada. CEF. Now it's the Sprott physical gold. That's why I got thrown off looking at the title on the screen. This was created, believe it or not, back in 1964 as a Central Fund of Canada, and it's 50% gold, 50% silver, or roughly. I mean, it might be 45, 55. Something like that, but just great signals in terms of if you're looking for a vehicle that it's physical gold and silver, it's Canadian based, and I've been trading this now literally for 30 years on and off as I was involved with the gold market. But just on a trading basis, you get some pretty good trading signals in this. Of course, since it's a combination of silver and gold, it might be a little bit off compared to what silver and gold are doing that particular day, but the overall patterns seem to work. And as you know, silver tends to move with gold more than it doesn't. So, again, the most recent signal, by the way, is a negative VR. And in my newsletter, I putting out some gold and silver ETF hedges on the short side because it looked like we hit a little trading top here So if you're a subscriber to the letter, you know that we recommended a couple inverse ETFs in gold and silver. Again, not a bear or big picture. I'm just trading, of course, but it said that we got some selling coming in and we're going to head down for a little bit. So just let you know, we see this type of correlation where there is follow through. You do want to respect the signal. Let's see what we got here. So here's the Dow Jones Industrial Average, and let's see what we got going here. I believe this is I put this up, but the 5-minute chart. I get questions about this all the time, and let me just back up a second. Did I have the daily here? No, I didn't put it. I skipped Bitcoin. I'm gonna have to go back to that in a minute. I keep getting questions about the signals. Can I use those intraday? So I got this chart put together. This is the Dow Jones, the DIA, the ETF for the Dow Jones on a 5-minute VR chart. Now I use daily charts, but we have questions. Hey, can we use this intraday? 5-minute, 30-minute, 15-minute. I think I have a couple examples here. So I don't use this, but if you look at the chart, you can see even on a 5-minute basis some really great correlations here in terms of the VR telling you what may be happening on a 5-minute chart. And honestly, I would have to experiment with this even more because I don't trade on a 5-minute basis. But just to answer subscriber questions and listener questions, I wanted to create this chart for this presentation. And I'm learning a little bit as you are because I'm seeing some nice correlation here with negative VRs in an intraday 5-minute chart and positive VR. So each of these bars, I guess, represents 5 minutes. So you get a VR and it drops for about 20 minutes. I mean, that certainly is worth trading if you're looking to trade the futures or trade this SPY or the Dow Jones. So I think I have this mislabeled. It says SPY 5-minute, but it actually is the Dow Jones. I'm looking at the title and looking at the chart here. This is the SPY in a 15-minute chart using the VRs. And you can see, again, some nice correlations on an intraday basis for very short-term swings in the market. So during the day, when there are some shifts intraday, and again, I must caution, I don't trade this way, but I just wanted to show this because you can put up 30-minute charts, 60-minute charts, daily, weekly, just about any time frame you want and test it out and see one which works better for you if you're an intraday futures trader. But this is the first time, by the way, in all the years that I've been doing these presentations, I actually showed intraday charts for the VR. I generally just focus on the daily charts, but I think this is really great that it does work and there is some correlation there. Of course, you're going to want to tie it in with some of your other indicators. I believe this is the Dow Jones. This is on your daily chart, the DIA, the spider DJI of the daily chart. And you can see here, when we started hitting down here in February, negative VRs right at the top. We had the big sell-off. And then this is our little crash low, as we just had here in the beginning of April. But on the retest, we got a positive VR right off that bottom. And then, we took off, and this sort of brings us up to date. We're a little bit higher now since this chart's about a day or two old. But you can see here that the nice volume signals were giving you some warning here, even going back to December. Nice trade to the downside for a few days. Positive VR comes here in early January, right at the beginning of the year. And the Dow Jones took off. And then, of course, after a little bit of rally, we started getting some sell signals. So this is what I use. I look at the daily charts. Let's see what we got here. This is the Dow Jones on a 5-minute chart. I was looking at the spider before, again, just to give you a sense of what that looks like on a 5-minute basis. And I would encourage you to test this on Metastock and look at the signals and see if they fit your trading. There's the Dow on the DIA. Again, these are not the futures. This is the ETF. So it's a 15-minute chart reading on the Dow on the 15-minute chart. And again, I'm learning with you here to see how well this works in terms of short-term trading. But you got to play with the 5-minute, 30-minute if you're interested in that situation. Let me back up to a couple charts here. I think I missed. Yeah, this is the Bitcoin GPTC chart. And, it's wild because it trades, as you know, crazily all over the place. But, Bitcoin's into a new recovery highs now. And we did get a positive VR, but it's not on the screen. It was a couple of days back. But meanwhile, you can see here there was a VR here as we had a nice little move up here a few days ago. Then we had a couple of days negative, and as it was coming down, we had some negative signals as well. Little negative VR here, and it sold off, and we had a positive VR and it moved up for a few days. In fact, several positive VRs as it started to rally. So like anything else, you have to know where your stops are. And I didn't really get into that so much, or maybe I'll take a moment to do that now in terms of the way I use the indicator. And this is, of course, on a daily chart. So what I tend to do is if I get a negative VR like the one we're looking at here, this is back in January, GBTC, my mental stop is the high from the day before. Okay, so if this is a little high point in the chart, I got my arrow on that right now, and a negative volume reversal comes in, I'm saying to myself, if sellers came in right off that level, that's got to be a short-term top of some kind, because they're coming in and they're selling. So that becomes a stop. So the question is, where do you want to get out? Do you take a trade for a day or two, or you hang around a little bit? If you waited long enough, you actually got a positive VR, and that would have gotten you out for certain, because it did rally after that. So the inverse is true on a positive VR, where I would use the low from the day prior to the VR as your mental stop. So if it turns up here, I would use the low from the previous day and say, well, that's my mental stop. I don't want to see it go below that if I'm trading the long side. Over here, some good examples here. You don't want it to go below from where the buying came in, where the volume pressure started to come into the upside. So to summarize, if you're playing the long side, you want to keep a mental stop from the day before, the low on the long side if you get a VR, and if you're shorting and you're looking to exit, you want to use the high from the day before as your mental stop on a VR. So I went through this pretty quickly, Jeff, in terms of the VR. There's a lot of other stuff we can talk about here about my other cycle work and things that I cover in the market. I don't know if some listeners want to go over some individuals to the charts, and rather than get it, okay.
Yeah, and I don't know that we'll have a lot of symbol requests, but we've been having a nice chat about the Lewis show. Reg says he remembers it. In today's terms, it was a bit basic, but as a young new stockbroker, it was fantastic. Lewis had a great sense of humor and presentation, very relatable, on one of the old PBS channels. So
yeah, well, wonderful man. It was an honor that I got a call one day and he wanted me to be involved on his TV show, considering I'm not a big Wall Street guy, particularly back then, and I'm actually living out in Sedona, Arizona, and he had some of the big names of the Wall Street as elves on the show, and I'm sure you know some of the names like Marty Zweig and others who are really major players in the business. And he invited me to join that group. So it was probably the highlight of my life in terms of that honor that I actually got a call from Lewis. Wonderful guy. And unfortunately, he passed away, and was it 2006, I think, 2007 from bone cancer. But he was the leader in financial broadcasting.
Neil wants to know if you could look at WYNN, WYNN.
All right, so I want to pull up the Metastock chart. Let's see what we can do here. I want to get out of that. I want to get the Metastock. There we go. Is it WYNN or .o? Do you know?
You want to go one up to where it says instruments. Just click up one. There you go. WYNN.o. Okay. I was like, well, wait, where is it?
No, it's slow. It's slow. I got to get this screen out of the way here. Hold on a second. What happened here? You're looking at me. I want to move this. I have this thing on the top right here, which shows all the. I can't see the chart on the right because those boxes here showing instructions. How do I move that, Jeff, to get that off the screen?
Oh, there's a little orange arrow, and if you click on that, it'll minimize it, much smaller. Do you see what I'm talking about?
Okay. Yeah, there we go. Okay. Yeah, okay, because I can't see the chart. All right, so I'm looking at it for the first time as you are. There's so many stocks out there. So what we had here in the last three weeks, couple negative VRs, nice little sell-off, positive VR literally at the bottom here in April. Nice little move up. There was a little negative VR. Looks like about 6-7 days ago. It was only a day or two down, and then it reversed up. But there was not a positive VR telling you to get long again. So you'd have been short. You would have either taken a profit or stopped out. But before that, you'd have been long here. Let's see what date that was. Looks like April 8th. You got the signal. So this little tool here on the left side here, when you click on the signal, the VR, it gives you instructions, or it should give you instructions in the box to the left. So let's see here what's happening.
It's up. It came up.
It's up. Yeah. So it says positive VR signal long and stop, and it gives you the stop. So but based on what I was telling you, you would just use roughly the low from the previous day if you got a positive VR and trade accordingly. But it does give you that little box on the left there. So yeah, that's cool about the expert advisor, that it does give you a little description. So that's the daily chart. I mean, we can look at a weekly chart on it since we can do weeklies and stuff here, see what that looks like. Let's see here. You know, there's a lot of noise here in terms of, oh, I looked the wrong way. Let's blow it up. All right, so your weekly chart on Win had some pretty good stuff here. I mean, you know, this is coming down from last year, you know, last May, negative VR and had a big sell-off. It didn't not give you a buy at the bottom. And you know, like anything else, you want to look at your weekly and daily charts here. I don't see a positive VR on the weekly chart, though we did see it on the daily chart a few moments ago. So look at both, and I'm in the daily time frame, so I tend to focus on that. You have another stock, I guess, to look at?
I do. Neil also wanted to look at DAL.
Oh, Delta. Okay.
Yeah.
Wow. I know the airlines have been improving here recently, particularly with crude oil coming down. So I don't know, I keep getting that other picture up there. Trying to get this little bar off the screen.
You can also grab it at the top above the arrow and move it somewhere else if you don't like where it's at.
Uh-huh. Try to grab it. It's not grabbing. There it goes. Okay. I moved it over. Yeah, I can move it all over the place. I'm looking at myself here on the screen. I don't want to look at myself. Right.
Yeah,
This is a daily chart of it, and you know, has some. You know, it looks like a couple nice trades going back here into the first quarter of the year. We had some nice little, you know, negative trading signals here, 2 or 3 here, another one here. You had a one positive, it only rallied one day, negative, and it really collapsed. And we had a nice little positive VR here. Looked at March, and it rallied for a day or two. Then negatives came in again, and it's been sort of neutral here on the daily chart. You have circling in this area in the last, you know, I guess 20, 30 days, not a clear VR signal. Doesn't mean it can't go up. It just means I'm not getting a clear shift in volume and delta. But along the way, I see some nice little trading signals on the VRs, negative and positive. Remember, this is a daily time frame. You have another one, or you want to go to weekly?
Let's see. We have a question from Reg. Reg would like to know what the numbers associated with the signals are. So, like where it says 2 and 3, what is that? What is those? And then even on the right hand or on the left hand, you've got it all the way up to -5. What do the numbers mean? Is what Reg is asking.
Okay, so on this chart, one we're looking at now.
Yeah. So you know it says what he means is the sequential count. So you see that last negative VR, and then you
Right.
see
So it's counting the VRs. That's essentially what you're doing. So you've got a positive, got a negative VR, and then you got 2. It's just telling you that was your second one. Okay. You had negative VR period, and that was your second one on the way down. VR on the positive side, you had one way back here, another one way over here. This is of no great use to me in terms of my trading, just a little counting mechanism in there. If you have the directional version of the VR platform here, it only doesn't show repetitive VRs. It only shows the primary one that triggered the move. But I like to see all of them, and that's why I use this sequential version. But the two it's just a counting mechanism, and I guess you could say in a way it reinforces the negative, particularly when you look at this nice downtrend that you saw in the stock here, in the February to early March time frames. You had another one and the second one giving you an extra sense of confidence. But I don't stay with the trades that long. I mean, honestly, this is great, if you're managing money and you want to get a sense of direction for the stock. If I'm short this thing, I'm usually out in 2 or 3 days on a trade. That's sort of my own trading style, and I have to blame my floor trading background from decades ago, where the guys that I never really tell the story too often, but essentially I was trained to go flat at every night, because all the floor traders would come with no positions. They would trade, make their money during the day, and then go up to the clearing firm and pick up their check at the end of each day and start the day fresh. So I'm not saying you should do that, but their attitude was, this is a way of making a living. This is a paycheck for you. Don't worry, we're not investors, we're traders. And obviously I don't do that. I usually hang around a little bit longer, but I sort of have that mentality, is take the money and run. Unless, if you're really working this stuff and you're trading day to day, why not take the profits? So that's sort of been my, you can argue, well, if you just held that position, you'd have made more money, which may be true. But, are we doing this to, make money each day? Or are we investors? Or maybe we do both. Maybe you trade some of it and keep a core position. So that's sort of my strategy. I tend to hit and run more, and the VRs are great for that because they usually give you a day or two move in direction of the signal. Going way back here, I'm looking, and I don't look at Delta, so this is sort of the first time for me. But there's a nice little VR here, and you get a nice 2-3 day rally. Then you get a negative VR, you get a nice 2-3 day decline. Then you get a positive VR, and it goes up for 2 or 3 or 4 days. So that tends to be my perspective using the volume. This gives me a momentum indicator for trading purposes.
Let's see. Lowell wants to know if you could look at KR. And before you go to the power console, I want to show you a trick. Just don't go to the power console. Instead, click. Oh, never mind. Just go to the power console. I was going to show you how to just switch to a charts real quick. KR.
Put it under instrument, of course, right? Yeah.
Correct. Yeah.
What do I keep doing? Try to move this thing out of the way, and I keep getting put in. All right. So, Kroger. Well, this is a couple days ago because it's not up to date, but the most recent signal is a negative VR. I don't know what it did. Well, no, this is live. I'm sorry. So you're short. Yeah, this is today. I'm sorry. For some reason, I'm thinking I'm looking at my PowerPoint. Yeah. So you're short now. You got a negative VR today. Your stop is the high from yesterday. Okay. So you're short, and that would be the most recent signal. Of course, that nice signal here, as you know, about 10 days ago, negative VR, and it dropped for 4 or 5 days. And then we had a positive VR came in and it rallied for 4 or 5 days. And now we got a negative VR coming in. So I would say, and you got I'm looking down here at the bottom of the chart, you got a negative stochastic turning down. So I'd be short here, keep a stop at yesterday's high. And it seems to follow through for a couple of days. So if you're trading, I would look to take a, profit tomorrow, the day after. And you've got this little red line here, which is a 20-day moving average. Maybe it'll find some support there, and that might be your short-term trading target, because it appears the overall trend is up. I mean, just inching its way higher with the market. So I don't think I would hang around looking for a huge break in the stock. I would just look at it as a short-term trade.
I'm interested to see what you make of the SPY right now, the spider.
Well, today was a positive VR in the spider, SPY, and did not get, I think we got in the Dow right off the bottom and here. I think on the other, I can pull up the Dow. I think the Dow gave you a nice little buy rub circling on the recent move, but the SPY for some reason didn't do it. But on the way down, you had negative VR here just before the big crash sell-off in early April, so there was a little warning here, and we have a VR here. So I don't know if I'd be chasing the VR here, and I'm backtracking here a little bit because I'm looking at the stochastic, which is turning down a little bit, and I generally like to see the stochastic move with it. And here we are. We've already made a big move here in the spider, as you know, since the lows, and we got to like a new recovery high today, and we're getting a VR sort of at the top. So it could still go, but you know, just as my trader sense is, you've got a stochastic coming down, you're getting one right at the top after a big move. I don't know whether I would take this trade, and if they're up big tomorrow, then I got to eat my words. But just my intuition says I don't know if I'd be chasing a positive VR here after a big move. I'd like to see a pullback, you know, like in the middle of the chart here, we get a pullback for 2 or 3 days, then a positive VR. That would give me a little bit more confidence about getting long, not on the top of a short-term move. And it looks like any indicator, you're going to get a bad signal somewhere. You know, and this is not nothing 100%. You know, it works. I would say 80% of the time you get a good follow-through after a volume shift, but you know, and I could be wrong on my call here. I don't think I'd be chasing this signal, but it is a positive VR based on the pure calculation today. So we'll see what happens.
I agree with your hesitancy. I mean, you're almost about to push into the 200 there too.
Right.
So,
and once we cross and stay above the 200, I guess all the long-term players are going to really get excited, you know. So
let's see. This one isn't really. We can look at the chart. GLD. I want to get your as being a gold. Somebody famous is making gold timing predictions. Do you have any thoughts on gold?
Yeah, I'm a little bearish here because we got some negative VRs, and it's got made such a big move, and everybody is you know, super, you know, bullish on it. But I'm not selling my long-term positions. What I did was I hedged. There's 2 inverse ETFs. I don't know if we can pull them up that I have in the newsletter, ZSL and GLL, and those are the ones that I was playing. So if I can pull up GLL here, that's the inverse ETF for gold. Got a positive VR here. And this is for the inverse ETF, saying that gold was going to go down, which it did a little bit. So this is starting to rally, and you're getting some positive VRs here in the inverse ETF. So that's sort of telling you that gold may be hitting a little trading top here, which is sort of my gut feeling looking at the charts and all the bullish sentiment. But yeah, it's a little trading bearish on gold here based on the extensive move, the fact that we're seeing some action in the inverse index. But in terms of the big picture, you know, if you go back to your GLD, I mean, it's obviously no big downtrend. I'm just giving you a trading comment. So what I did was in the newsletter, we bought GLL and ZSL, which is the inverse for silver. It kept our other positions, and we just used them as a short-term like hedge or, you know, trading vehicle. So if it dropped a little bit, we could trade that and make a little bit of money on the short side while still keeping our, you know, long positions. But you know, you gotta, you know, I'll put it back up here. I mean, I also sometimes I look at SGOL. I don't know if you have to put up a .o for that or not. Do you think so, Jeff? SGOL.
I'm going to guess.
Your guess is better than mine. Okay.
Not in this case. Instead of going to the power console, just start typing SGOL. Don't go there.
Oh, I'm sorry.
No, it's okay. Go ahead and X out of there. I want to show you how to look up symbols on the fly. Because I think this is something that I didn't. Go ahead and X out of the power console. Just click on the X right there.
Up here?
This is something that took me yeah. Close it out. Now I just want you to type SGOL. Just type SGOL. Don't click on anything first, just type it.
Type it on the main screen?
Yeah.
I don't know where am I supposed to type it.
There you go. Right there. SG. It just pops up. SGOL.
There we go.
.k. There you go. And see, that's one thing that took me a while to learn is you can just type a symbol and hit enter, and it'll pull up the chart. You don't necessarily have to go into the power console. And when I learned that, it changed my Metastock life. So just go ahead and click on the top one.
You just changed mine today. I didn't know anything about this. Okay, so SGOL, click on this SGOL MX.
No, .k, the top one.
Oh, .k, okay.
Hit enter or select instrument. And there you go.
Okay, so this is the one I look at SGOL as much or as more than GLD. And you can see here in the last, this is a daily chart in the last week or so, we've got 3 negative VRs in it. So this is sort of worrying me here a little bit. And of course, we did see a little negative VR about 2 weeks ago, and you had a nice little sell off there. So yeah, it's acting a little toppy, but it's holding the 20-day moving average. And you know, obviously this is overall an uptrend. So I don't want to make too much of the bear case. It just was enough that got me to put on a hedge. So and I did see some of these negatives work out, as you can see if you look at the charts. And there's some nice follow through after a couple of negative signals. And the stochastic looks like it turned down here a little bit in the bottom of the chart, a little down blip there. Yeah, I mean, you know, after a big move, everybody's looking at 3,500, 4,000, all kinds of numbers. And you and I have been doing this for 14 years. I mean, we were lucky when it crossed over 1,000, right? Remember those days?
I do remember that.
So here we are here, and we know what volatility is. In other words, why couldn't gold, which got to 3,300, go back to 2,800 and then go to 3,800 later? I mean, this is all the volatility of gold in recent decades in terms of how it could move. Maybe the current environment's different now, and with the politics and the Mideast and all the stuff going on with the BRICS nations and China, you know, maybe this is a time where we won't have that kind of correction. But always got to have your foot in the door somewhere just in case. But there is a lot of bullish sentiment now. We've had a big move, so I'm not selling my coins, Jeff. But you know, as a trader, I hedged with the GLL.
I got you. Lois says, thanks for looking at KR. And I think we have time for let's squeeze in another symbol if you don't mind.
I'm all yours. Don't worry about that. Go ahead. Which one you want?
GEV.
Which one?
GEV.
GEV is in Victor?
Yeah, GEV, and just that's a symbol. Yeah, it's a new GE. GE did a split. I can't remember which one this is, but I think it's GE.
Well, this is super positive short term. I mean, you got a positive VR, and it's been just rallying here in the last couple of weeks. Prior to that, you had a little negative, a little trades to the downside, but nice correlation on the positive VR. So, you know, it's already made a nice little move. It's got from 250 to over 400. So, of course, it's down from the big high, which looks like 447, and then it dropped all the way down to 250. So, yeah, on a trading basis, you had a nice recent couple signals here. It looks like there's a little gap here about 6-7 days ago to the upside. The stochastic looks like it's starting to turn down a little bit. If I was long it, I'd probably take a trade in it, you know, because it's already moved up after a few days after a positive VR. But
Mark, did you say you had a webinar that starts at the top of the hour? Or is it a little bit?
I have a interview, my weekly podcast, and he knows that I'm doing this. So I said I might be a few minutes late, but we know if you want to cut it short, that's fine. Now I can do
Oh,
another
no.
5 minutes.
I just what I'd like you to do. I think that's I didn't want to make you late for something. That's what I was worried about. Do you want to spend just a couple of minutes talking about your newsletters and how people can find them if they're interested?
Well, thank you very much. Sure, go to vrtrader.com, and I don't know if I can pull up the screen share for that. But anyway, it's vrtrader.com, and we have a promo for our newsletters. I don't have to find the visual here to pull it back up the screen where the
let's see, was it the PowerPoint?
Yeah, the PowerPoint somewhere in here.
That
one? It might be there. There we go.
Yeah, that's it. Yeah.
Yeah, so the very top of the PowerPoint, I got the all the newsletters. There you go. And you know, basically, just want to shift this over. Every time I shift it over, I keep looking at myself. Anyway, 50 half off is a promo code, and you get half off any of our at our newsletters. I would encourage you to take a look at the blockchain letter, because I think this is really the hot area right now. And if I had to recommend one letter to you guys, it would be the platinum letter, which I try to cover all the markets in the platinum letter. And there's monthly, quarterly, and annual subscriptions. And like I say, you can get half off using that promo code half off. But as you see, there's also my book. Can't always find it here, but the Trader's Book of Volume, you can get that on Amazon. It's also in Chinese, by the way. I can't read it, but it's in Chinese. But McGraw-Hill put a Chinese version out, and this will give you some real insights into the kind of stuff that I look at in terms of volume indicators. And it was a labor of love. In fact, I have to give my wife Laura a lot of credit, who you know very well, who helped me write she helped me write the book. I mean, it was a tremendous effort, so over nearly 500 pages. And I also had a former assistant, Wayne Corbett. Unfortunately, he had passed away a few years ago, but he helped me edit the book. And it was a really a big project. Any of you who have written books out there, I think you know what's involved. It's a time-consuming, serious endeavor. And I am working on another book now, Trading Your Way to Profits Using the Volume Reversal Indicator, which goes into a little bit more detail on focusing strictly on my indicator versus just the comprehensive look that you have in the Trader's Book of Volume of all indicators. So, you've got to take a look at that if you want to learn more about volume in general, and of course my indicator. We have a whole section just on volume reversal there. But these are the newsletters, and thank you, Jeff, for having me today. Thank you for allowing me to show it.
Of course, yeah. Thanks for being here, Mark. Always great to have you. I will see you again soon.
Sooner than better. Later, I hope. Okay, maybe I got to drive up to Salt Lake City and have.
Oh, you're always welcome. We'll take you. We know some great lunch places, so we'll see you here.
Yeah, last time I was up there, we did that intro video that's on the Metastock description of the add-on indicators. So that was the last time I was up there. So be fun. I'm looking forward to it. I'll try to make a trip up there soon. Thank you. Sure.
We'll see you on Monday then.
Okay. See you Monday morning. Yeah. Take care. Thank you, Jeff.
Thanks, Mark. See you.
Bye-bye.
All right. I do want to talk a little bit about the VR toolkit, of course. And let's go ahead and do this. I do want to say thank you, of course, for Mark for being here, all that kind of good stuff. The VR toolkit is an add-on we've had for a while. You've got the 3 different versions, the 2-day, the directional, the sequential. Of course, it has scanning. You can scan and find all the setups that you want. It does a really, really good job, and was put together by one of the top volume traders out there. So normally this add-on's $99 a month is all. If you buy a month, you can get the 2nd and 3rd month for free, so it's about $33 a month. You can get that at 800-882-3040. You can go to metastock.com/saleschat, or it is available if you go to metastock.com/conf promo. I'll just put that in the chat as well. All of the specials we had today. As we wrap up today, I want to remind you we have another great day tomorrow. And I was kind of looking at kind of the schedule for tomorrow. And I got a little bit of a shorter day tomorrow just because it's Friday. We've got Buff Dormeyer, a Dow Award winner, a CMT coming to start us off in the morning. Oscar Carboni, we love Oscar. He always has such an interesting take on kind of the markets, and does a very good job. I'll be talking about candlestick patterns and Steve Bigelow's candlestick patterns. We'll have Ken Calhoun come in from Day Trading University, and Kevin Nelson, who's going to talk about trading pressures and the volume weighted average price. So all that's going to happen tomorrow. We have another really, really good day. I want to thank all of the presenters that have been here, all of you guys for being here. I want to say thank you to our sponsors, the CMT Association, Stocks and Commodities Magazine. If you haven't yet, join the Traders Forum at thetradersforum.com. You can learn about the markets. You can learn about technical analysis, candle patterns. It's a community of traders. We're growing it. We've got almost 1,000 members. Help us get to 1,000. You can join it for free. thetradersforum.com. And of course, we are Metastock. All of the stuff we've talked about today, the specials, the offers, Metastock. Metastock has been rated #1 in its price category for 32 years in a row. I've talked about scanning. We've talked about testing. We've talked about forecasting. A lot of people need tools that are going to help them find better trades and identify the best trading strategies and all that kind of stuff. Metastock's been a tool that for 32 years in a row has been rated the best software to help you do that. And it starts at $75 a month. For the delayed access, it allows you to look at the markets during the day, see what's going on. Doesn't include all the Reuters access to news, but we have that available as well. We can get you an extended trial on that. You can get set up for any of the add-ons that you're interested in. Metastock.com/comp promo. You can call us at 800-882-3040, and you can go to metastock.com/sales chat. I want to thank you for being here. We'll start again at 10 a.m. tomorrow, and I look forward to seeing you again tomorrow. Thanks for being here, guys.